in 5 months. And in key earnings to track today, Hero MotoCorp is expected to report a strong quarter led by recovery in rural sales. Apollo Hospitals' margins and revenue are likely to improve, while Hindalco's first quarter numbers may take a hit due to flooding at its mines. Good morning on this Tuesday morning. You're watching Power Breakfast on CNBC TV18 in the Mumbai News Centre. I am Hormuz Fatakia. Let's first take a look at how the Asian markets have started off. And it's a largely positive start across the Asia Pacific. The Japanese markets have returned after a holiday on Monday, and they are the ones that are leading the gains this morning. The Nikkei is up over 2% as we speak, and so is the Hang Seng is up around 0.6%. The Taiwanese index also trading with gains of 0.25%, and Taiwanese index was an outperformer in yesterday's session as well. Now, when it comes to the other indices, the Nikkei is now up over 2.5%. Now it has extended its gains. The South Korean indices are flat, as is the Shanghai Composite. Both of them are currently trading flat. So it's a largely positive start across the Asia Pacific markets, led by the Japanese indices, who have returned after a holiday. Pull up the GIFT Nifty as well, and that will tell you how the Indian markets are likely to start off. Likely to start off on a cautious note. It's been a choppy last few trading sessions for our own markets. The implied open suggesting a 38-point downtick as we speak. Now for the Nifty, we see how those rates change closer to market open, but right now it is expected to be a cautious start for the Indian markets. But moving across to the Wall Street now, where the US markets ended Monday's trading session on a mixed note. The Dow Jones closed 140 points lower, while the S&P 500 and the Nasdaq managed to eke out relatively small gains. Now all eyes will be on key inflation data, the producer price index, which will be released later this evening, and the CPI data, which is scheduled to be released tomorrow. Now these reports will be a pivotal a moment for the US economy and to show their health going forward as well. CNBC Steve Kovac gets us a wrap of all the action on Wall Street.
U.S. markets ended the day mixed to begin the trading week as traders struggled to build on last week's comeback. The Dow was down 141 points, the S&P 500 was basically flat, and the Nasdaq was up 35 points. A New York Federal Reserve report shows inflation outlook is at a new low. A monthly survey from the Fed released today showed consumers are growing more confident that inflation will start to ease in the coming years. The results come with investors remaining on edge about the state of inflation, and as many on Wall Street wonder whether the Federal Reserve will start to reduce interest rates as soon as next month. And shares of JetBlue sinking 20% today after the airline said it plans to sell $400 million worth of 5-year convertible notes as it tries to raise more capital. That caused a couple of ratings firms to downgrade the airline on concerns over its financial outlook. That's what's happening here in the U.S. Back to you, Mumbai.
Now, staying with the US markets, let us also listen in to Savita Subramanian of BofA Securities as she weighs in on whether the market is too ahead on the Fed cutting interest rates going forward.
And admittedly, our economists have been calling for a deceleration, and we're seeing that now. I think the idea that we're going to see a real hard landing unless the Fed cuts excessively is not necessarily the story. So, I would argue that what we're seeing is a reasonably, healthy economy. Is slowing. The Fed has controlled inflation. We are now at a point where the Fed can begin to cut rates. And that's actually good news for stocks.
That's all we have on the global market action. But how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like, the stocks that are likely to be in the news this morning, and of course cues from the F&O space. First up, Vamakshi is joining in to get us the cues from the markets. But first up, we'll get into the stocks that we need to watch out for today. Vivek is joining in. Vivek, good morning. What's on your list?
Good morning, Hormaz. Quite a few stocks to keep on our radar, some on the back of news flow, a lot of earnings flow that's come in post-market hours yesterday. First stock on the radar, JSW Steel. The company is looking to acquire almost a 2/3 majority in an Australian company called MRES NSW. The company will be paying close to $120 million for this particular stake sale. And now, apart from that, the company will also be investing another $50 million or so. The other stock on the radar is Marico. Some positive news flow coming in over there, some relief. The company says that manufacturing operations in Bangladesh have now resumed at normal scale. Remember, there was some disruptions post the protest that the Bangladesh country saw. The next stock on the radar is NMDC. This is on the back of strong set of numbers. Net profit is coming in at close to 1,963. Our poll indicated a number closer to 1,700 crore Revenues are also coming in at close to 5,400 versus our pool of close to 5,500 crore. The other stock on the radar on the back of results again will be Vodafone Idea. Vodafone Idea net loss has actually narrowed a little bit. The net loss has come in at close to 6,430 crore. The main number, which is the ARPU number, has stayed flat on a sequential basis, coming in at 146 rupees. Campus Activewear revenues down 4%, profitability down almost 20%. Expect some red over there. Power Mech projects, again, revenues higher by 16.5%, profitability higher by 21%. Good set of numbers from Power Mech. And Hindustan Copper, it's strong growth when you're comparing it on a year-on-year basis. Revenues higher by 33%, profitability coming in at 113 crore versus just around 47 crore, again, on a year-on-year basis.
Plenty of earnings reactions to watch out for, Vivek. Thanks a lot for that. Over to Vamakshi now, who is joining in with all the market cues that you need to watch out for. Vamakshi, good morning.
Well, good morning, Hormaz. It was a volatile trading session yesterday. Nifty started the week on a cautious note due to fresh allegations made by the Hindenburg report. In the first hour, however, the index surpassed last week's high. But in the last hour of trade, it slipped lower and closed slightly below opening levels. And resultantly, Nifty underperformed the broader indices. It was nearly flat, but with a negative bias. In fact, top sectoral losers include Nifty Media, which was largely led by the decline that we saw in Sun TV after its numbers. PSU Bank as well as FMCG Index were both some of the losers in the trading session yesterday. But on the flip side, Nifty Realty was the top sectoral gainer. It gained almost 1.32%, followed by Nifty Metal. Railway stocks too were in focus after the cabinet nod came in for 8 new railway projects worth almost 24,657 crores. Resultantly, we saw gains of as much as 11% on RVNL. IRCON and IRFC too were up over 2%. As far as the US markets are concerned, they snapped their 3-day losing streak. Dow Jones was up 0.76%, S&P 500 and Nasdaq gained somewhere around 1% each. As far as the cues today is concerned, global cues, watch out for US PPI. We will be watching out for Apollo Hospitals, Hero MotoCorp and Hindalco. These companies will be reporting their earnings. FirstCry and Unicommerce are also expected to list today, so watch out for those counters as well. Asian markets today are trading with a positive bias. Japanese stocks led the gains in Asia as Nikkei has climbed more than 2%. In fact, the GIFT Nifty too is indicating a rather muted start for the trading session today.
Muted start indeed, Vamakshi. Thanks a lot for that update. And over to Sudarshan now, who joins in with cues from the FNO space. Sudarshan, good morning. We're still not managing to cross that 24,350 mark. What's the setup looking like on the FNO side?
Good morning, Hormaz. That's correct. So on Monday, what did we see? So market managed to recover from day's low, and at the end, it was a close near flat line. For today also, GIFT Nifty is indicating a start near flat line. But cues from institutional side are not looking that great. If you talk about the cash market, FI sold shares of almost 4,700 crore, but it was largely offset by DIs, which bought shares of almost 4,500 crore. In the future side also, we saw FI selling shares of almost 420 crore, and at the same time have reduced long exposure by 5,100 contracts and build onto short positions by more than 2,100. And now the long exposure has reduced to 51% with total net long contracts of almost more than 15,000. On the options front, we saw activities on 24,400 call with addition of more than 10.50 lakh shares and premium is 82.65. In 24,500 call, we saw addition of 15 lakh shares with premium 46. And on the put side, 24,300 strikes, so addition of almost 13 lakh shares with premium 105. And 24,200 put, so addition of almost 9 lakh shares with premium at 69. So now resistance for Nifty is at 24,500 or 24,540, which is 20-day moving average, and support is at 24,160. In the stocks, we still have 15 stocks in the band. New entities Sun TV and GNFC is out of band.
15 stocks in the FNO band. We'll keep an eye out for all of them. Sudarshan, thanks a lot for that. Time for a short break here on Power Breakfast. Up next, inflation in the month of July has cooled to its lowest level in nearly 5 years. We'll get you more on that when we return. Stay tuned, back on the other side.
And therefore raising some serious questions on her credibility. While SEBI chairperson has refuted claims by pointing to disclosure and recusal norms she has diligently followed. Now, Hindenburg alleges Madhavi and her husband Dhaval had investments in two funds which they claim have been used by Adani Group for siphoning off funds. Now, they highlight the involvement of 361 in managing these funds, and report suggests that the first investment in 2015, while Madhavi joined SEBI in 2017. Now, by establishing these linkages, Hindenburg claims that SEBI has been reluctant to probe Adani because of chairperson's involvement. Now, SEBI chief, in her strong rebuttal, has denied these claims and explained that investments in fund was in 2015 as private citizens, and states emphatically that at no point did the fund invest in Adani Group's companies. Now, in another point of conflict of interest, the report claims that Butch had interest in offshore Singapore consulting firm Agora Partners and continued with her ownership of Agora Partners despite being SEBI's whole-time member. Now, Madhavi said that all disclosures and recusal norms of SEBI were followed, refuting the charges of the conflict. Not just Singapore entity, but even the Indian entity Agora Advisory India, and Hindenburg claims that Butch has 99% stake in the Indian consulting firm, which, remember, is generating nearly 2 crores from advisory services in FY22, is what the report claims. Now, SEBI chief clarified by saying that the two consulting companies became immediately dormant on her appointment with SEBI, and that her shareholding in them were explicitly part of her disclosures to SEBI. Now, apart from linkages to Adani Group, the report also claims that Madhavi had conflict of interest with global private equity firm Blackstone, and Hindenburg's report says that Madhavi Butch used her position to benefit Blackstone in REITs in India, and that her husband Dhaval Butch is acting as an advisor to Blackstone despite no experience in funds or capital markets. Here again, SEBI chief clearly refutes claims by disclosing that Blackstone Group was immediately added to Madhavi's recusal list maintained with SEBI when Dhaval was appointed in this position. Now, in two statements,
back with us here on Power Breakfast. Now, India's consumer price index for the month of July cooled to 3.54%. Now, this is the sharpest fall in nearly 5 years, and this was driven by a drop in vegetable prices. However, the industrial output growth slowed to 4.2% in the month of June, which is the slowest pace of growth in the last 5 months. Now, Lata Venkatesh is joining us to take us through the fine print. Lata, tell us how are the numbers?
Yes, that's right. It's a bit of a mixed picture that is coming on the macros, but the more important number is CPI, because monetary policy is based on the CPI coming down to 4%. 3.54, hurrah! Does it mean that the MPC will move towards a rate cut? No, because the Reserve Bank had guided that we are going to see a fall in inflation in July, August, September because of the base. Year ago, the July inflation was 7.44, and therefore the current number was always expected to come below 4. It is transitory. It will move up towards the 4.7 mark as we come to the third quarter as per RBI forecast. But within this, we need to be happy that the CPI number is below market expectation. Our own poll was 3.64, as you know. And within that, the food inflation, which we thought, which our poll said would be 5.5, has come in at 5.4. That's also a minor positive. Going ahead, the monsoons have been better than their start. In fact, they are now running at 107% long-term average, as the RBI said. So that would mean that food inflation, the worst, is clearly behind us. Vegetables inflation was the sore point. It was as high as 29% last month in June. Now it's a much more manageable 6.8% year-on-year rise, which means that the worst of the tomatoes and potatoes inflation is also behind us. Pulses is still a sore point, 14% higher YOY, but still better than 16% higher YOY in the month of June. So prices are coming off. The one set of prices that have gone up, or at least the year-on-year number looks higher, is core inflation, up at 3.4% compared to 3.1 in June. That could be because telecom tariffs are getting included. We saw the recent hikes by all the three major telecom companies in the country. And the core inflation will also rise because the base effect is eroding. Core inflation was very high in the first half of last calendar year in 2023. It was ranging from 6 to 5%. But as you get further into 2023, it falls to 4%, and therefore the base will make the core inflation higher. There are not too many fears about core inflation except the base effect, simply because the global force factors, both China and US, seem to be disinflationary at this point in time. Very quickly on industrial output, the number is disappointing at 4.2%. Our own poll was expecting above 5%, but this is not a number that is used for policy. It's an input, one input into GDP, so not to worry too much. The worrying number in the manufacturing, in the IIP number is manufacturing, which has come in at only 2.6. Within manufacturing, consumer non-durables has come in at minus 1.4. So clearly the consumption wheel is not kicking, and the capex wheel is slowing. It is only 2.4% from 2.9% in the month of May. So it's nowhere near the double digits that it was 2 years ago. It could be a passing phase because the government didn't spend much during election time, but the output side bears watching. Mixed picture from macros, therefore, good news on inflation. Growth, well, a little bit below expectation.
Lata, thanks a lot for that. A mixed picture indeed on the macro front. But over to some news on the taxation front. Now, India's direct tax collections have surged almost 24%, driven by strong personal tax and securities transaction tax performance. Now, according to current data published by the government, as of the 11th of August, gross direct tax collections increased by 24% compared to the same period last year, reaching 8.13 lakh crore rupees. The securities transaction tax grew 111%, while net collections increased by 22.5%. Now, the MSCI has announced changes as part of its August review, with changes set to be made on the 30th of August. Vivek is here to tell us more. Vivek, tell us which stocks were part of the list now.
Good morning. It's an all-awaited list that we watch out for every quarter. Now, given the fact that a lot of these expectations are already built in by various quant analysts, it's important to note that a lot of the stocks have priced in the anticipation that the fact that they will get into the MSCI Global Standard Index. The important part, number one, that we need to keep a track on, India's weightage as far as the emerging market basket is concerned rises to 19.8%, second next only to China from 19.4% in the May review. A little over $2.5 billion of inflows is what India can expect to see on August 30th. The MSCI Standard Index will see 7 additions and 1 deletion, and the MSCI Small Cap Index will see 27 additions and 6 deletions. The MSCI Standard Index is the one that sees the maximum amount of impact. So which are the 7 additions? HDFC Life, see inflows of close to $218 million there. Prestige Estates, $160 million. Dixon Tech, $257 million. OFSS, Oil India, Vodafone Idea and RVNL, these are the stocks that will come into the MSCI Standard Index. On the other hand, Bandhan Bank will see a deletion. Now, very important stock to track on the back of this MSCI index was HDFC Bank. Ever since the company updated its shareholding pattern to the exchanges, there was anticipation that there will be a weight increase in MSCI. Along expected lines, MSCI has gone ahead and increased the weight of HDFC Bank. There was a hope that this would be done in one tranche itself, but what MSCI has done is that they have gone ahead and have decided to implement the weight increase in HDFC Bank in the standard index in 2 separate tranches. So in this particular tranche, expect to see inflows of close to $1.4 billion. Apart from that, they have also lifted the embargo on treatment of Adani stocks from this particular review itself.
So keep an eye out on all of these names, HDFC Bank, RVNL and Vodafone Idea in particular. Vivek, thanks a lot for that. Time for a short break. Up next, we get you all the updates on the Kolkata rape and murder case. Stay tuned. We'll be right back.
Buch has emphasized repeatedly that all disclosures and recusal norms of SEBI were diligently followed by her, and SEBI chief stated that instead of replying to show cause notice, Hindenburg has decided to attempt a character assassination of SEBI chairperson.
There is clearly discomfort to even an optimist like me in certain pockets. right? So if you are investing in mutual fund, you do your homework, invest in good mutual funds with a track record, no issues at all. But if you are investing in individual companies, you should definitely be watchful of what you are paying, what you are assuming, and then what is it that the company will deliver, then you make money. We spoke about the liquor sector, which looks like a structural long-term story. So I think there is enough, and someone like me, I am always open to an idea, but I am also not hesitating in this kind of market to sell companies.
Well, you've mentioned trigger links, and that's quite an important part of migraines, a trigger which results in a migraine. Can you just tell us what is the most common trigger that one comes across when it is when one gets a probable migraine?
The triggers are generally divided across three different groups. One is the physiological within the body triggers. Two is from the environment and lifestyle. And there are some triggers which are beyond control. The commonest trigger that we see in our part of the world is related to the weather conditions, the type of temperatures we have, the heat, humidity in most of the cities for almost 6 to 8 months of the year. And then again, you have lifestyle related triggers, which are the habit of not having breakfast on a regular basis amongst most Indians, and school children having to leave so early for school, they really rush with just a glass of milk. They don't have a proper breakfast. Skipping meals, the fasting habits across different religions in the Indian subcontinent is responsible for throwing up a lot more migraines. And stress, where stress leads to lack of sleep, poor quality of sleep, and now in modern day times, you find increased screen exposure. Computers have become an essential part of education, laptops, and the mobile phone. Mobiles are small screens, they induce a lot of stress and strain, which can be a trigger for migraine. And apart from this, certain changes in the
Welcome back. Moving on to the big national story now. The gruesome rape and murder of a 31-year-old trainee doctor at Kolkata's RG Kar Medical College and Hospital has triggered a nationwide protest. Resident doctors across several cities, including Kolkata, announced an indefinite strike and halted all services that are not urgent or medically necessary. Now, in Delhi, the doctors are demanding an impartial investigation and adequate security for medical staff. The Maharashtra State Association of Resident Doctors has said that the resident doctors across the state would halt work except for emergency services from today, in solidarity with residents of the RG Kar Medical College. Now, after meeting family members of the victim, West Bengal Chief Minister Mamata Banerjee has given the police a 7-day deadline to make progress in the case, failing which she would hand over the investigation to the CBI. And with that, is a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call takes the action forward.
the fluctuating levels of estrogen which happen during the menstrual cycle of a woman leads to, is a trigger for more migraines in women that we encounter. So these are some of the triggers. And then you have foods which are different from the rest of the world. It is well publicized, well published all over that chocolates, cheese, and red wine are the commonest cause of trigger. But when you come to see it in practice, these are not the common items which are consumed by most Indians. Yes, of course, they are correct triggers: aging cheese, chocolates, and red wine. But we have different food items which have the fermented food items like idli, dosa, dhokla. These are items which can also give rise to migraine attacks. And then rarely you come across different triggers. Triggers are different across individuals who suffer from migraine. So they are not the same for everyone. And one has to be alert that triggers are not seen always and not easy to identify. In about 70 to 80% of patients with migraine, you can identify the triggers, but you have to remember that there are 15 to 20% of patients in whom triggers may not be easy to identify.
All eyes on Hindus in Bangladesh. What is happening to the minorities there? How severe is the situation? Can the new government heal old and new wounds? On the whole story, let's try to understand this development better. Since Bangladesh's former Prime Minister Sheikh Hasina abruptly resigned and fled the country due to massive protests, according to reports, there have been multiple instances of attacks on minorities, especially Hindus. Reports indicate attacks on Hindu households, temples and businesses. According to two Hindu organizations, minority communities faced at least 205 incidents of attacks in 52 districts across Bangladesh since the fall of the Sheikh Hasina-led government on August 5. The new interim government, led by Nobel Peace Laureate Muhammad Yunus, has assured that it's addressing the violence directed at Hindus and other religious minorities. The government said, and I quote, "The attacks on religious minorities in some places have been noted with grave concern. The cabinet will immediately sit with representative bodies and concerned groups to find ways to resolve such heinous attacks." The interim leader, Muhammad Yunus, has urged youth to protect all Hindu, Christian and Buddhist families from harm. Now, Hindus represent about 8%.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. It's Tuesday morning in this holiday shortened week. Yesterday, of course, was all over the place and finally a flat close. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, guys. Morning. I think that's a very important clue. It's a holiday shortened week. I'm going to hold on to that as we start.
Well, that's right, but plenty of action today. You have the MSCI rejig. You have crucial economic data coming out of the United States later this evening. So we have got our hands full. Prashant, go for it.
And we have very good inflation data.
Absolutely.
Which I think is important. Very important because, you know, we are tied at the hip, of course, to what the global central bank cycle is, which is what the Fed really initiates. But, you know, you need to have comfort here on inflation as well. And that is sort of cooled off. And we'll talk more about that. But let's begin where we left off yesterday. So we yesterday had a sort of swinging kind of a day, right? I mean, the market sold off right at the word go. There was a sharp recovery, almost 250, 275 point recovery from the day's low. And then there was another sell-off which took us back to flat zone. So absolutely nothing by close at about 24,347 on your screen. But I must highlight that there were lots of at least 10, 12, 15 big mid-cap moves, both up and down. You know, I'm talking about 7, 10, 15% moves up and down based on specific news flow, earnings and otherwise. Actually, it was mostly earnings, some from last week, continuing action, and of course, some which came through yesterday. And we'll discuss some of these stocks a little later. So it was a really vibrant market. It was not one way up, one way down at all. Overnight, it's been flat close. I mean, you know, zero change on S&P, so that flat. The Dow was down about a third. Nasdaq was down about a quarter. Nasdaq was up a 0.25%. 3 out of 11 sectors ended in the green. Only 3, I should add. So it was actually pretty mixed out there. Nvidia was up 4%, and this AI-focused sort of stocks did a little better, but that could just be pullback because they're all on an average down about 18, 19% from their recent highs. There was a Fed survey which came through which showed increased consumer balance sheet stress. It also has a component which measures inflation expectations going forward, and that came off sharply. So, you know, the consumer is weakening a little bit, maybe at the margin, and you've got inflation expectations coming off. Not exactly the worst data. As I've been saying, markets very focused not on inflation anymore, but really on the health of the consumer and how fast that is deteriorating or not. Now, the 10-year lost about 3 basis points. Dollar index was down about 0.14. So these are not big changes, small changes. Oil had a big move. It shot up 3%, and this is on back of geopolitics. The Israeli military essentially announced that they are going to their highest state of alert. And there have been lots of news reports saying that how they're anticipating attacks from Hezbollah and other parties there. So geopolitics really up there and pushing oil prices to about 81.88. By the way, on I think WTI, we are already past the 100-day moving average. It's taken that out. So that is oil. Spot gold prices, I think, on the back of some of these geopolitical concerns, also went up about 1.5% or so, which then gets us to the environment for the market here. It's a little mixed still. Look at what's happening around you, around Asian markets. I think Japan, which was shut yesterday, is trading. It's up about 2% or so, maybe a little bit more. But other markets broadly are all kind of flattish. Nifty resistance. Basically, two levels which the market needs to take out. One is the 20-day moving average, which now, as of yesterday's close, stands at 24,536. And then you've got the 24,625 level, which is the 61.8% retracement of the decline, a level we put out yesterday as well. On the way down, supports come in. Basically, the two swing lows, 24,080 and 23,893, which is essentially the absolute kind of bottom. You're basically looking at a ranged market. On the downside, around 23,900. On the upside, about 24,600. That's essentially broadly the range you're looking at. Bank Nifty saw another positive daily close, and it's outperformed what the Nifty did, but without really adding too much to the overall index picture because everything else was kind of weakish. Resistance here is the 20-day exponential average, which is 51,292. And then the 40-day exponential comes in at about 51,032. And on the downside, these are support levels, which I put out yesterday as well, 50,153 and 49,659. The GIFT Nifty will come up on your screen, indicating the kind of start. I mean, I think almost yesterday, same time, you had a similar kind of a picture. 36-odd point lower start, flattish kind of day. Lots of pulls and push on both sides, which I think continues today as well. Really, it's about individual stocks and sectors, which we will get to in just a bit. For the index, as I said, kind of arranged in this broad zone. Surabhi.
Absolutely, Prashant. I guess we're starting with a bit of caution, but also some underlying optimism that, we're not looking at anything which is very negative in overnight cues. Just to the point on oil, so the rally, the geopolitical risk premium that kind of got built in, that took Brent up almost to 82. We're back at those levels. Remember when the whole global sell-off was happening, we were looking at Brent in the low 70s. So from that point onwards, there's been a very sharp recovery. The other mixed cue on oil, which is keeping a lid on further gains, is the fact that OPEC is not sounding very bullish on demand. In fact, yesterday, OPEC cut its own estimates in terms of oil demand by not too much, but about 135,000 barrels per day. So they're saying because of lack of pickup in the Chinese economy, they're not expecting demand to be as robust as when they had, first given out this projection for 2024 back in July of 2023. So that's on oil. Let's quickly move on to flows, and not much has changed here. FIs continue to be on the sell side. Yesterday's selling picture was around 4,680 crores. As usual, domestic institutions are lapping up that, exodus that's happening. So almost 4,500 crores of buying by domestic institutions. Just want to spend, a minute on the macro cues because they're really important. And again, they're mixed. So IIP was not that great yesterday. The IIP growth in June is at 4.2%. versus 6.2% month on month. So that's a bit of a dampener. The misses have really come in from manufacturing and electricity. Those are the two subsectors that have not fired up as well in June. But the big cheer is on inflation because for what it's worth, that headline number on inflation has fallen below RBI's 4% target for the first time in 5 years. 3.5%. That is what the headline consumer inflation number is reading. And it's a distance from the June number of 5%. However, before we start getting overexcited, economists will tell us that this is because of the high base effect. But again, I'm saying for what it's worth, it's a great headline. It's a positive headline. And food inflation, which the governor alluded to even in the last policy that just concluded, that's come off very sharply. Food inflation, vegetable inflation. So that's really good news. But of course, we have to see what happens once the favorable base wears off. In terms of post-market results, Vodafone Idea is going to be a talking point today for obvious reasons. The losses have narrowed a bit now from a loss of over 7,000 crores, is at least 6,000 plus. The ARPU hasn't moved up much, but it hasn't fallen, so ARPU is steady. I looked at IRFC, considering the market's, excitement around this stock. The numbers are very flat, so let's see if, if it manages to hold its own ground. Today's major results include Hero Moto, Hindalco, and Apollo Hospitals. That's on the results side. HDFC Bank is going to be in focus. We'll spend a lot of time talking about it because that MSCI weight increase is finally happening. More on that as we go along. But on a side note, I want to end with the tax collection numbers that are looking really healthy. Direct tax collection is looking very robust, 23%. But the number to note, look at the year-to-date collection on securities transaction tax, STT. That number has galloped over 110%. So, Nigel, guess who's having the last laugh? Government of India, really liking this.
All right. Well, let's get straight to trade action then. In today's trade, well, we have another weekly expiry that plays out. So you have the Nifty Financial Services Index. That'll play out the weekly expiry since it's a Tuesday. So that's one of the cues you need to track. Second up is going to be HDFC Bank. That's going to be the stock in focus. The MSCI rejig announcement, that fell short of expectations. So the stock could be a little bit subdued to start off with. But there are factors that will support it later on, which I'll get to in just a bit. And the third factor is once we are done with the trading session, we'll have to track the US economic data, which will be an important point as well. What happened in yesterday's trading session? On the Nifty Bank, there's about a short covering that we did see because the open interest out there was down by close to around 3%. Moving to the positioning then, how are the FIs as well as clients positioned? Well, they've not changed too much. So both of them continue to remain net long on the index futures, the FIs as well as the clients. And if you're looking at the FI positioning, it's almost split down the middle in terms of their long as well as the short positioning, almost at 50% apiece. Now, the problem is the Nifty is unable to sustain at higher levels. Yes, we're seeing the dips of the day get bought into, which is very encouraging. And I think that strategy will continue as well. But from higher levels, we are seeing some selling. Even yesterday, we came up close to around 120 points. And in the last few sessions, every time we go to that congestion zone, which should come up for you on the screen, of around the 24,350 to around 24,500, well, we do see some bit of selling. So this is the congestion zone as of now. If we get past this level, then you're looking at the 20 DMA. And if we get past that, well, then the bulls will feel much more in control. On the downside, I think till that 23,800, 24,000 mark gets held out, well, then, in fact, you still say that this upward trajectory does continue. So that's the line in the sand at around 23,800 because we have bounced from those levels as well. As I said earlier, the Nifty Financial Services Index will play out the weekly expiry, so that will be volatile in the second half of trade. Yesterday, it actually did quite well. HDFC Bank, that's going to be important. The MSCI outcome, well, it fell short of expectation. So that's a little bit disappointing on that front because now that entire rebalance will take place in two tranches, not in one that some part of the street was anticipating. The good news, though, is that there is a very low probability that the second tranche is at risk because it will require huge inflows to get past that FI threshold mark. So the second tranche, in all probability, happens, going by the data points that we have. The other clutch of stocks that I'll be looking at is the Adani Group stocks because of the MSCI comments on them. So that's why they've lifted the embargo on the treatment of Adani Group stocks. Yesterday, the stocks were a little bit subdued, but this is the positive news flow. And some of those that are part of a couple of indices are up for you on the screen. So keep an eye out on HDFC Bank. Starts off a little bit subdued. I think it gets support at lower levels. And Adani Group stocks as well. That's the other clutch of stocks that I'm looking at.
All right. Nigel, thanks very much for that. Well, let's bring in some global opinion. Hartmut Issel is Head of Equity and Credit Asia Pacific Chief Investment Officer at WMUBS. He's joining us right now. Hartmut, great to have you with us here. Thank you for your time. Appreciate it. I just want to start with something which we don't talk about very often at all, and I guess for good reason, because it's not really had a big impact on markets, at least not equity markets, which is geopolitics. There seems to be a bit of a, at the margin, risk of escalation, both Middle East and Russia, Ukraine as well. Oil's up 3%, gold is up 1.5%. Just your first thoughts as you look at the situation.
Yes, absolutely. I couldn't agree more. These tensions, they're not going away. And if you look a bit deeper, and you mentioned Ukraine war, for example, and so we've also seen instances of even all the way up to central bank asset freezing, only an isolated case, of course. But nonetheless, what we see as a conclusion for investors is that we like gold. And we like gold fundamentally, because you're seeing already the inflation coming off in the US enough for the Fed to really cut forcefully. And if the Fed cuts faster than inflation comes off, that's positive for gold, right? Because the competition from the rates is sort of diminishing. But yeah, we also see since almost 2 years now, the central banks, especially in emerging markets, are looking to diversify beyond the dollar assets. And naturally, gold is a choice that they will always look at. And also looks like they're not particularly sensitive even at which level they're going in, right? They want to do that diversification. So you have a couple of reasons beyond geopolitics. There's only one of them. So gold is really one of our preferred assets right now. And if I look into first half of next year, so the end of the first half, let's say, we have a $2,700 target, which means you can look at almost 10% upside. So yeah, the answer to that question is, as an investor, you'd certainly look at gold at this point.
Okay, so gold looks like an interesting asset class. Got that, Hartmut. Let's talk about the other risks. So geopolitics is one of them. The other risk, obviously, that the market is grappling with is whether the central banks can steer the global economy into a soft landing, particularly the US, right? There's been so much debate about how many cuts will be enough and the timing of those cuts. If you do it too quickly, too often, then the market will get scared. If you don't cut enough, then will you get that hard landing? So where are you on that debate, and what do you forecast ahead for the US market itself as these cuts start coming through?
Yes, I think as also discussed on the program already earlier, the US economy is starting to soften. And the question is, does the Fed engineer a soft landing? We think, yes, that's the case. But beyond that, I would also consider the following. So if you look at what potentially is the neutral rate for the Fed, right, roughly as an indication, maybe 2% inflation, 0.5% real. So you're talking about 2.5%. Well, multiple rate cuts away from that, until we're even neutral, let alone supportive, right? So what I would not underestimate for the U.S. market as well, that is the potential for the Fed, if they see, hey, things are slowing a bit beyond what we initially expected, they can cut faster. They're so far away from even neutral that I think can support the market. And long story short, also given that we see in the S&P already the first signs of evidence that the rally or the earnings growth, I should say, is broadening out beyond tech. So tech keeps, of course, good earnings growth, but other sectors are also starting to come back. So this is a picture where we think, all else told, with the rate cuts also that we expect, 5,900 is the target, a pretty decent upside for the US here until the end of the year.
All right, Hartmut, what about the Indian markets? We have been outperforming, we have been falling relatively less, and on the way up, we've been doing better. Earnings visibility as well as there out here with solid domestic flows. Your view at current valuations on the Indian markets?
Yes. However, I'd say very, very near term, very tactically. As you rightly suggest, India hasn't really participated, virtually not, in this correction. So then also, of course, because we believe there's going to be a counter reaction in stock markets, so you have more upside. So if India hadn't participated that much on the downside, it's also a bit difficult to see how it would outperform when some of the other markets recover. Another point I would also say is that last year was a really bumper year, right? Nifty at almost 20% earnings growth. So we're settling lower. As for this year, we have maybe 10, maybe slightly over 10%, something like that. It's still decent, right? But it's no longer 20%. So long story short, also tying in the valuations, as we all know, they're not particularly cheap at this point. Right? It could be that we're seeing a bit of a break, or at least a slower trajectory. So I'd say over maybe 6 months or so, perhaps expect something in line with earnings growth. So give and take maybe a 5 percentage points or so upside. But yeah, we have been a bit spoiled recently. Maybe the trajectory is a little bit flatter from here.
Yeah, I think that's the best way of putting it, right? We've been a bit spoiled, but let's see what this market can throw up. You're saying maybe another 5% from here. Good conversation, Hartmut. Thanks very much. You have a good rest of the day. Well, let's get you one more earnings call, equities call that also has to do with earnings, incidentally, the point that Hartmut was just making. Gautam Duggar of Motilal Oswal Financial Services expects earnings momentum to sustain, albeit the magnitude of growth is expected to moderate to 15% over FY24 to 26. He says the Nifty PE remains well within its 10-year average range and is expected to maintain this level going forward. They remain constructive on the market, and the preference is predominantly in favor of large caps, as valuations of mid and small cap indices are trading at a premium of 79% and 8% to Nifty 50, respectively. Their top large cap ideas are ICICI Bank, SBI, HUL, L&T, HCL Tech, M&M, Coal India, Titan, Hindalco, and Mankind Pharma. In the mid and small cap space, Gautam prefers Indian Hotels, Godrej Properties, Ashok Leyland, Persistent Systems, Kalyan Jewelers, KEI Industries, Metro Brands, PNB Housing, Cello World and Angel One.
All right, well, there's some money market views also coming in. Abhishek Goenka of India Forex and Asset Management says markets had gotten too aggressive in pricing Fed cuts post the US jobs report, and some of those expectations have been pared now. He says volatility has subsided and risk assets have recovered and US yields have bounced back. The dollar made a comeback against funding currencies like the yuan and yen. He adds rupee has been stable around 83.95 to the dollar and has not recovered, which implies that overvaluation stands corrected. However, he adds, with forex reserves now at an all-time high of $675 billion, he expects the central bank will be in a even better position to keep the volatility in check. He expects the rupee to trade between 83.4 to 84.4 over the medium term.
Okay, on bonds, Vishal Goenka of IndiaBonds.com says that low CPI number of 3.5% last evening looks good on the headline front, but much expected due to statistical reasons and the coming of exceptionally high spike last year at the same time. He says the RBI will look for more sustained lower numbers over the next few readings before its October meeting. He adds that we also get CPI numbers from the US tomorrow, which will be an important input for the US Fed in its September meeting, where only 0.25% rate cuts are expected as global macro volatility has already subsided. Vishal expects the 10-year benchmark bond yield here in India to trade in a range of 6.85 to 6.9%. In fact, since we're talking about the bond market and how it will react to that CPI number, let's straight away go across to Lata. CPI. So, Lata, I mean, at the headline, I think we all want to celebrate that we are finally below 4%. But will the market cheer this number as much?
It's only a headline celebration by the media, calling it 5-year low, because this 3.54 is largely because last year, July of 2023, it was 7.44. There was an unusual tomato onion spike, and that has, helped. This high base has helped this 3.54. But within this, there is reason to be happy. Not really to beat the drum, but to be happy that the market expectation was between 3.65 and 3.7. So to that extent, it's undershot the expectation. The even bigger undershoot is in food. Food, of course, was the one that was feared, 9.36 last month. That is for the month of June. But that's fallen all the way to 5.4%. Even here, the market poll that we got was 5.5. So it's a tad better than that. The big veggie inflation, which all of us feared, 29% in June, is now down to about 6.8 or thereabouts. So clearly, the worst of the tomatoes and potato inflation is behind us. We know that we have got an excellent monsoon. I believe the governors in the monetary policy speech said 107% of long-term average. So chances are that, pulses, which are still at 14% year on year, will also start slowing down. And, inflation will not be that big a pain point for the Reserve Bank. See, the important point the market will watch are the future numbers. In this particular policy, everybody knew that July is going to be low. So July, August, September, the forecast originally of the Reserve Bank was 3.8. But in this policy, they made it 4.4. Which means they still believe that something could go wrong. There could be a rise in prices. So let's watch. If it way undershoots that 4.4 average, then people will start pricing in perhaps an earlier Reserve Bank rate cut. Just a word on the core inflation. That's jumped up to 3.4 from 3.1. Core is always sticky, but this again is a base. Last year for the same period, Jan to June, it was at 6% and coming down to 5%. Now it will start going down towards 4. The base, 2023. So you will start seeing the core inflation inching up. But I think all told, the Reserve Bank's 4.5% for the full year is actually safe after the set of numbers we got in July. If anything, there is a small chance of undershoot. A word on the industrial output. We don't look at this number much because policy is not made on the basis of this number. It's only an input into GDP. Came in at 4.2, a disappointment because our poll and everybody else expected at least above 5% number. So this is a bit worrying. And within this, two things have done badly. Capex has done badly. That's come in at about 2.2 or something, 2.6. And consumer non-durables has come minus 1.4. If consumer is also, receding, and capex, of course, May, June, the government was not spending much. It was election time. Then you're a little worried whether the pace of growth will have to slacken a bit. But let's wait and see, early days.
All right. Lata, interesting sort of context to this entire data point and putting it in the right one. Thank you very much for joining us. With that, we'll take a quick commercial break here. Our list of top stocks to watch out for with the research team coming up next in just a bit.
$170 million people and have historically supported Sheikh Hasina's predominantly secular Awami League party. On Sunday, Hindus and other minorities held a massive protest rally against the alleged attacks, urging the government to protect them and their families. Rallies were held in several cities like Dhaka and Chittagong, with lakhs of people taking to the streets. Now, what are the protesters demanding? Many reports suggest that protesters want immediate action to protect the community, the formation of a Ministry of Minorities, the establishment of a Minority Protection Commission, strict laws to prevent attacks on minorities, and the allocation of 10% of parliamentary seats for minorities. Protests were also held in the US and the UK, with over 300 Indian Americans and Bangladeshi origin Hindus gathering in Houston and a large crowd gathering outside the House of Parliament in London. While India is keeping a close vigil on the developments in the neighborhood, many Bangladeshi Hindus are trying to flee to India to escape the violence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com.
There's a saying, Shubhaste Panthanu Santu. Oh traveler, when you are traveling, everything should go well. With beautiful roads.
Welcome back. Well, it's time to distill things down to stocks that we need to keep our eye on today. Our research team is standing by with the CNBC TV18 list of top stocks to watch. Guys, hi, morning. Rima, let's start first with the results. So Vodafone Idea in focus. How do those numbers look?
Well, the key highlight is the losses have come down for the company. So the loss this quarter at 6,400 crore is down 1,200 crore on a quarter-on-quarter basis and down about 1,400 crore on a year-on-year basis. The key reason is, remember, the company raised money via that FPO, and that has gone in bringing down their bank debt, and therefore the interest cost has come down for the company, and that's helped bring down the losses for the company. That said, it's still a big loss of more than 6,400 crore rupees. The second positive is, with that money raised, the company is upping its capex spend. So the capex spend this quarter at 760 crore is higher than what they did in the prior quarter. But the results of this are still yet to be seen. So the company's revenue growth continues to trail peers. Revenues have declined for the third consecutive quarter and are down close to about 0.9%. Margins are largely stable at about 40%. 4G subscribers have gone up, but the overall subscriber headcount continues to decline, and ARPUs for the company are largely stable.
Okay, all right, Rima, thanks a lot for that. Well, I'm looking at NMDC and I'm going with green on this one because the numbers on an operational parameter are better than what we work with. On the top line, there's a small miss. The EBITDA number is much better. The margins are much better. And in turn, the profitability as well is much better. Remember, we already have the provisional volumes with us. So, the realization is something that you're looking with. And the realizations on a year-on-year basis as well as a sequential basis are higher. The problem is, post the end of quarter one, they have taken 2 large price cuts of more than 1,000 rupees, which will be on quarter 2 numbers. So for the time being, these numbers look good. Then how did they beat in terms of the margins? Because of royalty, since they produce less, the royalty as a percentage of the total sales mix, that came down to around 37%. Over the last many quarters, it's been between 41 to around 43%. So that's the reason that these numbers look better. But there are risks going ahead. For the time being, these numbers are better than what the street was working with. So let's move on then to a couple of more stocks. Vamakshi joins us to tell us about Hutco and IRFC. Morning, Vamakshi.
Well, good morning, Nigel. Hutco reported a good set. Therefore, I'm going with the green for this counter. In fact, there was a slight miss on the net profit, but that was mainly on account of higher interest costs. Disbursements came in at 12,625 crores for the quarter gone by. This is a rise of almost 19 times YOY, and this growth is largely being led by the disbursements in urban infra. Loan book saw an uptick of almost 30% on a YOY basis and has surpassed street estimates. NIMS, however, has contracted to 3% both on a YOY as well as sequential basis. Given the good growth in loan book, however, the NII is seeing an uptick of almost 12%. PPOP was up nearly 16% and net profit saw an uptick of almost 25%. The asset quality too has improved for the company by almost 29 basis points at the GNPA level and the NNPA came in at 0.33%. This is an improvement of nearly 3 basis points sequentially. IRFC, on the other hand, reported a decent set. The company was in focus yesterday after the cabinet provided a nod to the railway projects, but today it's in focus on the back of a decent set of numbers. Mild green is expected there because NII was up only 2% YOY, PPOP was up 1.8%. They had a provision write back of 3.62 crores as compared to a provision of nearly 50 lakh on a sequential basis. The net profit too saw an uptick of 1.8%. So overall, a decent set, going with a mild green for IRFC.
Okay, all right. Thanks a lot for that, Vamakshi. Getting back to metals then. Hindustan Copper, these numbers look good on a year-on-year basis. The problem is these numbers are backdated. Because as we have seen in the last 45 days or so, metal prices have come off substantially from the recent peak. And that's why the stock that was close to around 400 rupees has come down to around 300 rupees. Let's run you through the numbers first. On a year-on-year basis, good growth on the top line. EBITDA number more than doubled. And margins on a sequential basis are more or less stable. They've come off a little bit, but on a year-on-year basis, they look much better. The profit number as well, because of the higher operating profit, we are seeing that flows through. And the reason that the margins are a beat is because other expenditure has gone up by only around 8%, while the revenue has gone up by around 33%. So as a percentage of the sales mix, it's come down to around 38%. The problem for Hindustan Copper is that prices have come off and the stock trades at around 100 times its trailing earnings even as of now. So expect it to open up in the green, but from there it could give back some of that advantage. Going back to Rima though, Rima, focus on tech. Happiest Minds, how are the numbers?
So Happiest Minds, top line looks very strong. So the company's dollar revenue growth has increased by 10.9% on a quarter-on-quarter basis. This is on account of the two acquisitions, PureSoft and Aureus, that the company did. So that boosted the company's top line. EBITDA margins for the company have declined, on a quarter-on-quarter basis. But the way the company calculates margins is different because they include that other income. But the way we calculate EBITDA margins, it's down on a quarter-on-quarter basis by 160 basis points. Profits are down 29%. And here there are two reasons. One, there was an exceptional gain in the prior quarter of about 13 crore. And two, because of these acquisitions, the companies had to make certain non-recurring investments, which have depressed the company's profits in the current quarter. But the top line growth is very strong on account of the two acquisitions. Back to you.
Rima, thank you very much for that. Well, the stationery product maker DOMS should also be in focus. Upasana is here with details. Upasana, morning.
Good morning. Thanks so much for that. Well, strong set of numbers reported by the company with a revenue growth of 17% on a YOY basis. EBITDA stood at 86 crores with an uptick of 38% and margins also expanded sharply by 290 basis points at 19.3%. PAT stood at 54 crores with a growth of 50% on a YOY basis. Now, the company says that it continues to see momentum in sales growth and improvement in the margins going ahead. It aims to expand its presence in the product lines associated with kids, children and young adults. Hence, the board has approved an investment of 55.5 crore for acquiring majority stake in Uniclan Healthcare Private Limited, which is a company engaged in baby care and disposable hygiene care products. Company aims to enter a new range of products with this proposed acquisition.
All right, Upasana, thanks very much for that. So we'll watch out for DOMS. Let's look at some more earnings. We've got Mangalam joining in to take us through Senco as well as Campus Active. How were the numbers, Mangalam?
Well, for Senco, the revenue was largely in line with the, the first quarter update that the company had given.
11% jump in retail sales, 4% same-store sales growth. No worries out there. The EBITDA saw a 60% jump and the net profit saw an 85% jump. But here's the catch. It was led by inventory gains. So remember, during the first quarter, gold prices increased by about 10% and 5% of the company's gold inventory is unhedged. So they recognize those gains on that. In fact, going forward, this could be a bit of a problem because they said that reduction in customs duty will impact margins for the next couple of quarters. So while Q1 was good, the next couple of quarters margins would be impacted, and that's why I'm going with a red for Senco. For Campus Activewear, let's just say that this hasn't been a quarter for any of the footwear makers. Here, Campus wasn't any different either. 4% decline in revenues, 22% decline in EBITDA, and as a result of which there was a 20% decline in the profitability as well. The company did cite muted demand scenario across both rural and semi-urban areas, and add to that, even the average selling price declined from 629 rupees per pair to a little above 580 rupees per pair as well. So see some red on Campus.
Okay, all right. Thanks for that, Mangala. Well, let's wind this down with Vivek, who's here to tell us about KPI Green and their fundraising plans. Morning, Vivek.
Well, good morning. KPI Green, we accessed the term sheet for this particular fundraise. So the route that they're taking is via the QIP route. The company is looking to raise close to 1,000 crore via this particular route. The floor price for this particular offer is at 983 rupees a share. The indicative issue price is close to 935 rupees a share. What does this mean? It's a dilution of 4.4% if you go by the base size of the deal. Dilution of close to 9%, if the company chooses to go ahead and exercise the upsize option for this particular deal. Going with the red on the back of the fact that it's a significant discount to the last traded price.
Okay, that's KPI Green. Watch out for it. But Vivek, hang on. We want to come back to you for another important update. But before that, quick recap of the top stocks to watch today. The ones that have positive news flow around them are Vodafone Idea, NMDC, Hutco, IRFC, Hindustan Copper, Happiest Minds and DUMS. Stocks with negative news flow around them are KPI Green, Senco Gold and Campus Activewear. Now, a lot of these stocks are earnings based in terms of why we're watching out for them. There are going to be others which we will watch out for because of the MSCI index weight increases or decreases or exclusions or inclusions because the review is happening. So let's go back to Vivek for this. The August review is here. Vivek, tell us the highlights.
Well, that's right. So the August review is here. The list of inclusions and exclusions is out. India's weight in the emerging market index rises to 19.8% versus around 19.4% that it had as part of the May review. So the main index that we track is the MSCI Standard Index, where there will be 7 additions and 1 deletions. Which are the additions? Zydus Life, as per IFL Alt, expect to see flows of close to $218 million. Prestige Estates, we also have Dixon Tech, OFSS, Oil India, Vodafone Idea, as well as RVNL. Remember, most of the quant analysts actually had these names penciled in as likely inclusion candidates. One deletion is there from the MSCI Standard Index, and that is Bandhan Bank. Close to $109 million worth of selling will be seen. All of these changes will be implemented on August 30th, the trading session on that particular day. Another important stock that was on the radar ever since HDFC Bank uploaded the shareholding pattern, there was enough foreign room for MSCI to go ahead and increase the weight. Along expected lines, MSCI has increased the weight for HDFC Bank, but they have chosen to do so in 2 separate tranches. So there will be close to $1,472 million or $1.4 billion of inflow on August 30th in HDFC Bank, and there will be another weight increase that MSCI will implement, and this will be done as part of the November review. Another important update, the Adani Group stocks are now, all of the embargo that was there on these stocks have been lifted, and now they will be treated, they will receive standard treatment as far as the MSCI list.
All right. Thank you very much, Vivek, for that. So that's an important list, and we'll talk more about this with an expert in just a bit from now in terms of implications for these individual names. But we'll take a break. We're back. Amnish Agarwal of Prabhudas Lilladher will be joining in for some specific stock conversation. Stay tuned.
The Department of Transport, under Mr. Nitin Gadkari, we are all enjoying the great network of India. But there is a small problem in that. He himself said that the 40% of them, the pollution, the road, it comes from the road transportation. So this is a time for us we have to think about pollution and how to reduce it. There are many ways to reduce, but I want to take one way that is known as the electrical vehicle, and we call it as EV in general. When you have electrical vehicle, things will be better, pollution will be reduced, green gas emission will be less, carbon dioxide will be less, it is fine. But to have that, we require following things. That is my suggestion. If we follow that, it will be really great. Number one, there is a new word by the name range anxiety. It has come into the picture. That means if you have electrical vehicle, you are always under anxiety when the battery charge will be over. So you have to always look at when I get a charging station. And when you get a charging station, following things, so you have to think there will be a big queue. Second one, in winter it doesn't charge very well because the battery cannot take it. Number three, how much time I get to charge my battery. To do all these things, we should have good electricity production. Normally, state produces electricity either by hydel or by thermal, maybe some people by nuclear. The kind of electricity we produce, it may be enough for our own state. In that case, where will I bring the extra electricity? I may have 10 charging points, but if I don't have electricity, they are null and void. So this is the main concern.
Welcome back. Well, let's say hello to Amnish Agarwal, Head of Research at Prabhudas Leeladhar. We have lots of stocks to discuss, many earnings to go over as well. Amnish, thanks for joining in. I want to start with telecom because we've had interesting news over the last 24 hours. On one hand is this big investment into British Telecom that Bharti Enterprises is making. I know it's at the parent level, doesn't really impact the listed entity. But it's a big deal, right? $4 billion is what they're putting on the table. So that's one part of it. And then we've got numbers from Vodafone Idea, where the losses continue, but at least they're reducing. How do you look at these two stocks? Any interest here? And would the $4 billion investment by the parent, would that at all weigh on the listed entity, the India business here? Because so much money is being put to work, in terms of this overseas expansion.
You see, as it is in the listed entity, it is unlikely to have major impact on Bharti Airtel as such. But having said that, it also shows the confidence of the group in the overall telecom space, because earlier they had gone into Africa, now they are going into, say, UK. So I think the overall trend looks positive. And as far as your Vodafone is concerned, I think the losses are coming down, and I believe they are also looking at some sort of, you can say, adjustment or integration in their postpaid plans at slightly higher prices. So definitely the company is looking at, say, staging some sort of a turnaround in future. But definitely at the current juncture, Bharti Airtel has got much more visibility in terms of numbers in comparison to Vodafone. Vodafone remains dark horse in the sector.
Amnish, do you like insurance as a space? You know, the life insurance numbers came out yesterday during the last 2 hours or so of trade. We put the numbers out. It seems to be very strong. I mean, I say Pru, HDFC Life, SBI Life as well, although maybe the former two more. And it could be a sector for the day. Your thoughts?
You see, insurance, actually, if you look at particularly last year and a half, the growth rates have not been that encouraging. And particularly, I think HDFC Life, LIC, etc., they have given good numbers this time around. And if you look at, I think, barring, say, maybe an LIC, which was doing well from the last 12 months or so, the sector has been consolidating from last couple of years. And given the penetration of insurance, which remains very low in India, I think the sector can actually see some sort of more leg up or a re-rating from here on, given the fact that the numbers have started coming in quite good.
Okay, all right. Thanks for that, Amnish. Request you please to stay on, Amnish. Let's get in Mr. Vidyashankar Krishnan, the Chairman and Managing Director at MM Forgings. Hi, Mr. Krishnan. Good morning and thanks a lot for joining in. Well, for this quarter, the top line is more or less flattish, if you look at it on a year-on-year basis. But earlier when you joined us, you had given us some ambitious guidance for FY25. And I'll tell you what, sir, most of the street is saying whatever the management guides for, they should try to achieve it. So let's try to revise that guidance that you gave us earlier. You were talking about 1,800 crores of revenues with margins at around 20%. And also volumes at around 90 to around 95,000 tons. Any change in any of these numbers?
Morning, Nigel. So last time when we met to now, macroeconomic situations have considerably taken a turn for the, what shall I say, worse or a little bit tempered. So we are looking at marginal growth this year in the region of around 5%. So from around 1585, which we did last year, we would expect about 1650 plus this year.
Oh, all right. So
in
that's
tonnage terms, from around 85%, 85,000 tons, 84,000 tons to about 87 to 90,000 tons.
All right, so that's a skimming down of you're lowering your guidance because demand conditions have changed. We got that on the top line. Since you won't get the benefit of operating leverage that will play out, then could you tell us what impact will have on margins? Margins can hold around 20%, or is there a downside risk to that as well?
Due to cost reduction efforts that we are taking across the board, I would say that margins will hold at the 20% mark. We stand by our commitment to look at margins comfortably in the region of 20% from Q3, that is by end of this calendar year and onwards. So Q3 and Q4 onwards, margins should be up. Even for this quarter, if you look at it, the consolidated margins stand at 19.4% after removing other income, as against 17.7% in the previous quarter, in the corresponding quarter the previous year. So there's been a substantial improvement in margins due to considerable cost compression across the board. That will continue, and margins should hover around the 20% mark that we had guided a few quarters back.
Okay, all right, 20% margin, that's good. 5% revenue growth, 20% margins. Mr. Krishnan, hi, good morning. Prashant here. On the high tonnage press line, right, there was a lot of, there is a lot of expectation that this is the segment which will lead to, which will be the margin driver and which should contribute in a significant way. I think, could you give us a sense of how this is looking? What the outlook here is?
Yeah, sure. Largely, the high tonnage press line serves the CV market, which right now is quite range bound, and we hope that along with our CV OEs, that that H2 will be much stronger. Now, what we've also done on the high tonnage line is to add a 16,500 ton press, the largest of its kind in the world. So this press will come into production in the next 12 to 15 months, and into commercial production in the next 12 to 15 months, and is expected to bolster our capacity by around 25,000 tons per annum.
You know, I'm reading a note which essentially said that you can achieve a top line of between 1,800 to 2,000 crores in the next 2 to 3 years here in this segment. Is that a fair assumption?
I wouldn't say not in this segment alone. Overall, we are looking at, of course, much bigger numbers over a 2 to 3 year time frame. This segment would be around 50%, so about 1,500 crores approximately over the next 3 to 5 year time frame.
All right, Mr. Krishnan, final question before we let you go then. Do you see any downside risk to these numbers that you're giving us? You've already scaled it down, but do you see that? Point number one. And point number two is on the EV revenues for this year, what are you forecasting?
This year, we will make our initial debut on the EV. Let me first look at the guidance numbers first. So we expect these numbers to be, whatever we have discussed now, to be reasonably held right through the year. Of course, we have to always remember that we are not a market maker. We are what shall I say, followers of OEs and the market itself. So subject to reasonable macroeconomic conditions as we see them today, I would say that these numbers should hold. Next, on the EV play, we are moving ahead. This year, we will clock our initial sales, and next year, we will hit double digits.
All right, 100 crores this year, 25?
Sorry?
100 crores this year in FY25, EV?
No. Double digit next year. So this year we will open our account.
Okay. All right. Fair enough. So we leave it there. Thank you very much, Mr. Krishnan. Appreciate you joining in with that. Well, let's just sort of turn our attention back to the markets. And there's, 15 minutes to go for the market to open, the pre-open session, that is. Anuj is here with what he's making of things. Anuj, good morning.
Morning, Prashant. A crucial day for the market. And that's because, while yesterday you respected the support levels, clearly there's some resistance at higher levels. The Nifty has been sort of oscillating in the range between support and resistance. Now, there was 20-day exponential moving average hurdle that we faced yesterday. In fact, for 2 days now, the Nifty's top has been exactly the 20-day exponential moving average. Now, 20-day MA is the most important market level in terms of positional trades. So it will be interesting to see whether we take that out or not. Today, of course, we have 2 Qs to negotiate. Inflation data, which on margin is positive, and MSCI changes in HDFC Bank, which on margin is negative because the market was expecting perhaps all the changes to happen in one go, and it's been divided in two particular tranches. And the Nifty IT also is at make or break juncture. So in that sense, you have 2 big index today, Nifty Bank and Nifty IT, which would be at crucial levels. In terms of Nifty levels to watch, the first resistance is 24,400 to 24,450, the last 2 days peak, and also the 20-day exponential moving average, and then 24,500 to 24,600 based on the options data. Support comes in at 24,200 to 24,250 based on the options and yesterday's low, and then the big support is 24,000 to 24,100 based on the charts. The Bank Nifty, I think that trade is now all about 20-day exponential moving average and 100-day exponential moving average. The 20-day is placed at 51,100. It's a big resistance. And 49,850, which the Bank Nifty has defended all through the last 4 or 5 days. The 100-day, that's the support level. I leave you with the quote of the day, and it's an interesting one. Happy Tuesday. Got to admit, it sounds better than Happy Monday.
I think it's putting it quite simply, and very directly. Thank you, Anuj, for that. So we'll watch out for how things progress as we get set for the open. Back to our conversation with Amnish Agarwal. Amnish, what's your sense on some of the jewelry stocks? They've had a fantastic run up until now, but I think for the next couple of months, we'll all watch out for this inventory impact, courtesy the customs duty cut, and even Senco is guiding for that. Even Titan spoke about the inventory hit in the quarterly call. What's your sense? Would you be buying any dips on the jewelers?
You see, what has happened is that there has been this structural change. So I will not call it just as a duty cut, because what has happened with this 6% import duty is that the entire, you can say, the your illegal trade or the smuggling of the gold becomes unviable at 6%. So that actually puts the, you can say, all the organized players at an advantage in comparison to the illicit trade in the country. So that is one. Now, secondly, any which ways, the first half of the year was likely to be muted. 1Q was weak. And in 2Q also, we don't have, you can say, many festivals. And towards the end of 2Q, we have got the Shraddh season, which usually is a weak time for the jewelry buying. However, what has happened is that due to the cut in the import duty, the gold prices have corrected, which has resulted in some sort of improvement in demand at the ground level. And I don't rule out this as a preponement of demand also. So whatever bulge in demand we were expected in 3Q, some of it has got shifted in 2Q. In the longer term, it's a positive move. And I think we would be buyers in the jewelry companies on any correction or declines.
All right. We'll take a quick commercial break here. There's a lot more to discuss. The implied open is indicating a 20-odd point lower start. We'll take a break. We're back. Amnish is with us, but we'll also address technicals and specific trades with Mitesh and Sudarshan in just a bit from now.
Production and distribution of electricity for the charging points for the level 2 to reduce the range anxiety. Second thing, like heart to the body, for electrical vehicle, the heart is a battery. There should be a good BMS, that is battery management system, and there should be a cell which also should be a very good quality. Then only the batteries can work very well and efficiently. Recently in Rajasthan, we have found out there is a new, the lithium is available. So it will be a great idea if in India we can manufacture our own batteries, and that makes us independent, self-dependent, not dependent like oil. Then we can produce a better design batteries which will help us for the EV vehicle in a long way.
The Hindenburg report just does not put the highest chair at SEBI in suspicions, but it also questions the institution and its conduct. It also questions Adani and its role, Blackstone, which is one of the largest player in the REIT space, along with brokerage firm 360 ONE, formerly known as IIFL Securities. Let's start with the allegations against SEBI itself. Hindenburg in its report has said that SEBI chairperson Madhavi Puri Butch and her husband Dhaval Butch had invested in offshore funds which were allegedly used by Adani to siphon off money. It was this investment which came in the way of SEBI's investigation against Adani and also the offshore funds in question. It is because of this why Hindenburg has also stated that SEBI can't be trusted as an objective arbitrator in the Adani matter. SEBI was also quick to respond on these particular allegations. The securities regulator has said that allegations made by Hindenburg
Welcome back. As promised, let's get to our technical experts. We have Mitesh Thakur and Sudarshan Sukhani who join us on the show. Good morning, gentlemen. Thanks a lot for joining in. Well, the GIFT Nifty is suggesting a 20-point downtick. How do you approach trade, Mitesh? You go first.
Good morning, Najib. So, a couple of observations before I go into the immediate view. I think one, we came down from 25,000 plus levels to 24,000 sub levels and then bounced back, and we've just done about 50% of the retracement at 24,485. I think we are still not showing that signs of getting past the important hurdles at higher levels. So one, in the short term, the sell-on rally trade remains. The good thing is that the resilience at the lower end, which is one, the support pivot levels being developed at 24,000 and then 24,200, and the put open interest data also suggests that some put writing is happening around those strikes. So it might be a choppy and volatile market, but since the medium term indicators have started turning slightly negative, I think I would be slightly more biased towards selling on rallies or else trading on a stock specific basis.
Got that. Gentlemen, morning. Sudarshan, what about you? How would you approach things today?
Yeah, good morning. Well, the market is in a trading range, and inside a trading range, because we are in a larger uptrend, the trade is to buy on dips. We got that dip on Thursday when we wanted to buy, and yesterday. Today, we've had 2 days on which dip buying was successful. I don't think it's going to work today. So for today, when now we are talking about the short-term trend, for today, the trade is to avoid doing anything in the Nifty or the Bank Nifty. Individual stocks, of course, will be available, but I don't think there is any trade in the indices today.
Okay, so in that case, let's talk about those individual stocks. Gentlemen, good morning. Sudarshan, let's come to your list first. What are you working with today?
Sure. JSW Steel is a buy with a stop under 860. Similarly, M&M Finance, which is going into a large trading range and hopefully will break on the upside, is a buying opportunity with a stop under 285. ONGC, which is already in a strong uptrend, has a consolidation that's probably a pause before another up move. That's a buy with a stop under 310. My only intraday short is Godrej Consumer, which can be considered for an intraday short with a stop above 1500. The larger bias is still long for stocks.
Okay, all right. So keeping the view constructive over there. Mitesh, hi. What are you buying or selling today?
See, I have more of sell calls. A sell on AU Bank with a stop at 621 for targets of 585. Godrej Consumer features on my list as well. Keep a stop at 1411 for targets of 1350. And second FMCG stock is Nestle. So I think after a good rally, FMCG is showing signs of correction. So Nestle is a sell with a stop about 2500 for targets of 2410. And LIC Housing Finance is a buy. Keep a stop at 624. Look for targets of 675.
Okay, all right, gentlemen, thanks very much. We'll come back to you closer to market open. Right now, I need to take a very quick break. We'll come back on the other side. We'll have the pre-open rates, and also we will get down into a conversation with Balrampur Chini. The company came out with its first quarter numbers. Mr. Pramod Patwari, CFO of the company, is going to discuss the outlook going ahead.
investigated. Also, the chairperson had recused herself from these investigations for any potential conflict of interest. SEBI has also cautioned investors on the conduct of Hindenburg, stating that its disclaimer that it may have short positions in the entities mentioned in the report. Speaking about Hindenburg's allegation against the Adani Group, it says Adani used global offshore funds to siphon off money and reinvest them in the Indian market. SEBI chairperson's alleged involvement in the same funds came in the way of its investigation against Adani. Adani has called these reports malicious, mischievous and manipulative and being done with the intention of profiteering. An important clarification which Adani also gave was that it has no relation with any individuals mentioned in the Hindenburg report. Hindenburg has also questioned the offshore funds which were opened through 361 or IIFL. It says that these funds helped Adani siphon off money and reinvest them in Indian markets and also Adani Group stocks. The report has said that Madhavi Buch and husband invested in these funds opened by 361. 361 has said that these funds made zero investments in Adani. Madhavi Buch and Dhaval Buch's holding in the fund were less than 1.5% of the total inflow into the funds, also saying that the funds are fully compliant with all applicable regulations. Another party against which Hindenburg has made serious allegations is Blackstone and Dhaval Buch's role there as an advisor. The report says that Dhaval Buch's employment and Blackstone benefited from SEBI's regulations on REIT investments. Dhaval Buch, in his response, has said that his appointment at Blackstone predates Madhavi Buch's appointment as SEBI chairperson. Also, he says that at no point of time was there any association of him and the real estate side of Blackstone. Hindenburg sent a lot.
Welcome back. So we've got the technical trades for the day. Let's also look at some ideas on the futures and options side. We've got Avani Bhatt, Senior Vice President, Equity Derivatives Research at JM Financial Services for that. Avani, good to have you on the show. So tell us, what are the stocks you're working with?
Good morning, Sonia. I have two stocks for today. If you notice, the pharma sector has been performing very well. In spite of all the volatility, all the pharma stocks are making newer highs and giving newer breakouts. So one of the stocks that has given a good breakout yesterday is Glenmark Pharma. After almost 15 days of consolidation, the stock has moved up above the resistance zone of around 1480 on good volumes and an open interest addition of around 3% in futures. So I think the stock is heading towards 1600 in a very short time. So we'll initiate a buy call on this particular stock, Glenmark Pharma, in the range of 1500 to, if at all you see some price retracement, up to around 1490. Stop loss can be kept at 1455 and target would be 1600. The second stock that I feel is from the IT sector. The IT sector has seen a decent 10% correction from the highs and is now showing a good piercing bullish candle formation on the daily and weekly charts. One of the stocks that I like from this particular space is Infosys. Infosys, once the gap down resistance level of around 1816 is crossed, we should see a decent up move in this particular stock. So we can initiate a buy call in Infosys. It closed at around 1797 level yesterday. The targets on the upper end would be 1850 to 1880 and stop loss can be kept at 1755.
All right, Avani, since we have you, very quickly, if you could tell us on HDFC Bank, that's going to be the big one to track today. The MSCI rejig announcement hasn't really come according to plan, though it's not very disappointing as well. Levels you're tracking on that one, how would you approach that stock?
Yeah, good morning, Nigel. So HDFC Bank, technically it has given a good breakout and it is trading above the 200-day moving average, even the short-term moving averages of 50 and 20-day moving averages. So I think if at all we see any kind of retracement up to around 1640, that should be a good level to initiate longs in spite of all the disappointments. Technically and on derivative parameters, the stock looks absolutely robust and after some bit of consolidation and time correction, it should head towards around 1750 to 1780 levels very soon.
Okay, Avni, we will leave it there. Thank you very much for joining in. So some F&O trades for the day. Let's now move on and get a conversation going with Mr. Pramod Patwari, CFO at Balrampur Chini Mills. The company came out with its numbers just a while back. And in terms of the top line growth, it's been slightly flattish. Just about 2% growth is what the company has managed. The EBITDA margin is fairly steady at around 11.7 odd percent. Mr. Patwari, good to have you on. Let's start with the the sugar segment first and talk about the top line growth. I think you're absolutely flat compared to last year at around 1,130 odd crores. Can you just tell us how much you did in terms of volume, what is happening with pricing, and also an outlook on both volume and pricing, considering that we're very close to a brand new sugar year starting?
Good morning and thanks for having me on the show. So sugar revenue is a function of quota release, which the government of India does on a month-to-month basis. So our revenue from the sugar segment derived primarily on account of that. As far as the current realizations are concerned, we are selling sugar at around 38.5, and for the quarter gone by, the average realization came at 38.90. For the new sugar season, which is going to begin on 1st of October, our in-house view is that country will begin with an opening inventory of around 8.5 million tons. We are expecting that this year government will allow production of ethanol through juice and B-heavy route in an unhindered manner. And our view is that diversion of sugar into this can be in the region of around 4 to 4.5 million tons. If that we take that into consideration, the net sugar production as per our view for the upcoming sugar season should be around 30 to 28 million tons. So if you add 28 million tons with an opening of around 8.5, that leaves us with an available inventory of around 36.5. Against that, the domestic consumption next year should be around 29 million tons. So we are still left with 7.5 million tons of inventory, which is decent enough. And the normative inventory which the government has considered in the past and were extremely comfortable was in the region of around 5.5 million tons. So still there is a scope of 2 million tons of surplus inventory, and government might consider export at some point in time.
That's exactly the point that I was coming to, sir. I think the industry has been really crying out for some easing up on the export front. Now, we don't know, are you expecting that policy to change anytime soon? And if it doesn't, let's work with what we have right now. If exports are not opened up in any more meaningful way, and if we continue to have this kind of buffer stock and the surpluses, then what should be the expectation on pricing? Because on the cane side, obviously, we're seeing, FRP going up, then there's been the MSP hikes as well. So on pricing, what should the expectation be if we assume that there's no change on the export front for now?
So maybe at the cost of repetition, I would like to say that sugar price in the country will also depend upon the availability of sugar into the country. As we have painted a picture of around 2 million tons of surplus sugar, even after considering a diversion of around 4 to 4.5 million tons of sugar into ethanol. I think government would like to see the progress of the monsoon and the yield of the crops, maybe sometime post the commencement of the crushing season, and then they would take a call on the export front. As far as the future pricing are concerned, domestic availability of sugar is sufficient and it is balanced. So we don't see a very runaway in the domestic prices from here.
All right. Pramod, hi. Good morning. Prashant here. On the ethanol front, just this weekend, we had Mr. Amit Shah, the Home Minister, essentially talking about bringing forward the 20% petrol ethanol blending to FY26 as compared to 2030, urging sugar cooperatives to sort of increase production, etc. So what is, are you expecting anything on that front in terms of pricing, etc.? Is all that is settled?
So good morning, Prashant. This 20% blending target is nothing but a reiteration. Reiteration was already pre-formed in 2021. So government is looking at a blending of around 20% in 25-26. Sugar industry can easily supply 50 to 55% of the total requirement, which will be required for 20% blending. And as per the Niti Aayog document, for 20% blending, the requirement is around 1,000 crores liter. For the pricing, yes, we are still awaiting the revision of ethanol prices for the last year. But this year, as the government is looking for a meaningful diversion of sugar to happen into ethanol, I think the proper pricing will be set at some point in time.
No, it should happen now, right? I mean, anytime now, or
yeah. So the ethanol year begins from 1st of November. So still there is a time.
Okay, and what would you expect the pricing to be at?
So if we take a relation of last announced price of ethanol vis-a-vis the FRP prevalent at that point in time, we get a conversion ratio. So we would be comfortable if government restores the same conversion ratio going forward also.
Okay, all right. Pramod, thanks a lot for joining in. We would like to understand more about your PLA project, but that discussion for another time. Thanks a lot for joining in and filling us in with all of those details. Well, let's focus on the big announcement that came in overnight, the MSCI Rebal. We have Shriram Velayudan of IIFL who joins us. Hi, Shriram. Good morning. Thanks a lot for joining us here on CNBC TV18. Well, on HDFC Bank, the disappointment is that this rebalance will be done over 2 tranches, not 1. So my question to you is, what is the potential inflows, stock price impact in tranche 1? And is there any risk to tranche 2? Because back of the envelope calculation suggests there is unlikely to be one. Go ahead.
Hey, hi, Nigel. Good morning. So largely the market expectations centered around the weight up happening in 1 tranche. But now what the index provider MSCI decided is they will be implementing it in 2 tranches. In the first tranche, we are anticipating inflows of roughly $2 billion, which is around 3 days of volume impact and roughly 6 to 7 days of delivery impact. So what I believe is 1.8 to $2 billion is still significant. I definitely wouldn't consider it as a negative. Stock might see some a weakness as such to start with, but I believe it should gradually recoup. As I said, 1.8 to $2 billion is still on the higher side. It's not lower by any means. Now, what caveat the index provider has added is they will be evaluating the foreign room in HDFC Bank. Let's say the foreign room falls below 20% weight up, but the second tranche of weight up would happen in the November review. Now, what I think is I will assign a very high probability of the second tranche of upweighting happening as well, because the foreign room coming off to below 20% would entail 6.5 to 7 billion worth of FPI buying, which I believe is on a high side.
Okay. So, Shriram, so HDFC, the impact is going to play out in 2 parts now. And I think you mentioned about 1,800. That's the figure that we're working with in terms of the money coming in. You think much of this is already factored in the stock price? Obviously, when the eventual money flows in, we'll see that kind of impact. But going forward, how do you expect the stock to shape up, given the technical event and the next one now in November?
Yeah. So looking at the positioning aspect here, so in terms of open interest stock on the futures leg, HDFC Bank on the futures leg carries an aggregated open interest of roughly $3.5 billion. All of it we cannot consider as prepositioners. So when the month began, it has roughly added 150 to 200 million worth of open interest, which again is on the higher side. So as I said, 1.8 to $2 billion is still on the higher side. It's not lower by any means. So from with due respect to fundamentals, the weight up event should have a positive impact in the name. Because I'm assigning a high probability for the second tranching also to take place in the November review.
Shriram, any other stocks which should see action? Zydus, Prestige, Dixon, or you think most of this is already in a way played out?
Prashant, most of the names have played out because the 7 editions were largely in line with the street expectations. It's factored in according to me.
Okay, all right. A quick word on the Adani Group stocks as well. MSCI has lifted the embargo on them. How do you read this?
Yeah, so in another development, MSCI finally decided to lift the embargo on the Adani Group names. For the last 1 year, the index provider was not incorporating the shares and float changes with respect to Adani Group. In a welcome move, they have lifted the freeze that they had in place for the past 1 year. So in terms of stocks, Adani Energy Solutions will be there on radar. I think it's a very healthy probable for the November MSCI reval event as an inclusion potential.
Adani Energy Solutions, okay. So that could be on the radar. Overall, Shriram, I mean, I don't know if you have the numbers back of hand right now. What would be the weights of all the Adani entities put together right now on the MSCI indices? And if you would expect that to change at all, I mean, if you expect any changes in the near future, now that at least the freeze is off?
I don't have the figure at the back of my mind. So for this reval, the float factors are getting lowered, at least for this reval. Because as I said, the index provider hasn't touched the float factors and share changes in the last 1 year.
All right, Shriram, we'll leave it there. Quick conversation, but useful as always. Thank you for joining us here with some of that. We're just going to look at the pre-open rates, the Nifty and I mean, of course, HDFC Bank is down about 2%. It's flat as they come, unchanged almost. It's like where we left off yesterday. HDFC Bank is what I'm talking about. We're showing a 2% cut. And of course, some of the other MSCI changes. But as Shriram said, most of it is played out. There is, a pre-positioning in anticipation of what may come. Then there is the actual positioning. And then, it's like very, very widely and closely followed, all of these sort of passive changes, because the numbers are very, very large in terms of flows in some cases. So lots of interest, lots of money to be made. But by the time we get to this stage, a lot of it is done. As Shriram pointed out. Well, let's bring in Sudarshan back again for the 9:10 call. Sudarshan and Mitesh, gentlemen. Sudarshan, you go first.
Well, consider buying ONGC with a stop under 310.
Okay, ONGC surged yesterday as well. Mitesh, what about you?
I'll go with a sell on Nestle and look for a target of around 2410, 2400.
Okay. All right, gentlemen. Thank you for those quick calls. By the way, the pre-open rates all have settled, and the market's absolutely flat in the pre-open. Nifty's not going anywhere, just about 4 points lower. That's what we have. It's the pre-open Nifty. Let's quickly look at Aarti Industries. This is a stock that could be in focus as well. Sonal, what are you looking at?
Well, Aarti Industries reported numbers day before yesterday. It was a good set, but the management held a conference call yesterday post-market hours, and they did not indicate a possibility of meeting their guidance. In fact, they went ahead and said that they will be able to decide or freeze onto guidance of 1,450 crore rupees to 1,700 crore rupees of EBITDA only after they get some sense of what's happening in the global scenario, because there's a lot of volatility in margins and pressure from China as well. However, they have maintained their volume growth guidance of 20 to 30%. In terms of demand, say the discretionary segments such as the dyes and pigments witness continued recovery and sequential growth as well. However, the Red Sea issues, they are impacting freight costs, and that is something that could impact their volumes going forward as well. Debt stands at 3,300 crore rupees, and this could reach levels of 35 to 3,600 crore rupees because of the capex they have planned. Now, in terms of brokerage, Morgan Stanley has an equal weight with a target price of 615. They say an evolving product mix, which is foray into energy applications as well, is something which is leading to margin volatility. MK says they have a buy rating with a target price of 800. It is the fourth consecutive quarter of sequential recovery. However, because there is no clarity on EBITDA guidance, they've cut their FY25 and FY26 EPS by 11 and 5%. Nuvama says they are raising the target price to 903, but that is because they're rolling forward their estimates to Q1 of FY27. Agrochemical segment shall see recovery in the second half of this fiscal, but their freezing of their EBITDA guidance is something that the street wouldn't like.
Okay, all right. Thanks a lot for that, Sonal. Well, let's hop across to Manglam. He's here to tell us about Bata and Honasa. Manglam.
Well, both those stocks are on our radar on account of Goldman Sachs notes. So Goldman Sachs has actually downgraded Bata to sell. They've reduced the target price from closer to 1,500 to about 1,300 rupees itself. And they've cut the next 3 years' EPS estimates by 17%, 12% and 10% respectively. Why is that? Because they don't see any levers for major growth in same-store sales growth, which has been negative to flattish over the last many quarters. And the company is guided for mid to high single digit. They don't see any reason for the company, for the performance to come like that. In fact, even the EBITDA margins are unlikely to reach FY20 levels, even for as long as FY27. So that's why they're negative on the stock. Honasa, on the other hand, they've initiated with a buy rating and a target price of 570. Why is that? Because there are two major trends taking place right now. One is the shift of sales to e-commerce, and secondly, the shift to active skincare products, science-based skincare products. And they believe Honasa will benefit from that. In fact, they expect the revenues to double 2.5 times and margins to double as well.
All right, thanks very much, Mangalam, for that. Right on cue, we've got market opening absolutely flat. Yeah, flat. 10 points down, 24,333. The Sensex is down 100 points, 79,550 is where we are at. So this is the opening neither here nor there, but certainly a bit sideways is how we've started. Market breadth, though, it's too early, but it's 1350 up and about 400 lower. And some of the other indices, Nifty Bank is down about 50 odd points as well. But all about stocks, so let's get to it.
Absolutely. So if you talk about the large cap screen, some of the movers and shakers, Apollo Hospitals, which is reporting numbers today, is right on top. The banks are looking not too bad. Axis Bank, ICICI Bank, all on the upside of the screen. Let's see what HDFC Bank is doing. HDFC Bank is down 2.5%. The disappointment is really playing out because this weight increase is not happening in one go. It's being split now, August, the next one in November. So there's some disappointment playing out there. Because of that, the Bank Nifty itself is under a bit of pressure. But back to looking at some more names, Britannia, JSW Steel. These are stocks on the upside. L&T starting positive. Hero Motors reporting numbers today. That stocks are starting out with a mild green as well. On the flip side of the screen, some of the auto stocks are in for a bout of profit-taking. Tata Motors, Bajaj Auto, M&M. So, yeah, even iShow for that matter. So, auto is not looking too hot at this point in time. And, of course, HDFC Bank is keeping a lid on the gains as well.
Well, just focus on Ola Electric. What a dream start, right? First trading session up 20%. Yesterday up 20%. And today as well up another 15%. Ola Electric, that's flying away, catching everyone's imagination as well. Lucky for those that got allotted in that particular issue. Other stocks are in focus. This renewable energy theme has come back, and it's come back in style. Inox went up close to around 10%. Big up move is what we are seeing. We had the management yesterday. They sounded very, very optimistic on business prospects. The street is taking note of it. Last week, we had Suzlon Energy. That management as well, talking up the stock, talking very, very positive about the execution for the remainder of this year. So that one as well up close to around 5%. A couple of other notable movers today. You have Hindustan Copper. Well, that stock is holding its own. Up and about in today's trading session. Those numbers are good. Yes, there are risks for the coming, coming quarter. But for the time being, the street is grabbing onto those numbers. That's why that's up. Dixon as well up close to around 2.5%. You have the Adani Group stocks actually that are doing well. So you have, a couple of them that are bounced back. Case in point being an ACC that's up close to around 1.5%. So keep an eye out on that one. Ambuja Cements as well. I think the first tick was in the green. What's taking it on the chin? Well, it's Aarti Industries because of that guidance, because of the street is a little bit skeptic whether or not they can achieve what they've set out for the year. So that stock's down close to around 8.5%. But Prashant, HDFC Bank, that's trading at the 20 DMA. That inflow in the first tranche itself could support the stock at current levels. I guess it's in for a bit of a time correction.
Absolutely. And, we've got the biggest gainer, which is biggest volume-led gainer for the third straight session, which is Ola Electric, right? So 40%, add 15 to that. So it's a big one and tremendous interest, as you can see, right at the at the market open with these kind of volumes. So absolutely. Suzlon is the second biggest volume-led gainer, although, I mean, that is changing a little bit, but it's now the third, 4.5% higher. Stocks at about 85 now. We had the management of Inox Wind yesterday, where stock ended up 15%, add another 10% this morning to it. Inox Wind has got, is number 2 in terms of volumes on the NSE, 226 on Inox Wind. And look at it fly. Nigel mentioned the Adani Group stocks. Adani Energy Solutions is up 4. Adani Total is up about 2.75%. I mean, these are the two I can spot. Olectra Green Tech is up 6%. Again, it's backed by volumes. Inox Green also had a pretty good day yesterday. It's up another 3% right now. We had the management of Balrampur early, but Bajaj Hindustan is the one which is up about 3%. Jyoti Laboratories is up 4%, 584 on Jyoti Laboratories. You'll hear from the management of Senco a little later. Senco is up 6%. We highlighted DOMS and the numbers there, 2.5 on DOMS, that's a stationery maker. And I can go down the list, but then volumes are lacking. This is essentially the bulk of what is moving and moving sharply. On the downside, I think we've already highlighted Aarti Industries. RCF is down about 2%. Happiest Minds is down 2 3/4. Gensol is down about 2%. Global Spirits is down about 4%. But that's it. I mean, there's not too much volume on the downside, at least right now. Surabhi?
Prashant, just mentioning that Aarti, now the cut is almost 10%. So the fact that the management is not too confident of maintaining the guidance, that's really playing out on the stock. Uflex is the other one that's down about 4-5%. In terms of disappointing result reactions, Yatra had a really tough quarter. Not a great performance from Yatra, down about 4-5% there as well. Tilak Nagar Industries is a reaction on the upside. Those numbers have worked well. And by the way, on Adani Energy, I think like Sridhar was just saying, now there's some excitement building up that since the MSCI is willing to look at these stocks again, maybe at some point in time, it starts getting the benefit in terms of the indices, global
unembargoed, so to speak. I don't know if that's a word. But, just put up LIC. Actually, the life insurers. LIC was down 5% yesterday on the back of earnings. And it was went on a large volume. LIC is not recovering. It's flattish. But let's look at ICICI Pru, HDFC Life and SBI Life. Just wondering if there's any reaction at all. Stocks have done well last quarter. Nothing. HDFC Life is down about a half. ICICI Pru is absolutely flat. I don't think SBI Life is doing very much as well. Two or three other accidents yesterday, right? Bharat Dynamics sold off 10% yesterday. If Balakrishna Industries maybe comes up on your screen, these were all down very sharply. BDL is down another 1. Balakrishna Industries will come up. Sun TV is another one which was down over 10% yesterday. So, just looking at some of these
check Ola
names
Electric,
right now.
Nigel.
Yeah.
Just see, I mean, I know 20%.
It's come off from the top.
Exactly. So it's a very interesting trade on, and some profit taking perhaps.
The brakes being put on that one, after having 20% on each of the 2 days, I think some kind of rationality is coming in there. But one more stock, Stovecraft, just take a look at that stock. Yesterday, the stock did well. Today, it's put on another 5%, or I'm not sure whether the analyst call was post-market as. But after sounding positive, remember, it's been one of the underperformers. The numbers are now showing and the management is optimistic. So it seems the street is taking note of that.
Yeah, absolutely. And, the other one was Voltas from yesterday, right? I'm not sure if you should actually see if there's any follow-through. But that one on your screen is opening flat. All right, well, let's welcome in our market master, Rahul Arora, is CEO at Nirmal Bang Institute Equities. He's with us right here. Rahul, great to have you with us here. Good morning. Thanks very much. How are things looking? And let's start with Ola, and if you have a view. Almost 50% in today, the third day in its listed life. What do you make of it? Do you have coverage, first of all? And thoughts?
So, morning. Thank you for having me on the show. And I think at least from a market perspective, Prashant, it takes me back to a line that Nawazuddin Siddiqui said in Sacred Games, Kabhi kabhi lagta hai aapun eech bhagwan hai. It just seems like nothing can break the market at all. You thought, Fed rate hikes would break the market, wars would break the market, crude would break it. The BJP losing elections would break it, long-term capital gains tax would break it. Nothing has broken this market. So the question some investors ask is, ab tak nahi toota, to ab kyun tootega? So that, I think, at some level is smacking of complacency. It may come out of nowhere, as you saw with the yen carry trade incident, but that also got bought into. I think that has shocked me more than the shocks that would come from Ola Electric, But too early to make a comment.
By the way, even with Ola, some were saying at the margin that, the historical relation, very large IPOs and what markets do when you got, it just got absorbed.
I think those days of DLF and Reliance Petroleum are long gone, Prashant. I think that the markets were much shallower then, But I think specifically on Ola, not a comment yet because it's just listed. We haven't really penciled in. Obviously, it's going to be something that we do track, but I think pockets of the market, there is a huge amount of sector rotation that's taking place. There's no question about that. But I think after each of these 4 or 5 incidents that I spoke about, whether it was the election results or LTCG or the yen carry trade, I think at various points value has certainly emerged. The market was getting very excessive at certain points in time. You were discussing certain defense names. It's heartening to see that they're coming off because things had become very irrational. But at an aggregate level, I'd still say if you were to look at the Nifty earnings projections for the next 2 years in terms of growth, because I think most of the margin expansion is done, Prashant. The focus is now going to be on the top line. So you're probably going to be looking at about a 13-15% kind of earnings growth for the Nifty between 24 reported and 26 actual. I think that should be your expectation for the market return as well. I think people should not lose sight of the fact that the Nifty was 7,500 not too long back, and it's more than tripled in a matter of 4 years. So I think at some level it's going to rationalize. The bond markets will come into play at some point with the inflation numbers yesterday, and I think the Fed talking about rate cuts will be interesting to see how the back end of the year comes up with respect to the 10-year. But I think that could potentially be a play as well. So I wouldn't be very gung-ho at this point in time. I think earnings expectations is what's going to sort of drive market expectations, but have reasonable expectation of about 13 to 15% kind of returns compounded over a 5-year period. And I think that will probably be in line with what your EPS growth will be.
Rahul, I'm just thinking Sacred Games also had another line, right? Sirf Tiwari bachega. So I think in the global market context, we all know which market is a Tiwari over here. But to go back to your point, I mean, since you are not very gung-ho and there is sector rotation, what do you incrementally buy? I mean, I know the argument gets made on FMCG every time, and every time there's a scare in the market, you'll see a little bit of a gravitation towards that side, but it's not building up in any sustained way. Because if you're talking about top-line growth, then we all know, I mean, right now, I think the best in case is being sort of a mid-single-digit kind of a number is what you can get. So should one be looking beyond this and go where others have not gone in the last 2 years? How do you play the market?
No, so I think the easiest call is BFSI. I think about 3 weeks back when we were doing Editors Roundtable, we did a piece on insurance companies as well. But I think overall BFSI is still presenting value. As I was telling Prashant a little while back, I think once we get into a rate cut cycle, I think you'll probably get into a situation where the incremental fight for deposits on the rate front will abate. So I think pressures on NIMs will ease. You guys were discussing HDFC Bank at market open. They showed a 3 basis points sequential improvement in their net interest margin. SBI's valuations still look very attractive. I mean, for an 18% ROE, banks still come into at 1.5 times book. Bank of Baroda, although missed estimates, is trading at under book. And I think if you looked at, I just go back to another stock that Prashant was highlighting in LIC, just look at the insurance numbers yesterday. Look at what the private sector has done on individual APE and group APE, including the new business premium. I think 25 to 40% growth for all the large companies, including Max Life, which is predominantly a mid-cap. I don't think valuations are out of whack. I think 2 times price to embedded value for iPro Life and SBI Life, 1.3, 1.4 for Max. And I think housing finance companies could be interesting. LIC Housing Finance was a miss this quarter in terms of results, but we like that space. We recently initiated on Housing Urban Development Company, HUDCO. We like that name. So I think BFSI valuations are not demanding at all. IndusInd Bank again coming to you at 1.5 times, Axis at 2. It's a clear overweight sector for us. Consumer Surbi, not really. As you rightly pointed out, 50 plus P for most of these stocks for a 3 to 5%. And let's not forget, Surbi, if you juxtapose VMart's results to this, you'll understand that there was probably an election play here. So that volume number that you're seeing of maybe 3%, 5%, even 8% in the cases of, say, like a Godrej, for example, I don't know how sustainable these numbers are. So to be paying 50 Ps right now for these, I'm not sure. I think FMCG has had a good run. Most of the stocks are up 25, 30% from the May results. At these prices, I would be tempted to play banks as a clear overweight, and maybe cement could be the other overweight blanket sector that we play.
By the way, I just want to clarify, our producer, Mr. Tiwari, has pointed out the line was not Tiwari bachega, it was Trivedi bachega. So just clarifying and,
all right, Rahul, let's take that discussion forward then. Since you briefly mentioned cement, what do you like out there? The large are getting larger. There was this time when everyone wants to buy the stocks that are at a big discount to the EV per ton. If you look at actually the larger players, UltraTech Cement has been one of the biggest outperformers. What's the view? How do you approach the space?
So I think, Nigel, consolidation is going to be the name of the game when you're looking forward. I think there are eventually going to be 5 or 6 major players that stand. One is, of course, going to be Adani. The other will be UltraTech. Dalmia will be one, Shree Cement, and I think you'll probably have some consolidation in and around the JK group, maybe Ramco. So I think everything else will probably get subsumed into these 6 in one way, shape or form. I think given the fact that crude has been stable for a very, very large period of time, broadly between 75 to 85, and I think if you look at coking coal and pet coal prices, they've been off from the highs that we have seen by almost 25 to 35% from the peak that we saw. I think that there is a case if volume growth was to, of course, it's not been that good yet, but if you get into a situation towards the back end of the year post-monsoons where you have 8%, 9%, maybe even 10% volume growth for some companies on a weak base, then you could look at a play at EBITDA per metric ton going to about 1,000 or maybe even higher than that in some cases. I think if you look at ACC Ambuja combined, which is eventually the reality, it's going to happen at some stage. I think that looks like an interesting bet from the large cap space.
Okay.
I think if you look at the mid cap space, we like Aramco. I think there is still at least another 20% game that's probably left there. And JK Lakshmi from the small cap. So if I was probably taking one, to answer your specific question, one large, mid and small cap, it'll probably be the ACC Ambuja combined in the large cap, Aramco in the mid and JK Lakshmi. Birla Corp has had a good run. You know, the Mukutban facility is up and running. I think that could be an interesting dark horse as well. So let's not forget the first order the Prime Minister signed when he took office for the third time was a housing order.
Yes.
So I think that is going to have a second order impact on cement demand. And I think especially in the case of ACC Ambuja, there's a lot of backward integration, railway sidings, etc., which I'm sure is well spoken about. So I think these would probably be the three top ideas in cement at this point.
Ramco is going to be interesting, right? Because suddenly you have a lot more competition in South India. Some of those plants that were functioning at almost zilch, you know, they're going to be ramped up. So it'll be an interesting play, though the stock has come off a little bit from the top. But we take that point. Since we mentioned real estate, what do you like out there? Just take a look at some of these stocks. I mean, we had some debate whether or not the tinkering in taxation was good or bad. The stocks, but have seen a big recovery post that budget, eh?
Well, there was obviously, to be fair to the finance minister, that clarification that came in. So I think to that extent it was all right. But I think, Nigel, incrementally from here, I think commercial and retail look relatively more interesting than residential because, you know, I think there's been a huge run up in real estate stocks and demand. I think, you know, whether you were a DLF who picked up $1 billion in a weekend or at the bottom of the pyramid, you know, some NCR developers, some unlisted ones who I don't want to name, have picked up 300-400 crores in a weekend when they've launched. So I think that kind of demand is a little unsustainable, to be very honest.
Okay.
You know, you could look at names like Phoenix Mills. I understand St. Regis's results were not all that hot for the quarter gone by, but Phoenix looks like an interesting one. Nesco could be a fairly interesting one. You know, I think with the entire business district that's even Suntech is planning to put up in that part of Bombay, I think, you know, and incrementally there is some talk about the auto show, which has predominantly been in Pragati Maidan in Delhi, probably moving to Nesco. So I think retail and commercial could be relatively better placed, even from a yield perspective. And I think, you know, if you want to play it as a proxy, you could even look at playing it through REITs, right? So whether you look at Embassy or a Mindspace. So I think that looks like an interesting space, but not. I don't know if this run in real estate on the residential side can continue unabated.
Okay, all right. We'll leave it there. Rahul, great conversation as always. Thank you so very much for joining us. It's a pleasure speaking to you. The market, by the way, is flattish. We're down about, what, 25 points. And I mean, 321 is where we're at. Just a few more names. Hindustan Copper is up about 4.25%. Stocks at about 315. It was not there in the mix in the morning as we started. Triveni Turbine is another one, which has got about 4.5% gains. We did mention Stovecraft. It's up a little bit more. It started 5% high. It's up 8.5% now. And there are some of these smaller names. BL Kashyap, a Delhi-based contractor, and I mean, so, you know, it's broadening out and market breadth is looking good. 1,300 stocks are higher and about 1,000 stocks, just under 1,000 stocks are lower. But Nigel, Senco is up about 6% as well, or just about 1,100 right now.
I think before Senco, we have the management of Hudco joining it. And that's also a company that came out with numbers over the last 24 hours or so. The first quarter was a good quarter for the company. AUM growth came in above estimates. Asset quality also improved, and there's been healthy business momentum. We have Mr. Sanjay Kulashrestha, Chairman and MD of Hudco, now joining in. So good to have you on. I'm looking at the basic numbers to start off with. Now, disbursements are up about 23.5%. I mean, if I look at it quarter on quarter, year on year, of course, the numbers have really surged. Your loan book quarter on quarter is up about 12%. Year on year is up about 30%. So let's start by first mapping out the expectation for the whole year. What is the kind of loan growth that you're working with? And, you know, how is cost of funds shaping up? What about margins? What do you see ahead?
We had planned our fiscal year very diligently, and you can see in the first quarter itself, we had started making on those steps. The disbursement has, as you have rightly pointed out, we had already crossed around 13,000. In comparison to the last year, quarter one, it was just in hundreds. And similarly, in the pipeline also regarding sanctions also, we had penetrated across the infrastructure. You can name it, like from road to housing, to energy, to water, to power. So everywhere we had started our footprints, and we are emerging as a good institution for infrastructural support for our agencies, and which in turns will become an roadmap for the Viksit Bharat. So we had started on the same lines, and we have taken an internal target of around a disbursement of 35,000 crores. And looking at the sanctions and the pipeline, I think it can easily be achieved. In the meantime, I am very happy to share that Cabinet has already approved PMAY 2.0. And HUDCO has a good role to play in terms of the lending and in terms of the consultancy. So this 35,000 crores of the disbursement, I look at from the very conservative figure for this fiscal. And very soon things will be evolved and the guidelines will be out of the PMAY, and HUDCO will be the beneficiary of all those initiatives of the government of India, and we will be happy to support all these initiatives of the government of India.
Sir, so with disbursements of 35,000 crores this year, what will be your total AUM growth? I mean, how much will the book grow overall? Are we talking, 10, 12, 15%? If you could just give us that percentage growth for the overall book.
See, for next two fiscal, by FY26, we had planned that our loan book should go by 1.5 lakh crores. Last year it was 92,000 crores, and during first quarter we had already crossed 1 lakh crores. So during this fiscal we have a target to achieve 1.2 lakh crores, and it is coming out at the CAGR of 25%. And if you compare from the last fiscal, quarter one, we had grown around 30%. So we will be growing in first few years at the CAGR of at least 25%.
Mr. Kulshitra, just to go back to that PMAY scheme, which was sort of cleared over the weekend, just this weekend morning, Prashant here. Are you still waiting for any details? Because I think there is an interest subsidy component as well. We have some specific details here. How is this? Has this been done in a much better, more expansive way than before, than the first round?
Yeah, definitely. Actually, the Government of India continue to work towards the improvement and the increasing penetration of the PMAY. Last PMAY was a historic moment by the Government of India, and this PMAY will go ahead with the same intent and the intention, but of course the penetrations will be much higher. And there will be a CLSS program also, there will be a PMAY grants and grants to the state government, and it will come in a very penetrating way. So I'm sure that the guidelines will be available within a week or so, and we are waiting for that. And as we discussed that housing is a main portfolio of the HUDCO, so we will remain be the beneficiary towards the state contribution. And last PMAY also we had contributed around more than 22,000 crores in our loan book, and this PMAY, since this program is of 10 lakh crores and around 2.2 lakh crores being provided by Government of India to the states, then there will be a requirement of the counterpart funding to the states. And this will be a much bigger program, since we are talking about around 3 crores households. So you see, once we talk about 3 crores household, last time it was 1 crore. So this will be a more penetrating and more pointing and more customized form of PMAY, I'm sure.
So will this fast? You're saying FY25 you should be able to disbursement should be easily above 35,000 crores, right? Could this provide a the PMAY 2 provide a much sort of sustain this momentum going forward for the next number of years? What's the expectation? How will this help? How much incremental help from this?
I think since the requirement to the states will be to the tune of 7.8 lakh crores in next 2 to 3 years of the time during the implementation of the PMAY. Some of the amounts the states will be raising through the internal accruals or the STLs, but definitely there will be a good appetite for HUDCO, and we had taken the first mover advantage, and we had been advised to be ready with the guidelines, and I think we are ready to get into the PMAY2, and the loan disbursement will be higher towards the housing sector because of the PMAY in 2 to 3 years of the time. In first year, since very conservatively we had planned our disbursement at 35,000 crores, but I think we have to revise our figure in maybe in the November or December, looking at the pace and the absorption starting of the PMAY by the states.
Can sense the optimism in your tone,
Definitely
sir.
it will be on the higher side.
Yeah, congratulations. It's been a good start and you're sounding reasonably optimistic as well. Just want to reconfirm, the loan book by the end of this year will be 1.2 lakh crore by FY25?
Yes.
1.2, all right. So we'll get that.
It is very
corrected.
delicately planned to become 1.2 lakh crores.
Yes, and 1.5 by FY26.
FY26. You are right.
Got it. Let's clear out a couple of other factors then. The NIMs, well, they came off marginally. They've come to around 3% odd. So what's the outlook on the NIMs? If you could tell us, whether the cost of borrowing has moved up, point number one. And the second factor is, what kind of resolutions are you working with for this year? Please go ahead.
Yeah, actually, the company, there are three mantras of the company. One is the start penetrating and expanding its loan base. Second is resolving the stress assets, and we have stress assets of totaling to around 2,500 crores, and we had started resolving those stress assets. During last FY also we had resolved few, and during first quarter also we had resolved around 3 stress assets, and we will continue to do so, and our internal target is to resolve all the stress assets by FY26. Around 1,500 crores of the stress assets are under different stages of resolution under NCLT. So we will be aggressively pushing those resolutions along with the other consortium partner. And third is the cost of funds. So cost of fund front, we had worked extensively during last 1 year, and we had tried the international markets in terms of the loan. We had gone for FCNR, we had gone for bonds, we had gone for domestic bonds, and we had tried how to reduce our cost of funds, and we had been successfully reduced weighted average cost of fund from 7.75% to 7.57% in these hours of the higher interest rate regimes. So during these times we are continue to work, and the mandate and the commitment of the company is to have an infrastructure which is more viable, more sustainable. But yes, of course, we will be taking care of our spreads and the NIMs, and the NIMs will remain in the range of 3.3 to 3.5%. And during this time, it has reduced slightly because the growth momentum is higher. Because of that, there is a slight downward on the NIM, but we will be continue to take care of the NIMs at 3.3 to 3.5% level. But if you reduce our EBR, that is around 20,000 crores, which is a fee-based income from us, then our NIMs are in the range of more than 3.5%. So from our loan assets, they are at 3.5%, but if I include the EBR, it is around 3%. But definitely we will be stable at around 3.3 to 3.5%, and similarly the spreads will be in the range of 1.6 to 1.8%.
Sir, just on the point on NIMs in this first quarter dip, I noticed that while your cost of funds has been coming down, as you explained, the yield also came down a little bit, which is why I just want to understand the mix in the loan book. How much right now is pure play housing and how much would be large projects? I mean, I'm looking at the details here. I think you've signed a MOU for a Surat integrated transportation development, I think multimodal transportation hub. You've signed up with the Rajasthan government for infrastructure projects of almost 1 lakh crore. So you're doing a lot of the infrastructure and urban development work as well. So what's the mix in the loan book, and which is the higher yielding business, just to understand how yields will move?
Presently, our housing portfolio is around 42%. It is at 42,000 crores. And because of the PMAY, there will be a push towards the housing business. And we had already stopped our hardcore retail. So we are not into the retail business since the banks are also there and the good rates are being extended to the customers. So we had withdrawn from that market. We will be there to support the affordable housing and economically weaker households to the state government. And this product, because of the PMAY, will have a lot of takers from the states, and this is backed by the state, and this is for the social sector. So this will be a good penetrating and branding product for the company. At the same time, if you see our main cash earning projects are we had started funding to the companies who are more profit generating type of companies. We are moving away from the state government guarantees and the budgetary allocations, and we are looking at the project which are self-sustainable, as you have rightly pointed out, like Surat. And all these good entities and the good projects demands a very competitive kind of pricing. So, we as a Government of India company, which is 75% owned by the Government of India, we will remain committed towards creation of the sustainable infrastructure. So,
but competitive. We got it, sir.
That we have to cut down our.
No, got it. These are high-profile projects. These are, as you say, you want to work with good entities where your payouts happen on time, but then bidding is competitive, and that explains that minor dip in the yields coming through. Thank you very much. It was a very good conversation, and we wish you good luck for the rest of the year as well. So that's HUDCO. But Nigel, one more management up next.
Well, that's right. Let's focus on Senco now. For Q1, their revenue growth was in line, while the gross margins also expanded. The management says that the reduction in customs duty will impact their margins for the next 2 to 3 quarters. To understand more about that, we have Mr. Suvankar Sen, the MD and CEO of Senco Gold and Diamonds, who joins in. Hi, Suvankar. Good morning, and congratulations on a good show. Well, the stock is glittering. It's seen a big up move in the last few months. So shareholders will be happy, but they'll want to know more about it. So let's focus first on the reduction in duty. What is the extent of the impact on margins we could see in the coming quarters? And also in the near term, there'll be a bit of a hit because of inventory loss. Could you quantify that? We had spoken to Titan, and they as well had spoken about this. So for your company, what is the impact likely to be?
So happy morning to everyone. Our results have come out, and I must be very excited to inform everyone that while yes, the top line growth that we've seen has been about 7.5% in a consolidated manner, and the retail growth that we have seen is about 9%. But the profits have grown by the PAT has grown by almost 85% for Q1 compared to the last year Q1. But again, at the same time, we must see that compared to Q3 of last year and Q4 of last year, the margins, the EBIT margins, the EBITDA margins that we have seen has been in the same line. Q1 has been a challenging quarter in terms of, with the heat wave, with the elections coming in. So therefore, maybe the top line could have been better in a different situation. But we had focused on ensuring that we look at the quality of margins, the hedging mechanism was in place, and therefore there was a normalization of profit. We had opened 4 new stores, a company-owned, company-operated 2 franchisees. So all of it put together, the quality of the growth was good with all the controls in place. And in terms of the current situation that we see post the cut in duty, I must tell you that, first of all, it's a great move by the government that the duty has been cut, because it did boost the consumer sentiments, and there has been a lot more excitement, especially with the wedding season that is coming in Q3 and Q4, that upper middle class consumers can now feel like buying gold. Initially, they were thinking that it was not in their reach, but now we can see higher footfalls at the stores. So at one end, yes, there will be an impact on the inventory valuation, which we feel that to the range of 50 to 60 crores that can get distributed over the coming 2 to 3 quarters, because it will not take a hit on the single quarter. But at the same time, the expectation of higher growth compared to what we have been seeing in Q1, and our focus on increasing all kinds of products, including diamond jewelry, which would give a little higher margins to the company. So the effort is all there to ensure that whatever hit we will be taking can be compensated by other efforts and initiatives.
Okay, Suvankar, hi, good morning. So 50 to 60 crore over the next 2 to 3 quarters, right? Spread out.
Yes, yes.
Is the impact. You did touch upon diamonds. I mean, we just spoke with you in July, so we have some of the numbers, and we'll sort of reconfirm whether you're on track for all of that. You should be. But on diamonds, there were some reports which were coming through in the recent past talking about how sales are suffering, some sort of manufacturing and polishing units shutting down. Is that seasonal in nature, or is something happening at the ground level where demand is kind of tapering off? We are entering a busy period with all the festive season all the way into the end of the year. So you have that tailwind, but underlying as far as diamond demand is concerned, what's going on?
So what's happened is, like, for example, in Q1, we have seen that the diamond sales volume have come down by about 3 to 4%. That is for the, for us and the Indian domestic industry. But more importantly, we must remember that diamond is an integral part of the exports revenue for the country, for the industry. And looking at the global scenario, when you look at the US, when you look at China, when you look at Europe, with all the wars and all the global uncertainties, the global demand has come down. We are already looking at US recession in place and unemployment happening. So these are the reasons that is leading to the fact that the slowdown happening in the industry, and the demand has been down. Plus, for India, what we have seen is that whenever there has been a big jump in the gold prices, immediately that has its own linked impact on the diamond jewelry purchase also, because consumers' budgets are limited. So while we can always try to convert it from gold to diamond, but then gold is an component of the jewelry. And if with prices going up, consumers think that, okay, let us wait. There is no hurry. We can wait and buy it later. So that's the overall, putting everything together. Plus, we have seen that, yes, because of the slow demand, the diamond prices have also been under pressure, especially the bigger size diamonds, above 50 cents and 1 carat. And that is leading to certain pressure on the industry, and prices are coming down. Demand is not as much as the supply is. So that's the reason they have decided to withhold and shut down factories for the time being.
Vankar, just want to sort of get your sense, because there's so many moving parts, right? The price itself has gone up, gold price, but then you have the duty cut that's come through as well. Now, as we get into the peak festive season, like for like, and I know it varies a couple of weeks here and there, but I mean, if we go like for like, what is the projection that you're working with? Because even last year, I remember it was quite a bumper season. Now, as we get into festive/wedding, looking at the inherent consumer demand, would you expect flattish growth, build up 5-10%? Just give us something to work with.
Right. So see, it's actually, as you said, there are so many parts to this movement. So say, for example, last quarter, we had a growth of 7.5% in a consolidated way and around 9 to 10% in a retail way. Our aim and objective is to have a 18 to 20% growth. Now, with the first quarter that we have finished off with, I must inform and let you all know that because of the duty cut, we have seen a huge increase in footfalls. And that growth that was kind of slow in terms of top line in the first quarter is being compensated by the sudden increase in growth in the quarter 2, and quarter 3 is anyway a festive season. So we also just had our, the India International Jewelry Show that happens annually every time, where consumers and retailers, not consumers, retailers and manufacturers are all coming together for preparation for the coming season. And there has been a very good demand. So I think that this Q2 and Q3 will be very good. And with our expectations and the objective with which we are working on a growth of 18 to 20% for the year, I think we will all work towards that and try to achieve that target.
That's the top line growth number, right? FY25 top line growth 18 to 20%.
Yes.
All right, so Vankar, let's get a couple of quick numbers out of the way. Studded ratio, what is the recent quarter numbers for last year?
So Q1 because of the slowdown and the fall of diamond volumes, the studded ratio has come down to about 9.5 to 10%. So
and where is that number headed?
And that number, our aim is to take it towards 12.5, 13% for this financial year. So that's how we are working on Q2 and Q3.
All right. Thanks a lot, Suvankar, for joining in. The stock's glittering as we speak, and going by that guidance, 18 to 20% growth. Your shareholders will be quite happy as well. Appreciate you joining in. For the time being, though, we'll slip into a short break. On the other side, we'll get chatting with Jupiter Life Line Hospital. Stay with us.
Okay, welcome back. We're continuing our corporate conversations here, and we're going to sort of move on to the hospital space. We have Ankit Thakur, Chief Executive Officer at Jupiter Life Hospitals, and they're with us now to talk about numbers. Ankit, great to have you with us here. Thank you very much. You've reported a steady set for the first quarter. Occupancy has surged to 64%, and average revenue per occupied bed has also improved. So, Ankit, let's start talking about which of the three hospitals has led to the bulk of the improvement in matrices, and if you can give us a sense for each on both the occupancy and the average revenue per occupied bed.
Right. So, good morning. Thank you for having me. On the occupancy front, yes, on the blended level, we have about 64% this quarter, with Thane and Pune being more matured facilities. Thane is reporting about 70% occupancy in the quarter, with our ARPOB of about 67,000. Pune, we just added some beds last year. We have added 22 more beds on 1st July this year. So it has a little expanded base of capacity. Currently, it is reporting 63% occupancy with around 59,000-60,000 of ARPOBs. And Indore is at 57% occupancy currently, which is our newest facility, about 3 years old, with an ARPOB of 46 or 1,000.
All right. Hi, Amit. Good morning and good to see you in. What's the guidance on ARPOB from here on? You're close to around 60,000. Where is that number headed?
So I think for Thane and Pune, we'll probably just see inflation-linked growth in ARPOBs. Whatever is a good number according to you for inflation, 4, 5, 6, 7, whatever you want to plug in, could be plugged in for Thane and Pune for ARPOB growth. Indore, along with inflation, also has a little bit of scope for increase in ARPOB based on case mix optimization. So Indore should see a little faster growth in ARPOB. Over and above inflation.
Got it. Let's get a couple of crucial numbers from a stock market perspective, since we have understood, the ARPOB as well as the current occupancy. Last year, you grew by 20%. For this year, give and take everything, you're adding some beds as well. The mix is changing. What kind of a growth can you deliver for FY25? Point number one. And I think in the next few years, you're looking at taking the margins up by around 200 to 300 basis points towards around 25%. But for the near term, what should that number look like? Will it stay in this vicinity of 22 to 23%?
So, in terms of margins in hospitals, it is kind of a natural life cycle. It is not that I'm trying to do something or I will pull a rabbit out of my hat. It is an evolutionary process of a new hospital. With Thane and Pune being matured, we believe that a matured hospital should deliver something around 25% of margin. Indore being new and still, kind of not really there, it has a little bit of dilutive effect on the margin. So once Indore also starts, moving into that matured zone category, then even on a blended level, you should see mature margins that is around 25%.
Okay. Got that. So it's a good way to think about it. So let's talk about the new hospitals, right? The Dombivli Hospital. Could you provide us with a status update? And you've acquired land to build another one in Pune. So that'll be the 5th one. What is just a status update there as well?
Yes. So Dombivli, the construction is on. We have pretty much come on the ground level. The basement construction is over, which is about 30% of the building. We are on track as far as construction in Dombivli is concerned, ready to start operations maybe end of next financial year, beginning of the year after. Pune, the land is signed. We are under planning and regulatory approval stage. We believe in the next quarter or two, we should have all the permissions under our belt, and we should be able to begin construction in Pune as well. Both these hospitals are going to be 500-bed hospitals.
500 each, right?
500 each, yes.
Okay. So, and this would be up and running by, what's the timeline?
So end of 26, beginning 27, Dombivli, 1 year after Pune.
Okay. And by then, what would be the total bed capacity?
So once all these are on, then we'll be at 2,200 beds.
Okay, 2,200 beds by once the Dombivli and the Pune hospital are also up and running. We've got, Ankit, just coming to you. We've got the first listing, two listings on your screen, and I think both are looking like good listings. First Cry is listing, and so is Unicommerce eSolutions. The rates will come up on your screen, and we'll have the first sticks. Yeah, they're good listings. 46% on First Cry. Unicommerce, of course, much smaller. I mean, in terms of I think about 1,000 crores or so, and 130% higher. So small issue, but it's a super duper listing. So it's doubled, basically, more than doubled right at the first stick, 250 rupees. And of course, the issue was subscribed in a very large way. First Cry, to maybe some would be a bit of a surprise, that has got a super response as well, which is 50% higher. You'll be able to sort of hear from both the managements during the course of the day. We've, by the way, spoken with them over the last fortnight, but of course without specific numbers. But now today, you'll be able to hear some specific numbers in terms of what the growth, etc., is going to look like for both these companies. So there you have it. Two new listings coming through this morning. Ankit, just to come back to you. So for the full year, F5, just near term, for the full year F525, what kind of top line growth should we expect?
So first quarter, I think we have about 17-18% growth in top line. It seems to be holding on. Yeah, but I think the year should hold on.
Okay, around 17-18% growth for the full year as well. We'll leave it there, Ankit. Good conversation. Thank you very much for joining us here on CNBC TV18. That's Jupiter Life with some perspective on the business and numbers going forward. We'll take a quick commercial. Okay, I think we'll bring in Mitesh now to run us through what the picture on the charts is looking like. Mitesh, welcome back. 20 points lower, neither here nor there. Is there anything to do on the indices, or you'd want to go straight to stocks?
Prashant, what I'm possibly observing on the index or indices is that the Bank Nifty could turn weak again. I think that's the one which is actually moving a bit more than the Nifty, and I'm waiting for a break below 50,000, 250, 50,300 zones. And once that happens, I think then we can look at 50,000 being tested and then maybe lower levels. So the Bank Nifty is the one which I'm keeping a close watch upon. On the stock side, Dixon is a buy. Keep a stop at about levels of 11,750. Look for targets of 12,600 plus. And on the selling side is Dabur. I think, FMCG does look like giving a stronger pullback. So Dabur is a sell on a trading basis with a stop at about 630 for targets of 600.
A cash stock, Stovecraft, the high was in the listing year, which is 2021. I think the high was 1,150. This year so far is, actually this week has been great for the stock. 730-ish on the charts. Does it catch your attention, catch your eye?
In fact, I was scanning it yesterday. The stock started making new highs yesterday, and today there's a good follow-up happening. So the first target should be around 800. If you go back, possibly a little bit in the history, on the 7th to 9th Feb, there is a big gap down around 800, 825 levels. So that should be the first target. We might see some supply and profit booking over there, a breather and a top. But I think eventually it will clear that and head higher. So very, very bullish long-term charts here. But for short-term swing traders, position traders, I think around 800, 820 would be a good zone to take profits.
And, just two other names. Sun TV, Mitesh, down another 3% after yesterday's 10-12% cut, if you want to weigh in. And any of these defense names, I think Cochin Shipyard is down 4. I was highlighting Cochin Shipyard, the recent high 10 days back was almost 3,000. Stocks are about 2,200 now, but again, has had a one-way rally. BDL has been weaker. Some of these defense names, PSU defense names, on the shipping side otherwise. Any thoughts here?
So, Prashant, I think, Sun TV, I think, we had actually a buy-side call which got triggered out below levels of 865, 860. And the fall has been very, very strong in the last 2 days. That is yesterday and today. So I think while there is some pivot support around 780, the stock might actually decline to about 750 zones as well, given the way the force with which the fall has started. So there could be some more declines over here. And on these different stocks, I think, they had an amazing, I think, last few months, and the last 2 weeks we have seen first signs of correction coming into the chart picture over here. So I think Cochin Shipyard, my first target is around 2100 to about 20 on the downside. I think around those levels you might see the stock come down and then consolidate before it makes another attempt to move up. Similarly, Mazgaon Dock, I think once the stock starts breaking below levels of 4800, there could be a bit more decline, and that could be to about levels of 4350 to about 4300.
Okay, all right, Mitesh got that. It's an out and out mid-cap day. The headline index is absolutely flat. It's all about mid-caps. Blue Star is having a good session, 5.5% up. Keynes is seeing buying 5% higher. Inox, Wind, there is absolutely no stopping. It's another 10% on Inox. Electra's numbers were very well received. Electra Green Tech, 11% up on that counter. Lots of things. Gujarat, Pipavav, Senco we've discussed. So, it's a very, very interesting looking and very alive and kicking mid-cap and small-cap screen. That's the market for now. Let's take a break. We'll come back on the other side and actually put some thoughts in and get you a spotlight on some of these buzzing stocks.
Asking if SEBI chairperson would commit to a full, transparent and public investigation into these issues. AMFI, which is also known as Associations of Mutual Funds, has said that they on the recent criticism against SEBI chairperson, stand by her, and it's an attempt to undermine India's market progress, and added that India's financial system, is fostering growth and innovation with high integrity.
Global funds category, international funds which are investing in, whether it's US equities or maybe you even have some greater China funds and whatnot. Now here as well, this category was first taxed at our slab rate, but now it's going to be taxed at 12.5% if the holding period is 2 years or longer. So Mohit, this sounds great. But, correct me if I'm wrong, a lot of funds were not taking any fresh money because of certain limits being hit already.
Yeah.
So is it even possible to invest right now?
It is. Quite a number of funds are accepting fresh investments. Few are accepting only as SIPs, and few are open for both lump sum purchases and SIPs. It depends on the contours of the fund. Funds which are purely ETF based, those are the ones where the limit has got busted, and those are the ones which have stopped. But funds which are actively managing their allocations, perhaps directly investing into stocks or international stocks directly, those are the ones which are typically open. There is a whole list of funds, but I think category as a whole, Surbhi, has got a huge impetus. And needless to say, for an Indian investor, it's absolutely must to have a global diversification. Given the profile of our currency, which has been depreciating against the US dollar for almost last 20 years, if you see the track record, the depreciation has been on an annualized rate around 3 to 3.5%. If you want to counter that, if you want to have a real hedge against the country risk or the sovereign risk, or you just want to create a corpus offshore for your children's education or for anything, let's say, I think this is a great avenue available to retail investors, that you go out and invest in international funds. Again, this category got completely out of investing.
Welcome back. Well, plenty of stocks on the move as we've been telling you. Let's start with the Aarti Industries, which has been reeling under the impact of the management saying that it may not be able to meet its yearly guidance. Sonal's back with us. Sonal, fill us in on the details.
Well, Aarti Industries was one of the companies which saw fourth consecutive quarter of sequential recovery, and there was a hope that it could be one of the first chemical companies to come back to growth prospects after that weakness that the entire sector saw as well. So the street is now surprised by the fact that this is the first company who's saying that they might not be able to meet their guidance that they had given for EBITDA, which was between 1,450 crore rupees to 1,700 crore rupees. They're talking about margin volatility, the impact of Chinese pricing pressure. So that is something which has worried the street. However, they talk about volume growth being at 20 to 30%. They stick to their guidance as they had given earlier. In terms of demand, they say discretionary demand in dyes and pigments that continues to improve. However, agrochemicals demand that will improve only in second half of FY25. In terms of exports, they do have a sizable portion going there. They talk about how higher freight costs could impact volumes in some of the segments that they operate in. So that is another comment which has worried the street. They have a debt of around 3,300 crores right now. They have a capex as well. So it could see a peak debt of around 3,500 to 3,600 crore rupees. Now, brokerages, they are surprised. Morgan Stanley has an equal weight rating with a target price of 615. They say an evolving product mix where they are getting into energy applications as well is driving higher margin volatility versus what the company saw earlier. MK says that they have a buy rating. This is the fourth consecutive quarter of sequential EBITDA recovery, which the street was betting on. But now, because of this uncertainty around margins, they have cut their FY25, FY26 EPS by 11 and 5%. Nuvama is raising the target price, but that's a rollover that they are taking. But agrochemical segment will see a recovery only in the second half. They have a buy rating. Kotak says that it has suspended FY25 guidance because they are acknowledging market volatility. They retain their sell, but they say the guidance that they have going forward is also subject to demand and pricing volatility. So they are also not very sanguine on the stock.
Okay, all right. Thanks a lot for that, Sonal. Well, I'm looking at Hindustan Copper, and the start has been in the green because on a year-on-year basis, the numbers look good. So on the top line, there's a growth of close to around 30%. The EBITDA number has doubled on a quarter-to-quarter, on a year-to-year basis. And on the margin performance, on a sequential basis, it's more or less stable. It's come off a little bit from around that 39.5% odd mark, the margin number. But on a year-on-year basis, it's much better, holding at around 38%. If you compare it, it's with a like-to-like number of around 25%. What caused this big surge in terms of margins towards the upper end of 30%? Well, two factors. One is copper prices on a year-on-year basis are still much higher. The second factor is other expenditure is up only around 8% when you have a top-line growth of more than 30%. So as a percentage of sales, other expenditure is only around 38% in comparison with around 47%. The profit number as well gets a bit of a booster shot because of better operational performance. The problem for Hindustan Copper is that, copper prices have come off in the last 45 days or so. And on a trailing multiple, it trades at around 100 times. There's big scope from here on. The problem is the global space itself has got a little bit nervous. So for the time being, the stock is holding up with a gain of around 3.5% odd.
Okay, all right. So that's Hindustan Copper in focus. With that, we do have to take a quick break. We'll come back on the other side with our special segment, It's the Economy. Lata will get chatting with Harshvardhan of Bain & Company to talk about falling bank deposits and the outlook ahead for the sector.
Last year when the taxation was changed, and now it's come back into reckoning with full power and full force, and I think all investors should definitely look at diversifying abroad.
Your favorite funds here?
Look, many. Honestly, I like the Edelweiss US Technology Fund. I like the DSP Global Innovation Fund. These are all active ones. But on the passive side, I like the NASDAQ fund of funds, which currently the open one is only Motilal. I think they're accepting SIPs out there. So if someone wants to buy NASDAQ directly, I think that's a good avenue to go for.
Welcome to It's the Economy. Indian banks have been fighting hard for deposits. Deposit growth has been lagging loan growth almost since COVID years. In the latest data, as of July 26th, deposits have been growing at 11% while loans are growing at 15.1%. The fight reached a new high in July when a leading private bank like HDFC Bank announced a 7.4% rate for term deposits of 1 to 3 years. Why is there such a crunch and how can the Reserve Bank resolve it? Separately, the government also has announced some amendments to the Banking Acts, which come as a bit of a disappointment because they seem peripheral. How can the government legally make public sector banks more powerful, more equivalent to private banks? For all these questions, I have with me Mr. Harsh Vardhan, the banking expert. Mr. Harsh Vardhan, thank you very much indeed for joining us. Well, first up, the way we understand banking, every time you ask for a loan, the bank actually creates a deposit in your name. So every loan creates its own deposit. Then why is there a gap between loan and deposit growth?
So this is a fairly complicated issue. And, a lot of people are saying, look, because the depositors, people are investing in mutual funds and equity, and that's why that actually is not the reason, because that money still comes, as you are saying, comes back to the banking system, right? So you have to find out where the money leaks from the banking system. And to my mind, there are three main sources. One is increase in currency in circulation, which means the money gets converted into cash and then goes out of the system. So just let me give you some numbers. So between FY22 and FY24, 2 years, in absolute number, credit outstripped deposit by 5.85 trillion. Right, 5.85 lakh crore. Now remember, these growth rates can be misleading because the bases are different.
Yeah.
So you have to look at the absolute number, right?
Yes. Yes.
Now in the same period, the currency in circulation went by 3.33 trillion.
Okay.
Right. Okay. So that explains part of it. It doesn't explain it fully. There are two other reasons to my mind which are a little bit more complicated. One is through the foreign exchange channel, which is that people take money, buy forex, and then the money goes out of the system because they take it overseas. And the third through the government channel, which is, remember, banks also lend significantly to government through buying their bonds. And if the governments don't spend, then that money doesn't come back in the system.
Yes.
So in my view, what has happened in the last couple of years is the number of banks haven't lent enough. Government hasn't borrowed as much as we would have imagined. And secondly, they have not spent it, especially state governments. So all of this creates that delta between the absolute credit growth and the absolute deposit growth. However, from March to July, Lata, it has corrected. So, for example, the absolute credit growth is 3.8 trillion, absolute deposit growth is 7 trillion.
Okay.
However, it has happened the wrong way because what has happened is that credit growth has come down quite sharply.
Okay.
From around 20% in March, April, month on month to about 14% now.
Okay.
So, I think effectively what has happened is this clamor for deposit and shortage of deposit has put a brake on credit growth.
Okay.
That has essentially what has happened in FY25, the first.
Yeah. So, which is not a nice way to bring
credit.
A
nice way. It's not a nice way. See, if you look at the decade of 11 to 20, it was a bad decade for credit. Credit grew at roughly nominal GDP, slightly more than that. If you look at long-term trend, 1960 to 2020, credit growth is 1.4 times nominal GDP growth. Which means if nominal GDP grows at 10%, credit should grow at 14%.
Yeah.
So we seriously undershot that long-term trend.
Okay. Okay.
We were just about picking up after COVID, and now this has happened. So
okay. But Mr. Harsh Vardhan, in your piece to Money Control, you had explained an interesting concept that maybe as a one-time measure, banks should be allowed to raise bonds as deposits.
Not bonds as deposits, as bonds for the purpose of funding.
Funding, okay. Which is, you were distinguishing it from bonds as capital. Banks can issue bonds, but that is as tier 2 capital mostly.
Tier 1 and tier 2, additional tier 1 and additional tier 2. They can also issue infra bonds and green bonds, as a lot of banks are issuing, but they have end use restrictions. You can only lend it to some. So what I was saying is a stopgap arrangement, as long as this, if you don't want to sacrifice credit growth, then you have to allow bank a one-time window to raise resources from bonds. And which are what I call funding bond. They are neither capital bond nor this green infra bond, but they are purely for the purposes of funding. And you can put conditions on them, limit on how much can be issued, which type of banks can issue, etc., etc. That all can be put. But as a one-time source of funding for banks.
Okay. The big difference would be that those will be listed and traded, and therefore you expect, say, corporates and big funds like maybe even mutual funds to invest in them.
Correct. So what I had said is that you make them long term, so at least 3 to 5 years. Secondly, you put some minimum rating threshold, let's say AA and above or A+ and above, so that it becomes attractive to institutional investors like mutual fund, but even pension and insurance, which are large capital.
But Mr. Harshvardhan, it just occurred to me, do you think these will be at a cheaper rate than what HDFC Bank is now issuing? See, 1 to 3 years is going at 7.4, and if a leading bank like HDFC says, I'm giving you 7.4, other banks will be forced to raise their rates. Do you think the so-called bond kind of funding deposit that you're talking about will be any cheaper?
Yeah, so there are 2 points here, Lata. One is that today, if you look at bonds, 70% of bonds issued in India are NBFCs, plus 70% plus.
Yeah.
Today, a AA bond will go at about 9%, 9.25. My sense is that banks will be issued at a lower rate. But even if they are not, I am making also one more suggestion: exempt them from reserves. Otherwise, it effectively increases their cost. Today, deposits attract reserves, right? Because these are long-term instruments, they don't create any short-term liquidity pressure. There is no reason to ask for liquidity reserves on them. In the last year of their maturity, can include them in NDTL. So if you did that, my view is that they will be competitive with deposits, number one. Number two, look, 80% and or 80-85% deposit are 1 year or less in the bank. Banks don't have long-term funding.
They don't have long-term. Yeah.
So I am asking for a long-term funding. So I think this kind of almost structurally augments liquidity with banks. This is not a short-term fix.
Got it.
A lot of people argued about cutting CRR, but that creates short-term liquidity,
Yeah, there is a buzz for cutting liquid CRR, and many are betting that RBI may cut CRR before it cuts rates. But in the latest policy,
I doubt whether banks will use that to create a 3-year, 5-year kind of lending, because it's a short-term liquidity.
Okay, fair enough. Mr. Harshvardhan, the one suggestion which you made and which I checked with some former RBI biggies, that if the bank were to go into liquidation, these funding bonds would behave like deposits. They will be treated as deposits, and they will be given first charge, and the capital bonds and all come later on in seniority. Now, this is something the Reserve Bank ex guys said will be unacceptable to Reserve Bank, because the retail depositor is God. Nobody will be given the same status.
Yeah, but bonds don't have deposit insurance protection. Right? Yeah. They can't be redeemed ahead of maturity. All of this can happen with deposits. Okay. So they are not the same as I am saying only in the unlikely event of liquidation. And now remember, if you put a rating threshold, I mean, what's the real possibility of a AA bank going into liquidation?
That's fair. We thought the same thing of 81 bonds, and one bank had to redeem them, remember?
Yeah, but I'm saying, and secondly, you put overall size limit that you can't issue them more than 2% of your closing NDTL and so on. So.
No, fair point. I mean, I'm just saying that these are this is the kind of opposition you can get from the Reserve Bank.
I feel they are distinct from deposits. Yeah, they are distinct from deposits.
Fair enough. Yeah. They're bonds, they're distinct from deposits, and they will be listed. So that itself is different.
Correct. So there is a secondary market liquidity. Anybody wants to sell, they can, and it will be priced. Yeah.
Okay. Fair enough. Now, the other issue that I wanted to discuss with you, we may not have too much time. The government announced a list of banking amendments, and for a brief period of half an hour, it raised my hope that they would be very big. But as it turned out, they were only small adjustments, like, you can have 4 nominees per account, and, what is called substantial interest of directors. It will be counted as substantial only if they had 2 crore worth of shares in the bank. They seem minor. What would you suggest? I mean, we didn't get any banking reform in the past 10 years from the government. All that they have attempted is to sell IDBI Bank stake, and even that is taking an inordinately long time. What would your ask be to empower public sector banks in particular?
Yeah, so I'll have 2 big asks. First is to convert them into company law companies, because that downstream has a lot of other benefits, which we can discuss. This has been in the PJNI committee report. Many other committees have recommended that. And the second one I would say is to lift this limit on foreign ownership of public sector bank And the reason for that is, look, all of these banks have had their stock rally. This is a good time for government to bring down their own share. They can raise a lot of resources. But for that, you'll have to create enough depth in the market. So that, you know, there are foreign pools that might be interested in buying them. Right now, somebody might comment that FIIs are owning less than what they are allowed, but I think it's probably a good idea to just signal that we are welcoming of higher foreign ownership. So I think those two reforms, to my mind, are relatively easy to do. The first one is a bit complicated, the Company Act conversion.
Yeah, but what benefit will bringing it under Companies Act give? Because if you brought the banks away from the takeover of banking undertakings, or what was the Bank Nationalization Act, and bring it under Companies Act, even then the government will be owning whatever 80-90% in those banks, at least as of now, or at least over 70% in about 5 or 6 of them. They will still be subject to CVC and CAG because of the huge government stake. So what benefit?
So I'll give you a very simple example. Today, if a bank has to undergo change of control, it has to go to Parliament. There is no provision of merger and acquisition within the Nationalization Act. So even if government has to do further merger of bank, each of those cases goes to Parliament for ratification. A Companies Act provides a very neat process, as all other companies follow. That's a simple example of how this can help. Secondly, my view is that once it comes under company law and has all company law directives on composition of board, the board functioning, it will improve the governance of these. Which is one of the reasons why Nayak Committee had actually made that recommendation. So there are actually many benefits. I can understand why the government would not want to do it, or the bureaucracy, because the current act actually privileges the government as a majority owner in serious ways. Way more than Company Act will privilege a private sector owner of a private company.
Okay, like what?
And nobody will want to give up those privileges. So I think
an example, please.
Well, there is a innocuous sounding line in the Nationalization Act which says that the government can formulate schemes. We have seen many examples of schemes, and those then have to be followed by public sector banks as a part of law, as a part of their compliance with the law. Now, this is a very enormous power that the government has, right? We have seen many schemes right from Jan Dhan to Mudra. I'm not criticizing the schemes, but I'm saying that ability to formulate schemes is a very strong instrument that the government has with respect to these banks.
Oh, right. Well, then that requires a full-scale discussion, because the government will not be willing to give up that kind of power.
Exactly. So what I'm trying to say, I can understand why people in the government will be very reluctant to do so.
But clearly,
but if you worry about governance, if you worry about the structure of the sector, then this is a good thing to do.
Absolutely, sir. Out of time, but we should take this discussion up on a later date. After all, the government in the budget also promised some major financial sector reforms, preparing India for, Viksit Bharat in 2047. We should at least begin with introducing governance in public sector banks. So this discussion, sir, for another day. Unfortunately, out of time.
Thank you. Thanks for your time.
Thank you very much for this discussion on what can improve banking and this special scheme for bank deposits. That's it on this edition of It's the Economy. After a break, Chartbusters.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
HDFC Bank is down more than 2% and is the top Nifty loser after the latest MSCI rejig indicates that the bank will see an increase in the foreign inclusion factor in 2 tranches in the global standard index.
The industry slides after the management says that they will revisit their EBITDA guidance due to volatility in margin and pressure from China. However, brokerage firms MK and Nuvama, they maintain their bullish stance on the stock. MK issues a buy call while Nuvama raises its target price to 903 rupees a share.
Shares of Marico climb after the company reports manufacturing operations in Bangladesh have resumed at normal scale.
Hindustan Copper is up close to around 3.5% after the company reports a good set of numbers in the first quarter. The margin's near 40% as there's a sharp drop in cost which aids margin expansion.
Inox Wind zooms nearly 9% after the company has bagged a 51 megawatt equipment supply order from Renew.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Join me as always is Mangalam Balu. As you could see, all the indices are currently trading in the red. The problem today for the Nifty as well as the Nifty Bank is big boy HDFC Bank. The overnight queue coming in from MSCI was not as much as what the bulls expected. So HDFC Bank, well, that's the biggest drag in today's trading session, both on the Nifty as well as the Nifty Bank. Hey, Mangalam.
Take that point, Nigel, and that will also be the stock which will be in focus in the second half of trade because we have the financial services expiry today. And thereafter, we also have, both the Nifty as well as the Nifty Bank expiry tomorrow, largely because on Thursday is a holiday. Nevertheless, we are seeing some traction in a bunch of names, which are moving higher. Titan, for instance, is among the top gainers on the Nifty at the high point. Infosys did well in yesterday's trading session, holding well in the green right now as well. And alongside that, we do have a bunch of other stocks from the broader markets, which, are doing slightly better. So we have Balrampur Chini, it's higher. We had the management join us an hour ago. Alchem Labs is the other one which is doing well. And IGL along with Dixon Tech 2 is in the green. Apart from all of that, we have a bunch of cash market stocks as well, which are surging. Olectra Green Tech, for instance, the kind of up move that we've seen in Ola Electric. Maybe the street is looking at Olectra Green Tech as well as one of the plays in that space. So that's stock is up around 12%. Inox Wind, after gaining nearly 20% yesterday, another order coming by, that stock sitting with a gain of almost 8%. But while the gaining stocks are kept on one side, we do have a bunch of stocks which are declining, and the number of stocks which are declining are slightly more than the number of stocks which are advancing. So we'll keep an eye out on that. As of now, the frontline indices at the low point of trade.
That's right. I think we should get a contribution chart, Mangalam. That'll tell us a better picture with regard to the way HDFC Bank actually is dragging today's trading session, because it's down close to around 3%. My guess is that close to around 70-80% of actually today's fall on the Nifty will be accounted for HDFC Bank itself. So that should come up for you on the screen as well. But stocks that are doing well, you have Hero MotoCorp that's up 1.5%, Apollo Hospitals as well as higher. The problem is that both these two, they're lighter weights on the index. At some point of time, we'll get that contribution chart as well. But I think, Mangalam, we have a couple of IPOs that listed today. So let's get to a couple of those managements.
Yeah, let's try and get to the managements of both Unicommerce as well as Brainbees. So just trying to figure out whether the management's connected with us as of now or not, but maybe just shortly we will see that. Just looking at Sun TV once again, Nigel, yesterday the stock was down almost 10-11%. The margin contraction is something that the street did not like, and as a result of which we saw a big decline. And now as well as we speak, Sun TV is down close to around 3.5-4% making this week's cuts itself down to about 15%. Let's see at what point we get some sort of buying on Sun TV, because you do have those triggers of the IPL, etc., playing out, the IPL team playing out too. But as promised, let's get to the managements of the IPOs that have now listed, the stocks that have listed. It is online retail software services provider Unicommerce has seen a stellar debut on the exchanges, listing with over 100% premium to its issue price, doubling from its issue price itself. Kunal Balu, who's the promoter and non-executive director of the company, joins in to discuss the company's post-listing plans. Kunal, first up, congratulations. It's been a stellar listing. And, on a day where the markets are slightly wobbly, there have been a fair amount of takers for your IPO as well. But now with this solid listing that has happened, as they say in Superman, right? With great power comes great responsibility. We can say that for you as well. Great market cap comes great responsibility. We've got your numbers for the last 3 financial years. Now we're in the middle of FY25. How has the first half of this financial year been for you in terms of revenue as well as margins? If you could give us a directional sense. And what kind of growth are we likely to see for this year?
Firstly, thank you for having me on. And it's obviously a very humbling moment for all of us and our teams at Unicommerce. These are things you don't plan for or expect, but when they happen, you can only feel grateful. Unicommerce is a market leader in the e-commerce enablement SaaS space. So we serve 3,500 businesses that sell online. These could be digital native brands or digital migrant brands, traditional brands that have decided to grow their businesses online. And just to give you perspective, today India is at 4 to 5 billion e-commerce shipments, and China is at 150 billion e-commerce shipments. And that's the headroom left to grow for e-commerce in India. And given we are more of a picks and shovels company, where we are providing software to run their businesses at the back end, warehouse management software, inventory management software, and similar other softwares, as the volumes in e-commerce grow, we would anticipate that Unicommerce would be an index to that growth. Last 3 years have been good. We've been growing consistently at about a 35% CAGR. Obviously the growth is not consistently 35 every year, because COVID years were high growth years, and then the growth has started tapering out last year, and we saw obviously a slower year last year in the overall e-commerce shipments. On a going forward basis, we anticipate that the e-commerce shipments in India will grow at about 25% a year on a CAGR basis. And historically, Unicommerce has delivered, an e-commerce market growth plus growth. But we've also been profitable, given it's a pure software company. We don't do any operations. We don't, manage warehouses physically. We manage them virtually using our software. And our software is priced on a per unit basis. So as the volumes grow, the monetization for Unicommerce grows.
All right. Hi, Kunal. First of all, congratulations. Solid listing. It tells you the kind of potential that shareholders see. But now delivery, as my colleague Mangalam said, is going to be crucial. So let's get to a couple of numbers. 25% is your estimate, I think, of the industry. And as you said, you have been delivering industry-leading growth. So should we presume that you will do better than 25% revenue growth for this year? And margins for the past year were close to around 13%. But there'll be an element of operating leverage as well that plays out. So where do you see this margin headed? Mid-teens in the coming year?
Sure. So thanks again. Look, we are only about 4 months into this year. We are seeing a slight upswing in the volumes from last year. However, we are not yet seeing the significant surge in growth we had seen 2-3 years ago. But we are not particularly perturbed about short-term volume growth in e-commerce, because at least the long-term story we are very, very clear is highly intact for e-commerce volume growth in India, which is really what Unicommerce's main engine for growth is. So if, for instance, this year the e-commerce growth is 10%, 12%, 15%, we should ideally be growing faster than that. But to the point of operating leverage, which is a very important one, it's an integral part of this business because our fixed costs actually don't grow with scale. In fact, our fixed costs as a percentage of our revenue have been dropping. We do anticipate that a significant part of the incremental revenue growth we will see this year, as was the case last year, will grow into the bottom line and ensure that we are continuing to grow our margins. So yes, last year our PAT actually doubled from FY23 to FY24, and our anticipation would be that we would continue to grow the profit even this year.
All right. So Kunal, so far what we've understood of your business and what you've told us as well, it seems like there are three major levers to drive your revenue growth. One would be the inherent e-commerce volumes itself. Second would be you adding more clients to your portfolio. And third would be you expanding the scope of services that you give to your clients as well. And obviously the fourth will be the pricing power as well. All these four factors driving your revenues going forward. Could you give us a sense of, if, say, the e-commerce industry grows at a certain percentage, how much higher over that can you grow? And if you could give us a sense of the kind of client additions we're targeting, the kind of service expansion that you're targeting, and the price growth as well.
Right, absolutely. So, look, historically we've grown, give or take, about 500 basis points higher than e-commerce volume growth. So, for instance, in FY24, we believe that the volume growth was in the 8, 9, 10% range, and our revenues grew 15% plus in FY24. So, and historically also during COVID, when e-commerce was growing at 30, 35%, we actually grew 50%. But, there were too many extraordinary things about COVID that we don't anticipate that we can beat the market that much on an ongoing basis. We will try, but, obviously it's hard to pull that off again and again. Your levers are actually absolutely well identified. One of the biggest levers for us is obviously e-commerce volume growth, which we mentioned already. But in addition to that, there are many other things, many other levers in this business. One is new products. We've launched 2 new products in the last few months, and we are now in the journey of scaling them up. Because as we are realizing that the these e-commerce brands or brands who are selling on e-commerce are growing in size, the complexity in their businesses is growing very dramatically. And as the complexity grows, they can no longer work on a spreadsheet. They need software. And we ourselves are getting surprised at how quickly some of these businesses are growing and how complicated their businesses are becoming. And so it's really incumbent on our humility and our creativity as a company to go listen to these customers and understand what else do they need in terms of software products that we can build. And once we build a product, we actually go sell it to all our customers, the thousands of customers that we have, because we don't do any custom software, etc. It's a productized setup. We are also obviously in international markets, a lever that you did not mention. We are currently in 6 countries total, mostly in the Middle East and Southeast Asia. We currently have some good customers there, like Landmark Group and others. However, we will anticipate that in the future we want to sign up more customers in these markets. Right. Here, obviously the realizations are better, and the product is already built out. Got it. So the incremental profit growth from those markets can be significant.
Take that point, Kunal. Once again, congratulations. It's been a great listing. You've drawn open the growth programs for us. The street will now wait on the deliverance of the same as well. That's about Unicommerce. We'll take a short break. In fact, before we take that short break, let's get you an idea for profit coming in from our colleagues at Money Control Pro. Today we have Khushbu Rai Gupta joining in with the stock that she's been tracking.
Today's idea for profit is Emami. The company has reported healthy earnings from 2 consequent quarters, backed by largest presence in the rural areas as compared to the peers. The summer-centric portfolio, including Navratna range and Dermicool, led to high single-digit volume growth in the June quarter due to continued rural demand recovery and favorable weather conditions. In the healthcare category, the growth is expected to improve, and the Zanducare brand should be a winner given Emami's leadership position and an unmatched product efficacy. The management has guided for top-line growth in the high single-digit, led by mid-single-digit volume growth in the coming quarters. We are of the opinion that continued focus on the core portfolio and the scaling up of newly acquired businesses and other premium D2C brand will aid growth and margins in the coming period. The stock is trading at a PE multiple of 35 times FY26 estimated earnings, and given Emami's presence in the niche personal care categories with low penetration makes the stock a long-term investment case.
Okay, all right. Thanks a lot for that. Well, for the time being, we'll slip into a short break. On the other side, we'll get chatting with Supam Maheshwari, who's the MD and CEO of BrainBee Solution, which is First Cry. Stay with us.
There has been a demand now in the public space for a while that the entire Hindenburg saga needs to be investigated properly by a joint parliamentary committee. And so therefore it would be in the fitness of things that if a joint parliamentary committee is constituted to go into all these issues at length, because they do require a quietus, and a quietus will only come once a joint parliamentary committee has looked at them.
हम मांग कर रहे हैं कि इन्वेस्टिगेशन होना चाहिए, फ्री एंड फेयर इन्वेस्टिगेशन होना चाहिए, और ख़ास करके जो ये पूरा मोडस ऑपरेंडाई है कि सेबी शांत रहा, सेबी ने ठीक से इन्वेस्टिगेशन नहीं की, अडानी समूह को लेकर कैसे उनका इनडायरेक्ट वहाँ पे इंटरेस्ट थे, तो ये जो इंटरेस्ट लिंक्ड हैं, जो क्विड को प्रो कोट है, उसकी जांच होनी चाहिए, उसका इन्वेस्टिगेशन होना चाहिए, और हम ये और पुरजोर तरीके से मांग करेंगे कि सिर्फ सुप्रीम कोर्ट ही नहीं, पार्लियामेंट में भी इसकी जांच होनी चाहिए।
कंपनियों और विदेशी संस्थानों के साथ आपका कौन सा ये रिश्ता पुराना है कि भारत के आर्थिक जगत के हर संस्थान के ऊपर आपका लगता निशाना है? और मैं स्पष्ट करना चाहता हूं, आज तक कांग्रेस और इन्होंने कभी किसी विदेशी कंपनी के खिलाफ कोई बयान और आंदोलन नहीं किया। हम जब विपक्ष में थे तो स्वदेशी आंदोलन हम करते थे, और जब हम सत्ता में आए तो मोदी जी की सरकार ने मेक इन इंडिया किया। अर्थात हम भारत की अपनी आर्थिक आत्मनिर्भरता को मजबूत करने के लिए प्रतिबद्ध हैं, और ये भारत के अंदर आर्थिक अराजकता लगाने के षड्यंत्र में लगे हुए हैं।
Welcome back. Dips on the mid-cap end have been bought into. Now the mid-cap index has moved mildly into the green. The Nifty too has pared some of its losses, holding above that 24,300 mark. A wee bit of an improvement from the time when we started the show right now. The mid-cap index should come a few. That's seen more green than the other indices. So the mid-cap index is now moved into the green by about 85 odd points. Apart from the broader markets, apart from the big F&O stocks, we have a lot of other stocks from the broader markets doing well too. And one of them stands out is the dairy sector on the whole. So we've seen decent traction come by on names like Dodla Dairy and Parag Milk in yesterday's trading session. Giving it company today is Hatsun Agro. Hatsun Agro is actually the one which was in the red for most part of today's trading session, but now has moved to the high point of trade. And Parag Milk, of course, has increased its gains from what it saw yesterday as well. So 4.5% up move is what we're seeing out there. Apart from that, we're also seeing some traction in CCL products, reported good numbers, so that stock too has moved higher. And Shoppers Stop is the one which also has been seeing some traction. Before we slip into that short break, just pull up the intraday chart of Bikaji and also a monthly chart. There's something up on Bikaji for sure. Every dip is being bought into out there. This week it's up around 6%. This month it's up around 20%. And from the start of this year itself, it's seen a gain of almost 60 odd percent. So we'll keep an eye out on this one as we go along too. Take a short break, come back on the other side. We'll get you the management of First Cry, BrainBee Solutions. The listing happened today. The management joins us.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18.
Welcome back. Well, Brainbees Solution, which runs India's largest multi-channel mother and baby product retail platform, First Cry, has also seen a strong debut. It's listed at a 40% premium to its issue price. We have with us Mr. Supam Maheshwari, who is the Managing Director as well as the CEO of Brainbees. Hi, Supam. Good morning and congratulations. Solid listing. Your shareholders will be pleased to see the kind of listing gains that they're seeing. But now it's all on business, right? So let's focus on that. As you've mentioned in the past, the industry is expected to grow by close to around 20%. What kind of growth can you deliver for the company in the coming fiscal? Point number one. Point number two is on margins, you have been doing close to around 7 to 8% margins. When do you see this number headed to double digits?
So look, you rightly picked up. If you look at our business, Mangalam, we are operating out of a $120 billion TAM. In India, multi-channel is going to be $66 billion by FY29. Yes, the market is only 16% organized, which is growing at a 20% CAGR. Being the largest multi-channel retail shopping destination for mothers, baby and kids, we should be the largest beneficiary. And if you look at our past record, we have grown at a CAGR of 20% plus in our India multi-channel. And we should continue to demonstrate going forward, given the industry itself is growing at that. So that's how I would put it.
Okay, all right.
And we have all the modes that we have created for that.
Yeah, Supam, so we've got it in terms of growth. You're expecting industry to grow 20-25%, and you will be outgrowing in the industry, to extrapolate what you said. But in margins, I'm just noticing it, you're roughly at around 4.5% margins. By when do you get to around 7 to 8% and then to double digits? Give us timelines.
So look, if you look at our overall, you're referring to console margins, if you look at our journey, we were at 1.5% in FY23. We grew to 4.2% in FY24. So that's a meaningful jump that we have taken in just 12 months. And with our global bees business becoming profitable, India multi-channel growing from 5.9% adjusted EBITDA in FY22 to 8.8% in FY24. That's also a very meaningful jump. And likewise, our international business has been able to improve our profile in terms of the negative EBITDA, because just the journey that we have started 2 years back in Saudi. With all of these businesses that we are demonstrating, and our small business on preschool also delivers close to around 18% adjusted EBITDA, close to which was negative in FY23. So with all of these four segments delivering meaningful expansion on bottom line, and we should be able to demonstrate at a console level as well going forward.
All right. Supam, I just wanted to know one thing from you. You have been raising these funds to add your own store network. Now, typically, a large part of your store network is franchised. With your own stores, you will have better margins, right? Could you tell us the differential between margins that you get from the franchise business from your own stores, and how is this mix likely to change, say, 1 to 2 years from now, once all your 350 stores are on stream?
So today we have this ratio of 1,000 plus stores into 60-40. 60% is franchisee owned, franchisee operated. We have been running with almost close to hundreds of franchisees, business partners that have trusted us for so many years, and even more than a decade, some of them. So we will continue to build on that, while our journey of Coco, which is company owned, company operated, started somewhere close to FY29, when the percentage ratio was less than 10% of our Coco stores in FY21, and in FY24 it has become close to around 40%. So over a period of time, we will, while as per our RHP, if you will read, we are going to open 350 Coco stores in next 2 years, while our journey for FOFO also will continue to grow along as we have done in past. So the ratio will not materially change, but it will keep getting in the similar direction as what we have demonstrated in the last 3 to 4 years.
Okay, all right. Supam, what is the expected investment and growth in the preschool business from here on?
So there is no investment in that business. It's an asset-light business, Mangalam. It is business partners that we work with. We have already 200 plus preschools in the country. This business is started very, post-COVID incidentally, because in the COVID everything was shut. So in last 2.5 years, today we have 200 plus preschools. Last year we grew 50% year on year. If you look at our FY24 or FY23, and from a profitability standpoint, FY23 was negative. And FY24, we have already delivered 17.5% EBITDA in the preschool business. So this will only continue to compound as we grow along, because it's a totally asset-light business. There is no investment per se on any capex or opex incrementally from our side.
All right, one was wondering what the synergies between this and your core business would be out there. But thanks for explaining. Short on time, today was a day for your company shareholders to celebrate with the 40% uptick that we've seen on the issue price. But, we'll speak to you once you report your results for the first half of this year and thereafter get better direction on the numbers of the company. Thank you so much for joining in, Supam. That was the management of Brainbees Solutions, another stock that was a big lister in today's trading session. Take a short break, come back. On the other side, we have the team of Trading Gar taking forward the market action.
Live 24/7 on YouTube.
So how can a patient distinguish between a migraine or any other type of headache? And there are many types of headaches, such as tension headaches or cluster headaches, or brought on by other conditions as well.
Yes, the common headaches with which migraine can get confused are what is known as tension headaches, the sinusitis-related headaches, and much rarer are what you mentioned, cluster headache and new daily persistent headaches. Now, migraine is easy to recognize if you know the features, because as you have already mentioned, these are recurrent headaches which are associated with sometimes nausea, vomiting, inability to tolerate light, sound, sometimes smells, and they are highly disabling. The patient may not be able to function for almost 24 hours or even more. And there is a positive family history of not the same severity, but some recurrent headaches. Now, as against this, when you look at the other headaches, tension headache, they are more or less what we talk about them as featureless headaches. They are not associated with nausea, vomiting, disability, and they don't have trigger links so clear-cut as in migraine. Okay. And then when you come to cluster headaches, they are more always on the same side, accompanied by watering of the eyes, running nose, and they don't have trigger links too. So it is not difficult, and the commonest mistake which patients make on their own is to think that all recurrent headaches are due to a refractive error in the eye, and they go for an eye check to the ophthalmologist. They may have a small number, but they have to remember that if there are trigger-linked headaches, that eye problem is not the cause of their headache, and they have to seek correct medical opinion.
Okay.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech,
From mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were.
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonal Bhutra, and it's a mildly lower start this Tuesday morning. The Nifty and the Sensex down close to about 0.2%, but the Nifty is holding on to that 24,300. And the single reason for the fall today is HDFC Bank. The heavyweight has a weightage of more than 11% on the Nifty. HDFC Bank right now is down 3.3%, and single-handedly it's taking away close to about 90 points on the Nifty. If it wasn't for that, we would have been in the green. The Midcap Index, though, is holding up with a marginal advantage.
It's very stock specific today. We are tracking market levels, but that's not saying much, because in the broader end, we are towards the fag end of the earnings season, so we are getting in commentary, we are getting in numbers. And Reema spoke about HDFC Bank, of course, that MSCI inclusion, it has gone the other way. The expectation was that it could lead to some green on HDFC Bank. Maybe markets would have been higher, but that is not something that has happened. In fact, it's a steeper fall today. A couple of names that I am looking at is from the chemical space, because Aarti Industries, after being unsure of their guidance, has led to the entire chemicals pack being under pressure today. So Aarti Industries, that one is down 15% now. That's a big cut on the stock. We'll of course discuss it in greater detail, but following suit is Naveen Fluorine, you have Jubilant Ingrevia. These are the names from the chemicals industry where the commentary was decent, but now when Aarti says that maybe demand could be impacted, there's margin volatility, is something that has had the street very worried. Midcaps doing well, 118 points higher there, and some of the earnings from the previous few days, they are seeing reactions even now. So something like an Inox win, strong commentary, strong numbers, 7% higher. You have something like a Gulf Oil reported strong numbers last week, but that continues its up move. So that stock is up 6%. You have other names, Aurobindo Pharma, for instance, is up 3%. So as I said, it's a very, very stock-specific market today, and that is something we'll be tracking closely.
Indeed, even RateGain, a stock which reported numbers yesterday, it was down, I think, 1.5–2% by the close of trade, a 20%, 21% top line growth, but the stock today as well has seen a cut of close to about 2.5%. Sun TV continues to come under pressure this week. Yesterday and today, it's lost a fair bit, 14% over the span of 2 days, so that's another stock. Ola Electric continues to shine in trade, 20% on Friday, 20% on Monday, and today it's up 9% and holding on tightly to all its gains. Inox Wind is another big mover. In a span of 2 days, this stock is up 28%. So that's another standout mover. In terms of the frontline action, we spoke about HDFC Bank, but outside of that, life insurance companies like HDFC Life, SBI Life have taken a bit of a hit. BPCL is down 2%. That's the second biggest Nifty loser after HDFC Bank. You've got cuts in Shriram Finance, 1.5% gone. On the way up, bit of a defensive tilt, you would say. Apollo Hospitals, Britannia in the green with gains of more than 1%. Hero MotoCorp stands out with a 1.25%. And then you've got some of the private sector banks like IndusInd Bank, Axis Bank. They're managing to hold up in the green. And Bharti Airtel, where that mega deal took place, big outbound FDI by India with Bharti Enterprises, Sunil Bharti Mittal owned, Bharti Enterprises acquiring a near 25% stake in British Telecom. That's Britain's marquee telecom company. That stock is up today. But let's move on to Happiest Minds. That's the mid-cap IT company which reported numbers yesterday. Constant currency revenue growth of 11.4% on a quarter-on-quarter basis. Profits, though, have declined. But remember, there was an exceptional loss of 13 crore in the prior quarter. To talk about the company's Q1 numbers, we have with us the MD and CFO, Venkat Raman Narayan, along with that, the Executive Vice Chairman and the CEO of Product and Digital Engineering Services, Joseph Anantharaju, joining in. Gentlemen, thank you very much for joining in. This is Reema here. Venkat, first question, revenue growth of 11.4%. Can you tell us what the organic revenue growth was? Because the top line has been boosted by the two acquisitions that you've done.
We've covered our performance very well in those 3-4 sentences. But we don't call out our revenue growth organic and inorganic because it becomes quite complex. We have now 3-4 entities which have come through acquisitions and they track on their own. Quite a bit of effort that we put on our organic side growth heads towards those other organizations. So suffice to say, we talk only about consolidated growth. And we have put up a very good show, 17.8% growth year over year in constant currency, and similar growth of 11.4% quarter over quarter.
What about your full year guidance of 35 to 40% on revenues and EBITDA margins of 22 to 24%? Do you maintain it?
There is a small correction, if I should say. 35 to 40 was on the basis that I would get the full year impact on account of these two acquisitions of Pure Software and Reyes. But now that we have only got 40 days and 38 days respectively, we would be, that's now stands corrected to 30 to 35% is what we'll do for the current year, is what we are forecasting. I'm being a little careful with the use of the word guidance because, we are still coming to grips with the consolidated numbers as we speak. But 30 to 35 is a fair number for us to target for this year.
And what happens with margins?
Margins is 20 to 22%. Which is, there is no change. I did say that when we were having the conference after the acquisitions, and we have reported 23.9%.
Okay. All right. Let me get in Joseph in the conversation as well. What is the demand environment like right now? You've seen negative growth in travel and manufacturing this quarter. You're talking about a 30 to 35% revenue growth this time. What will this be led by?
If you look at it, most of the verticals have grown on a quarter-on-quarter basis organically, and some of them have grown at a pretty good pace, upper single digits. The vertical I'd like to call out is EdTech, which has been flattish on an absolute term the last 2 quarters, but it's shown a growth of 6.6%. The manufacturing, which is where you see quite a bit of drop on a quarter-on-quarter basis, there are 2 reasons for that. The first reason actually is more of a restatement. 2 of the accounts that we had pretty decent sized accounts in the manufacturing vertical. They started with more of manufacturing, but their actual alignment, one of them is with high-tech consumer electronics and the other one is with industrial. So we did a restatement of both of those. The other reason being a couple of large engagements that we had in the with 2 large Indian-based auto manufacturers. They've come to an end, and there's a little bit of a gap before we finalize the requirements for the second phase. This is what has led to the drop. My sense is that next quarter, when we report Q2 earnings, this should have got regularized on a quarter-on-quarter basis. We should start seeing a growth. At a macro level, if you look at the demand environment, I think it continues. Customers continue to be cautious in how they spend, and the focus is more on short and medium term initiatives that contribute to revenue growth or are able to optimize on costs. And therefore, our ability to quickly to identify these priorities and align with them has been very critical. And here, the verticalization that we did announced and which went into effect on 1st April has helped us out immensely, because delivery, sales, and domain have come together, and there's much more collaboration, knowledge sharing, and a joint sense of ownership of the customer, which has led us to align ourselves better, and that is reflected in some of the growth that Venkat talked about.
This BFSI growth, more than 60% on a quarter-on-quarter basis, is it purely on account of the acquisition, or even organically you are seeing growth come back in BFSI? And what is the outlook, Joseph?
So I think we did see some growth organically, but most of the growth has, as you rightly pointed out, Rima, has come through acquisition. Pure Software is focused. The largest vertical is banking and financial services. And Aureus is oriented more towards insurance. So between the 2 of them, they round out our BFSI story, and they've contributed to the huge jump that you see in the BFSI space. If you look at it across PureSoft, Aureus, and Happiest Minds, what we are seeing is that by and large, the spend is holding. A couple of customers have deferred their investments or their projects, second phase of their project, into the next quarter. But I would say that it's much better than what it was last year. And we are seeing pockets of growth. And again, here, you have to we have to again figure out what are the initiatives that are going to get funded, and quickly align ourselves to those initiatives. And that's going to be the key, I feel, for getting growth in the next 6 months.
So this project deferral is only in BFSI, or is it across other sectors too?
See, what we've seen is that it's very dependent on customers. I wouldn't actually
for you?
Put a sector.
No, for you, which customers have deferred their projects? You spoke about BFSI, but any, yeah.
And then in the manufacturing space, there's a break that I talked about. But that should come back, I think, by end of this quarter, and you will see that getting reflected in the next quarter's numbers. And with media entertainment, one of our larger customers had put a hold on some of their requirements, but they've started opening it up now. So we should see that coming into play in Q3 of our fiscal year.
Okay. Venkatraman, now that we are talking about an improvement in coming quarters, the deferrals also seeing a reversal. The average annual revenue per active customer is around $840,000. You've seen a growth of 5.5% on a sequential basis. When does it hit that $1 million mark? And is there any contribution that you saw from the generative AI business unit this time?
I think you're hitting all the right buttons. $840,000 per customer is absolutely a number that we want to talk about. Our $1 million customers has gone up from 48 to 58. Our average revenue, our customer revenue concentration has slightly trended down. And like Joseph talked about, we are now nicely splitting our, business amongst the domains of BFSI, healthcare, and edutech. So these are the strengths that we are seeing in the business coming out of both organic growth and also the acquisitions. Touching $1 million is that target, because somebody did ask me earlier, how many customers do you envisage when you touch the $1 billion mark? But my take would be that would be somewhere around 600 numbers, active number of customers, and with about 1.5 million per customer. So if you have that kind of a number and a metric to track on, that's a target that we have taken upon ourselves to reach by 2031. But right now those are back of the envelope calculations. Coming to generative AI, we have been one of the only very few companies who have actually started reporting it as a separate BU. This is what we have done. We have generated $855,000 of revenue this quarter, 20 POCs, customer connects contracts as we speak, with 55 conversations happening. 1.5% is the revenue that we are tracking on that BU. Now, when we look at the financials, there are things that get hidden. For example, the investment that we are making into this new BU, that's about $1.5 million. So my EBITDA of 23.9% or 24% that we are reporting is after the investment we have made into new BU, the investment we are making into the consolidation play of the earlier BU of PES and DBS, growing into new customers, and also we have hired a new sales head. Those investments will start hopefully paying dividends from the next quarter. So the numbers speak only so much, but fundamentally we are on a strong wicket right now with a little bit of a turnaround in the market that we are all expecting to happen in Q2, Q3. I think we should be on the upswing.
Okay, all right, gentlemen, thank you so much for joining us today and giving us those insights. So that's the word coming in from Happiest Minds, looking at a revenue growth of 30 to 35% and margins as they had guided for earlier. Time for a short break. Management of Kaveri Seed Company will join us next to discuss their Q1 numbers and the way forward. Stay tuned for that. Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
Finance Minister Nirmala Sitharaman.
Welcome back. Well, some pressure on Nifty right now. It's down 41 points. Of course, not a big cut, but it has come off from those highs. And Nifty Bank is the one which is down around 300 points. As we've been mentioning, it's courtesy HDFC Bank. A lot of movers in the markets. Balrampur Chini, for instance, we spoke to the management today. The company reported numbers during market hours yesterday. It was a good set, and today it's seeing gains of around 5% as we speak. Exide is the other one which is at the day's high right now. So a lot of these names from the broader markets which you should keep on your radar. We have IDFC First Bank, which is high right now, Bank of Baroda. So some of these banks doing well. So majority of this pressure is coming in from HDFC Bank as we speak. But as promised, let's get in the conversation with Kaveri Seed. It is in focus. The company reported a slight miss in its quarter 1 numbers. Revenue growth came in at 9% on a YY basis, but EBITDA margins contracted from 37.7% to 36.8%. The export business sales increased by over 400% in the year. C. Mithun Chand, the Executive Director of the company, is joining us now. Mithun, good morning. Thank you so much for joining us. Well, it's been a decent revenue growth, but margins have come in under pressure despite that growth. What has led to this, and what is the guidance for FY25 that you have in terms of revenue growth and margins?
Morning. This year was really very tough year, both in terms of the production, in terms of the sale, and in terms of the cropping pattern. If you see the mix of the entire sale, we were down in cotton by more than 25%. In spite we are down in cotton by more than 25%, we were able to pull out that 5% revenue growth this year, as we have done exceedingly well in both the crops like maize and rice. In maize, we have grown by more than 70% on a quarter-on-quarter basis, and in rice, close to 25% on a quarter-on-quarter basis. If you see as a standalone basis, our margins have marginally improved, including the EBITDA margins have marginally improved. But when you see as a consolidated basis, the margins looks like slightly down by 2 to 3% because the majority of the subsidiaries we sell cotton. This year, cotton, we had a very tough time in terms of the production. The production cost was up by more than 100 rupees a packet, and we were not able to realize much money from the market. So that's the reason you see a slight dip in the consolidated sale. But if you see as an overall picture, we have done exceedingly well when compared to the industry. All the cropping, if you see the cotton across India, it was down by more than 10%, and in the states where we were pretty strong, it was down by more than 20%. So that's a slight impact what we have done.
Just a follow-up on that, quarter 1 is usually your strongest year, right? And you're talking about some pressures that you've seen in quarter 1 itself. What does it do for the rest of the financial year? What are you targeting in terms of revenue growth, volume growth maybe in maize and cotton, and margins that you will work with?
Basically, majority of the quarter's sale comes in the first quarter. First quarter is like more than 80% of the revenue, 70 to 80% of the revenue, and more than 90% comes in the first quarter. 90% of the profit comes in the first quarter. So 2, 3, 4 are lean quarters, but we are pretty confident that we'll do better than the last year. And second half, all the 3 quarters, basically the majority of the crop will be maize and rice. So we have better margins in that. So we think that we'll be able to maintain margins and we can slightly show better growth than last year. As we see a good cropping pattern for maize, as we have seen witnessed good rainfall across India, and see a very good scope for maize crop in the coming quarters.
Okay, so your guidance is that margins should stay where they are, if not at least try and improve, right? That's the outlook for the remaining part of the year. What about your R&D cost? Because for the last couple of years, you've put in considerable effort to move away from cotton seed into maize, rice, and that's bearing fruit now. So what is the percentage of your R&D cost as a percentage of your overall sales? How has it moved? And going forward, how much do you anticipate spending on R&D?
As of now, if you take last year, the recurring expenditure was like 5 to 6%, and if you add capital expenditure, it was like 7 to 8% on the overall revenue. And I think if you see the first quarter itself, the R&D expense and the employee costs have basically moved up by more than 10%. So this year also we will be spending close to 6 to 7% of our total revenue on R&D. And as you rightly said, that we are already witnessing that, and it's a long time to get, it takes long time to get new products and hybrids, and whatever growth we have seen this quarter and in the previous quarters, it's all from the new products which are coming in. If you take like 7, 8 years back, the majority of the portfolio, like 80% of our contribution was from cotton. Right now in the first quarter, it is already down by, it came down to 33% from 45% what it was last year, and if you see the overall year, it should be close to like 20-22%. So even in these tough conditions, as we have a diversified portfolio wherein we deal with many crops, that's giving advantage for us. And going forward, we are working on mustard and bajra in the coming years, including vegetables. These all crops should do well in the coming years. And maize and rice, we see a very good acreages coming going forward as the demand is going up. So we see good prospects, and we have got a very good pipeline hybrids down the line, which gives us confidence to have both volume and revenue growth. And if you see this year, as it was a very tough year, the production costs have gone up significantly when compared to previous year. And being a brand and by the performance of our hybrid, we were able to pass it on to the farmer. That's the reason we were able to maintain the margins. And I think we are the only company who has basically were able to maintain the margin this year.
All right. You know, you are seeing good momentum in exports as well. Give us a sense of how much does it contribute to overall revenues right now? And that strong growth, will you be able to sustain it? Are you seeing higher freight costs? Is that a worry for exporters like yourself?
Last year, we have done 5 to 6%, like 60 crores of revenue from export. But if you see in the last 5, 7 years, 10 years, we are continuously working on it. We are adding new countries to it this year also. We are adding new countries. We are very bullish on Southeast Asian countries this year, especially like Philippines, Indonesia, and Thailand, where we see a good initial trials of paddy. We have got very good results in paddy. So we are exporting to those countries, and even we are exporting maize to maize and sunflower to African countries. So in the coming years, we are even bullish on export market. It should definitely touch 10% of the revenue in the next coming 3 to 4 years.
When will it touch 10% exports? In how many years?
The next 3 to 4 years.
3 to 4 years is when exports as a percentage of revenues will be 10%. I know this is a tough one, Mithun, but is it possible to estimate what could be the volume degrowth maybe in cotton seeds? What is the anticipation of volume growth in maize and rice for the full year? Your own internal assessment?
Cotton, majority of the season is already done. We are down by close to 25% in terms of the volume. Whereas in maize, for the entire year, we'll be growing like 45 to 50% what we have grown this year, first year. And rice also in the same manner.
Okay. All right, Mithun. Yes, please go ahead. What were you saying?
First quarter gives a major indication of the entire sale, how it's going to be. And as this contributes 80% of the total sale. And next in the coming quarters, maize is the main crop where we do the majority of the sale, and we see a very good demand for maize, and we will definitely close in last year. So it should be like the growth than 50% in terms of the volumes in maize and 20% plus in terms of the rice.
All right, we get that. Thank you so much, Mithun, for joining us today and giving us all those details. That's the word coming in from Kaveri Seeds. We'll slip into a break now. When we return, we'll discuss market technicals with Mitesh Thakkar and also discuss the top trading bets.
A few hours away from marking a new record. The CNBC TV18 coverage of the Union Budget starts right now.
Hello and welcome to CNBC TV18 Motilal Oswal Budget Headquarters.
Namaskar. Imagine you're watching a cricket match, international cricket match between India and Australia. And every single person who's watching the match and those playing the match know that the umpire is compromising. What would happen to the match? What would happen to the fairness of the match?
Welcome back. You're still tuned into Trading Hour, and at this point in time, there's a mild recovery. Nifty is down around 24 points. Of course, it's a very mild recovery that we are talking about. The mid-caps, they continue to outperform. Let's talk about technicals of the markets. Mitesh Thakkar is joining us for a quick technical check on the market. Mitesh, good morning. Thank you so much for joining in. What are you making? It's not such a big dip that we are seeing, of course, but what are the important levels? Nifty stays above the 24,300 mark. Do you think that will be a support now? And what about individual names?
Good morning. So I think, there are two observations which are important. One is that when we fell from 25,000 plus to sub 24,000 levels, we've kind of retraced the 50% of the fall, and it's taken more days to retrace the fall than actually the fall which had happened earlier. So in that sense, it's not a very positive setup. But post that, it's still a rising channel, which is choppy, volatile, but not directional. So I think, the market is still contracting. 24,500 would be a very important mark. That's where the call open interest is, as well as the 50% retracement area comes in. And then 24,650, 700 zone. So till those are being captured, there's always a risk of the downside happening again, or the retest of the earlier lows happening again. Now, for that to happen, the trigger would be a close, as you rightly said, below 24,300, 250 levels. I think once that breaks, then we might see a retest or maybe a fresh low being made. Till then, I think trade with stock-specific biases.
Okay, and when you say stock-specific bets, what would those bets be?
Yeah, so, I would have one buy and one sell. Havells is on the buying side. Yesterday, we saw action in Voltas. Today, Havells is coming up. So, buy here with a stop at about 1808 for target of 1870. And Indus Tower, after a very good rally, is now showing first signs of profit booking. So sell with a stop at 420 for targets of 400.
Okay, thank you very much for that. We'll slip into a short break. We'll come back and tell you why Aarti Industries is down close to about 10-15%. IRFC Hudco also buzzing in trades. More details coming up when we return.
The outcomes. How would you feel as somebody who's participating in that? This is exactly what is happening in the Indian stock market. Over the last few years, larger and larger numbers of people have been investing in India stock market. They invest their hard-earned, honestly earned savings in stock market. And it is my duty as leader of the opposition to bring to your notice that there is a significant risk in the Indian stock market because the institution that governs the stock market is gone. Now I'm going to explain to you exactly how and why it is gone. A very serious allegation against Adani was illegal share ownership and price manipulation using offshore funds. It has now emerged that SEBI chairwoman Madhavi Puch and her husband had an interest in one of those funds. This is an explosive allegation because it alleges that the umpire herself is compromised. The savings of millions of Indians, hard-earned, honestly earned savings, are at risk. It is therefore imperative that this matter is investigated. Retail investors, honest investors, pensioners have three questions. The first, why has Chairperson Madhavi Puch not resigned? Second, God forbid something were to go wrong and investors were to lose their money. Who is responsible? Is the Prime Minister of India responsible? Is Madhavi Puch responsible? Or is Mr. Adani responsible? And finally, the Supreme Court has been
Welcome back. You're still tuned into Trading Hour, and a big move that we are seeing, a big stock of the day definitely is Aarti Industries. It's down 15% in trade right now. Now remember, this is one of the chemical companies which was first one to report a sequential recovery. But yesterday on the conference call, the management indicated that they're not sure whether they'll be able to achieve their EBITDA guidance that they'd given of 1450 crore rupees to 1700 crore rupees because they're seeing a lot of margin volatility. There's a lot of pressure coming in from China as well. And that is something which is scaring the street right now. Yes, they talk about their volume guidance being at 20 to 30%, but they will finalize guidance only in next 1 to 2 quarters. That is when they'll see some clarity. In terms of demand, they say discretionary segments like dyes and pigments, they are seeing sequential recovery, but agrochemicals will see a recovery only in the second half of this year. But Red Sea crisis has impacted the global supply chain, and this is something which could impact volumes in some segments as well. The debt stands at 3,300 crore rupees, and it could go to levels of around 35 to 3,600 crore rupees. Now, this has come in as a surprise because no one was expecting a company which has been seeing sequential recovery and improvement in demand to say that they're not sure about recovery going forward. Again, it's a pricing pressure that they're talking about. Volumes, according to them, will continue to be higher. Now, brokerages like Morgan Stanley, they have an equal weight rating. They say an evolving product mix, because they're also focusing on energy applications, is driving higher margin volatility versus what they've seen in the past. MK says that while it was the 4th straight quarter of EBITDA improvement, they might not be able to achieve the guidance, and that is something which has come in as a surprise. They've cut FY25 and 26 EPS by 11 and 5%. Nuvama has gone ahead, they've raised the target price, but that's because of a rollover that they're doing to Q1 FY27. Agrochemical segment shall see a recovery from the second half. Kotak say that suspending the FY25 guidance is acknowledging that there is some pressure in the markets and there is some volatility as well. They retain their sell. Management continues to guide for 20 to 25% earnings CAGR for the next 5 years. But do remember, this is subject to multiple variables, including demand, competition, and commissioning timelines. So they are still not sure whether the company will be able to achieve the long-term guidance that they've given. And that's why this pressure. But a big fall because this was one stock where positioning was also such where they will continue to recover.
And I believe in one of the reports, I think I read that Chinese dumping impacts about 70% of their product portfolio. It's that high?
It is, because it is more commoditized in terms of their business, right? So that's why most of the commodity chemicals, they emerge from China, and that is where the pricing pressure is coming from.
Okay, and I think even that growth guidance of 20 to 30%, the management in the call said it appears to be challenging and it is aspirational, though they are still retaining that 20 to 30% growth guidance. Margin guidance, as Sonal pointed out, has been suspended. But let's move on and talk about HUDCO and IRFC reported Q1 numbers. Vamakshi joins in with the details. Vamakshi.
Well, absolutely. It's a good set coming in from HUDCO. When we look at the disbursements, they came in at 12,625 crores. This is an uptick of almost 19 times as compared to the same quarter last year. And this growth in disbursements is largely being led by their urban infra segment. Loan book came in at 1,03,815 odd crores. This is an uptick of almost 30%. And the growth in loan book has surpassed street expectations. So again, good for HUDCO there. But the NIMs have contracted to 3%. It has come in much lower as compared to a YOY as well as sequential basis, and has come in much lower as compared to what the guidance that the management had stated earlier. NII came in nearly 12% higher. PPOP saw an uptick of almost 16%, and net profit came in nearly 25% higher. Additionally, we also saw the asset quality for the company improve. GNPA improved by nearly 29 basis points sequentially, and NNPA saw an uptick of almost, rather improvement of almost 3 basis points on a sequential basis. So overall, it looks like a good set for HUDCO, but IRFC also on our radar, and that is because the company reported a decent set. NII saw an uptick of 1.8%. PPOP came in nearly 1.8% higher. They also had a provision write back of nearly 3.6 crores as compared to provision that they had to create of nearly 50 lakhs on a sequential basis, and the net profit came in at 1,577 crore, an uptick of almost 2% here as well. So overall, a decent set for IRFC and a good set for HUDCO.
Okay, all right. Thank you so much, Vamakshi, for joining in with that. So those are some stocks on our radar. We'll do one thing. We'll slip into another break. When we come back, we'll discuss the market fundamentals with Deepak Shenoy from Capital Minds. Stay tuned for that conversation.
New allegations have emerged, very serious, explosive allegations have emerged. Is the Supreme Court going to look at this matter suo motu again? It's slowly becoming crystal clear why Prime Minister Modi is against a joint parliamentary committee looking into this.
Welcome back. It's turning out to be a very quiet session, a session of consolidation. Frontline indices down a bit, hardly, but moving in a tight band. The Nifty is holding on to 24,300. It's all about individual stocks. Deepak Shenoy from Capital Mind is now with us to talk about the market fundamentals. Deepak, Capital Mind, your company has come up with an interesting analysis where you've analyzed the price action, the earnings action of small cap stocks, the indices, since COVID. Take us through your analysis.
So thanks, Eva. I think one of the things that we've been doing in Capital Mind is just trying to figure out the eternal question now is, are small caps overvalued because their P reaches 30 or ranges of that kind. One of the problems is that because the market has run up in the last year or the last couple of years, we feel that this this run up is extreme and there are lots of stocks that are way too expensive and so on. So to put that in context, you have to kind of take it in both ways. First, try to get an unbiased analysis. One of the ideas would be, is this P ratio of around 30 plus? And you can't take the NSE small cap 250. You have to actually take the BSE one because the NSE changed their earnings reporting format in 2022, I think, or 2020. But so you can't get a good P ratio kind of analysis of the past. But if you do that with the BSE 250, you find that today's ranges, while relatively a little bit higher than the average, are not meaningfully at an extreme. We've seen as much as 50 times and even 80 times plus in the past. So right now at 30 times earnings, it is not meaningfully high enough to say that it is way overvalued. The second one is that apart from the current year, the small cap earnings growth has actually been quite good. Past 5 years, if you look at it, they have actually grown their earnings 3x. And the small cap index is about 3.5 or 4x nearly. So in a sense that the market has actually gone up along with earnings. So in that sense, the overvaluation is not as extreme as you might think. So this part of the analysis, if you look at, provides a favorable picture. But there is an unfavorable picture as well, but because if you look at the past, and although P's have been higher, at any time when you buy the small caps, when their aggregate P is more than 30, the next 6-month returns tend to be negative for the most part. So that is the other side of this equation. So there may be pockets of temporary overvaluation, but I don't think it's meaningfully high, meaningfully negative for us in the longer term. I just feel that it's not as overvalued as one might think it is.
Oh, okay. So in that case, Deepak, what are you suggesting your clients when it comes to small caps? Because there's been a lot of caution, but we don't see that in mutual fund flows. They've ebbed, of course, from highs, but they are still steady on a monthly basis.
Yes, I think small cap indexes continue to be okay. It's not like, for instance, they've taken more of a hit this month than the Nifty has. But in general, we've seen that the earnings profile has not been, battered or been seriously negative. We've just seen earnings growth coming from like a 20-25% down to, I think, a little bit flat right now. So 1 year return right now on the small cap index is about 64%. But the the earnings growth itself is about flat or -3% or something like that. This might mean one thing. There are pockets of the market which are not growing, which are getting very high valuation. One of them, perhaps, to give you an example, there was a result today of IRFC. IRFC is valued at a very rich valuation, 37 times earnings, but earnings growth is relatively small because it lends to pretty much one customer. So at that point, you might wonder whether that is a company that on a fundamental basis may not be able to live up to expectations. But at the same time, you have companies like, and we own some of this, like say Keynes Semiconductors, where you had growth or earnings growth of 50+%. Although it is valued very richly, they're actually showing reasonable amounts of earnings growth to be, and a market that seems to provide more opportunities for future earnings growth as well in those contexts. So I think it's going to be stock specific in small caps. You got to pay for growth. You don't pay for no growth. And I think we made that mistake in FMCG, in MNC FMCG a few years back. We paid a lot of money, a lot of high P ratios but their growth came up to be 10-15%. Look at what their prices have done in the last 3 or 4 years. Although we are in a bull market, they are lagging the market quite considerably. So we should be careful to not overpay for low growth. You can pay for growth, but you should definitely watch that growth is actually happening or not.
Deepak, what are the constituents of BSE 250? We know, like the index, the Nifty is over-indexed to financial. So for BSE 250, the data that you've analyzed, can you give us a sectoral color in terms of contribution? Because if someone just buys the index, they should know the exposure that they're getting into. Because everyone says that, well, there are very few, exposure to railways, manufacturing, defense can only be bought by these mid and small cap. So, tell us, how the individual segregate the BSE 250 for us in terms of sectors, in terms of exposure, and which pockets of those have done well in the last year in terms of earnings.
So the indexes change every 6 months anyways, because what happens every 6 months is the number of stocks, some of the small caps will become mid caps, some of the small caps will become micro caps. So there'll be a shift in this on a regular basis. So even therefore, the sectoral mix will kind of shift across. So I think if we just look at, I don't think I have the numbers per se right now, but you've got a lot of companies in smaller end manufacturing, of course, some railways and some defense as well, which started off as small caps. Some of these were small caps and have become large caps, so like a Mazgaon Dock at some point was in one of the small cap indexes, but it's now a larger cap stock. So this index, thing would change. But right now, even here, there's about 20% of financials. Capital goods is about maybe 15%. I think healthcare is about 10%. And auto components are about 6%. These are the largest. There's some chemicals. And it's a very well represented series of stocks. So you actually have enough from real estate. For instance, Nifty has almost no real estate, but other than indirect exposure. So here you have direct real estate about 2.5%. You have media and entertainment, which does not almost, other than ZZ, which was in the Nifty a long back, you had no media player at all. So now you don't, other than the pockets of Reliance. There's a much bigger, like a 1.5% in the BSE small cap 250 in that. So it's more diversified as an index, but it's still relatively heavy on financials in the sense of 20% is financials versus Nifty, I think, is what 40 or 45% financials.
Very quickly, any stocks that you would like to draw attention to where the PE re-rating has been considerable, but earnings have not kept pace? You gave one example, but 2-3 others which come to your mind, or a few others?
Good question. I think right now, for instance, this quarter has been pretty bad for a lot of capital goods companies, simply because orders don't come in an election quarter. So you get very low visibility, you don't have much on hand and so on. But you can see some of the chemical companies have relatively low growth. Part of it is Chinese influence, part of it is the cycle itself. I think we've seen some of the steel players also have higher players. I'm not going to take a lot of names here because, they're not, I don't have the exact numbers in front of me. But the commodities players, at least in steel and steel tubes and so on, where the PE has been higher and growth has been slowing, those are the areas where you might find a little bit of extremes in valuation. There is a promise, for instance, in Inox Wind. The promise is there of potentially large future earnings. So in some of those cases, the current earnings may not necessarily determine what is there in the future. But I think a number of stocks over here, you'll find that, you'll have to map them. I don't have the exact numbers on, but I think commodities, chemicals, specifically, and perhaps in some small cap IT names as well, you do have lower growth and extremely high, earnings multiples that are being given. So I'd just be wary of that.
Okay, thank you very much for that. We will slip into a very short break. We'll come back and talk about Apollo Hospitals, Hero Motor Corp and DOMS.
Welcome back. Well, the MSCI has announced changes as part of its August review, with changes set to be made on the 30th of August. Vivek Iyer is here to tell us more. Vivek.
Well, that's right. So, much anticipated event. The August index review is finally out. India is expected to see inflows of a little over $2.5 billion, which means that India now has the second highest weightage in the EM basket of close to 19.8%, second only to China. So these changes, will be made on August 30th, and the MSCI Global Standard Index, the index that we track on account of the higher impact that the changes over here actually sees, will see 7 additions and 1 deletion. The MSCI Small Cap Index will see 27 additions and 6 deletions. Now, when you're talking about the MSCI Standard Index, which are the top additions, Zydus Life, over $218 million of inflows. The other names include Prestige Estates, Dixon Tech, OFSS, Oil India, Vodafone Idea, as well as RVNL. On the other hand, there is one deletion. On the account of underperformance, Bandhan Bank actually exits the MSCI Global Standard Index, and it will see outflows of close to $109 million. The other important development that the street was anticipating very closely was the inclusion or the weight increase of HDFC Bank within the MSCI Standard Index. Along expected lines, MSCI has increased the weightage of HDFC Bank after the company uploaded its shareholding pattern, which indicated that the foreign room there was quite high. Now, what's actually happened is that MSCI has decided to increase the weight of HDFC Bank in 2 separate tranches. Earlier, the street was anticipating that this could be done in one single tranche itself. So in this particular tranche, IIFL estimates close to $1.4 billion of inflows into HDFC Bank, and this will happen at the end of the month. Also remember, MSCI has lifted the embargo on Adani Group stocks, indicating that now Adani Group stocks will be treated like the rest of the pack when it comes within the MSCI basket.
Thank you very much for that. Zydus Life, despite their weight increase, is under quite a bit of pressure, down 5% today, down close to about 9% over the last 2 days. And here the problem is on earnings and valuation. Remember, post-earnings, CLSA downgraded the stock, citing concerns on long-term growth sustainability plus rich valuations at 30 times FY27 PE. So Zydus Life, despite the good news on the technical front, MSCI weight up, the stock continues to come under pressure. Let's talk about Hero MotoCorp reports Q1 numbers. Sudarshan joins in with the expectations. Sudarshan.
Yeah, so two-wheeler major Hero MotoCorp will be reporting its Q1 earnings today, and these earnings are expected to be strong, with all the headline numbers are seen at multi-year highs. But before talking about the numbers, let's look at some of the internals. It's the cheapest stock amongst two-wheelers, and 1 year forward P is 22 times and is slightly higher than 5-year average of 18 times. And in 2024 so far, the stock has been up 28% and it's 10% away from the record high that it hit in June. Now talking about the numbers, net profit is seen rising 28% to more than rupees 1200 crore. Revenue is seen increasing 21%. EBITDA is seen rising 31%, and margin too may rise 100 bips to almost 15% against 13.8% in the same quarter last year. So what all will aid the numbers? As per brokerages, first, healthy volumes. Q1 volumes are seen rising 14% year-on-year to more than 15 lakh units, led by rural recovery and the new launches. Second, rich product mix and rise in average selling price. Average selling price has increased 6 to 7%, and product mix has recently improved, and that is likely to aid the margin. But there are few concerns as well. First, company has been losing market share in its stronghold 100 to 110cc segments. Second, despite several launches, market share has been low in premium segment. And last, Honda has dethroned Hero from the #1 position in its overall dispatches in the Q1. But it seems any impact from these concerns might be offset by positives, as company is expected to report a very strong set of numbers for April to June quarter.
Okay, all right. So expecting good numbers from Hero MotoCorp. Thank you so much, Sudarshan, for joining in with all those details. Well, a similar expectation is from Apollo Hospitals as well in Q1. It's expected to be a good quarter, led by their hospitals business. So if we take a look at the overall numbers, revenue growth is expected at 15%. The EBITDA is expected to increase by 33% on a YOY basis, leading to a margin expansion of almost 200 basis points, and profits to come in at 274 crore rupees. That's the number that we're expecting from Apollo Hospitals this time. The 15% revenue growth, it will come in on the back of 7 to 8% rise in average revenue per occupied bed. And the improvement in margins will also come in because of the hospital segment. The hospital segment, in terms of the top line growth, the street is expecting a number of anywhere between 12 to 14%, and margins here could improve by 10 to 12 basis points on a YY basis. If you talk about the Apollo Healthco company, that's where these sales are expected to grow by 15% plus, and it is to be driven by pharmacy distribution sales plus traction that the company has been seeing in 24/7. For 24/7, costs are likely to be flattish on a quarter-on-quarter basis, but it will be lower on a YY basis, explains the margin improvement. And the GMC is expected to grow by 6% on a sequential basis. The EBITDA is estimated to be marginally positive for the Healthco company this time, expected between 20 to 25 crore rupees. So it will be an all-round improvement for Apollo Hospitals, maybe ahead of those expectations. The stock is higher by 2% as well.
That's Apollo Hospitals for you. The Midcap Index, the screen is very, very vibrant. You've got First Cry, that's up now 50%. You've got strength in Federal Bank, 2.5% gain. Triveni Turbines came out with numbers a couple of days back, but the stock is seeing some buying today, 8% up. You've got Oil India, NTPC in the PSU basket, which is also trading with considerable strength. Well, with that, it's curtains down on Trading Up from the entire team. Thank you for watching. Stay tuned. Halftime report is up next.
Hindenburg Research's recent report puts allegations on SEBI chief Madhavi Puri Butch by highlighting her conflict of interest with Adani Group and therefore raising some serious questions on her credibility. While SEBI chairperson has refuted claims by pointing to disclosure and recusal norms she has diligently followed. Now, Hindenburg alleges Madhavi and her husband Dhaval had investments in two funds which they claim have been used by Adani Group for siphoning off funds. Now, they highlight the involvement of 361 in managing these funds, and report suggests that the first investment in 2015 while Madhavi joined SEBI in 2017. Now, by establishing these linkages, Hindenburg claims that SEBI has been reluctant to probe Adani because of chairperson's involvement. Now, SEBI chief, in her strong rebuttal, has denied these claims and explained that investments in fund was in 2015 as private citizens and states emphatically that at no point did the fund invest in Adani Group's companies. Now, in another point of conflict of interest, the report claims that Butch had interest in offshore Singapore consulting firm Agora Partners and continued with her ownership of Agora Partners despite being SEBI's whole-time member. Now, Madhavi said that all disclosures and recusal norms of SEBI were followed, refuting the charges of the conflict. Not just Singapore entity, but even the Indian entity Agora Advisory India, and Hindenburg claims that Butch has 99% stake in the Indian consulting firm, which, remember, is generating nearly 2 crores from advisory services in FY22 is what the report claims. Now, SEBI chief clarified by saying that the two consulting companies became immediately dormant on her appointment with SEBI and that her shareholding in them were explicitly part of her disclosures to SEBI. Now, apart from linkages to Adani Group, the report also claims that Madhavi had conflict of interest with global private equity firm Blackstone, and Hindenburg's report says that Madhavi Butch used her position to benefit Blackstone in REITs in India and that her husband Dhaval Butch is acting as an advisor to Blackstone despite no experience in funds or capital markets. Here again, SEBI chief clearly refutes claims by disclosing that Blackstone Group was immediately added to Madhavi's recusal list maintained with SEBI when Dhaval was appointed in this position. Now, in two statements yesterday, Madhavi Puri Butch has emphasized repeatedly that all disclosures and recusal norms of SEBI were
Stocks trade in a range with advances and declines almost balancing out as earnings season draws to a close and investors wait for fresh cues. Like the US CPI print later this week, the mid-caps, they outperform in trade today.
After a stellar post-listing performance by Ola Electric, First Cry owner Brainbees Solutions lists with a gain of over 40%. Unicommerce eSolutions too lists at a hefty premium of over 100%.
MSCI's August review sees India's weight in the global standard index rise with 7 inclusions and 1 deletion. But what draws more attention is a weight up for HDFC Bank in 2 tranches and the embargo on Adani stocks being lifted.
Alstom India's managing director tells Money Control that a 30,000 crore tender for 100 Vande Bharat trains has been scrapped as per the tender panel, and that's because they capped the price at 140 crore per train, which is less than Alstom's L1 bid. Good afternoon, you're watching us here on Halftime Report. I'm Manglam and with me today is Nigel. I know you guys liked us a lot in Chartbusters, so we thought why not give you an hour more of that. This is Halftime Report. And at halftime, you know, as you can see, the market's down but not quite out. From the lows, we've seen a bit of a recovery on the Nifty, and barring the accident that we saw on HDFC Bank in today's trading session, you know, all the other stocks are doing fairly well. The mid-cap index is in the green as well, and we see the advanced decline lines narrow, and currently they are split right down the middle. Hi, Nigel.
Well, that's right, Manglam. You know, the heartening aspect today is the mid-cap outperformance, right? You have plenty of stocks that are up anything between 4 to around 8% odd. So that's good. And the contribution chart of the HDFC Bank stock actually will tell us the picture. HDFC Bank, the 20 DMA is at around 1,623 rupees, very, very roughly. And currently it's at around 1,610 odd. What's going to support the stock from here on is going to be that, $1.8 billion of estimated inflows in the first tranche. So in the near term, the stock will get some support out there. And, post August, that's in September, then it gets back to its fundamentals for a couple of months. And then we'll be bracing for the tranche 2 of these inflows. So let's wait by for that. But Manglam, we've got a lot of companies on the show, so let's get straight to that.
Yep, let's do that. We have the first management on the show lined up for you. It's Supriya Life Sciences, posted a good set of first quarter earnings. Margins coming in at a multi-quarter high. The company's exports now contribute to nearly 80% of their sales. So to discuss this and more, we have with us Satish Wagh, who's the whole-time director and executive chairman of Supriya Life Sciences, joining in the stock, holding up with a gain of about 1%. Thanks a lot, Mr. Wagh, for joining in. The key takeaway that we have from the conference call is that you have 2 opportunities at an advanced stage in the CMO business, and CMO should actually start contributing from third quarter of this financial year itself. So on those parameters, I wanted your thoughts on, in this year, what could CMO be as a proportion of your overall revenue? And going forward, what is your target here?
So basically, I told you that we are working in the regulated markets. If you see the entire quarter, 80% is exports. And when we are doing in the regulated market, we are cutting the size on the products from the Chinese market. Wherever we are going to produce the CMO, CDMO activity, they are required worldwide because the current people who buy, all the companies are buying from the non-GMP plants. And we always tell that we are a USFDA regulated plant of GMP, and it's a secured and a good sustainable product which will be delivered by the plant. So this is how we are very strong, but cannot give you the right the amount, but we will do our best because we are going to work with a good size of EBITDA margins.
By when does CMO become, let's ask you, by when does CMO become 20% of your revenue, and what is the target beyond that?
Sir, CMO, which we talk, CMO and CDMO, these are we talking with some therapeutic categories where all multinational companies are getting associated with us. So we will be working for them with a smaller amounts, but soon it will be very large amounts with them, and we will be a permanent supplier for those companies all over the globe.
Okay, all right. Hi, Dr. Wagh. And Good day, and thanks a lot for joining in here on CNBC TV18. Well, the street is quite impressed with these numbers. And when you get a good start to the year, then it could be even more pressure. So give us a couple of numbers. For the year, what kind of growth will you be looking at, given that you have capacity that's coming on stream from the second quarter onwards? So for the year, on an average, what is the growth estimate that you're looking at? And margins have recovered to the high 30s. What is the range we should work with for this year on an average?
So let me tell you, I am in this business for last 38 years. A very matured person in the business and understands what is the exports and which are the therapeutic exports are required all over the globe. What I see in the future, let me tell you, these are the molecules which I am going to take away from China market. They are very big in terms of dollars. Billions of business is done by the companies who are manufacturing in China. So we stand today with a confirmed thing with everybody that we will deliver you from the audited US FDA and GMP plant. That's the main thing which we are giving it to our customers.
Dr. Bagh, Dr. Bagh, we get that what you're saying, and I've gone through some of your con calls over the last couple of years. When you listed as well, we have a couple of interviews. So your vision is very, very clear. You're looking at grabbing market share. You believe that China +1 is up and kicking. But from a stock market perspective, they look at the share price and they would like to know what is the way ahead from here on. So last year you did around 570 crores and the year was a little bit volatile. The blended margins you did was around 30%. Now on that sort of a base, given the start you have to the year, the quarter one is very good. What should the growth number look like for the year? And margins from 30%, what does it move to for the year? Give us two numbers.
Sir, growth, if you see, is 22%. This year we have done, last year we did. And this particular 22% growth which we have done for the quarter, we are confident we will deliver the same or better than this, which we expect.
Got it. Okay. So growth out of the way, 22-23% at least. Margins?
Yes. Margins wise, we have this year delivered EBITDA of roughly around about 39%. We will definitely and confident to do in the future also the same one, because we have identified the business where we are going to hit the market. And today, the world is looking for those items because the GMP plants are not there at all in China, but they were forced to buy. So today, they're very happy that the source is getting moved away from China to India.
Wonderful. So 39%, what you've done in the first quarter, will you sustain for the next 3 quarters as well. So you'll end this year with 39% margins.
Yes.
Wonderful, Mr. Bagh. You recently had a Health Canada audit as well in some of your plants where there was clearances that you got. So we just wanted to know how much in terms of a business can you get from Canada? And there is a second, there's a US FDA audit in the second half of this year as well. What plant is this at and what are you expecting here?
Sir, as far as Canada is concerned, that audit is over.
Okay.
The material has already moved to the Canadian authorities in the plants. It's a regulated product. So whenever regulated product, then it takes time. It takes minimum 6 months to 1 year for converting into the business. But things are moving in a positive way. And as I told you again, that the products which we are talking is required to the world from the GMP plant because they are helpless today. That's why they were buying. And I'm confident the products which we are going to manufacture will definitely give a better turnover, better performance and better EBITDAs.
Okay, so what do you mean by better EBITDAs? Because this year you will end with 39%. In the past, you've actually done EBITDA between 45 and 46% as well. This is the second quarter FY23 that we're talking about. So from a long-term vision standpoint, what do you see as a sustainable and an acceptable margin for you? Is it upwards of 40%, closer to 45%? Or you are happy with this 38, 39% so long as your revenue grows 20, 25%?
Sir, I'm not at all happy. We should get a better EBITDA. So we select and work with those therapeutic categories, and we always love to deliver better things to the market because the market needs today integrity and sustainable business person who
So
delivers.
when you say
as per
better
the
EBITDA,
requirement.
what is better EBITDA? Is it 45%?
Sir, it will always, see, it is always, we cannot say the percentage, but it will always be a better EBITDA. That is as per the satisfaction of the market and as per the satisfaction and betterment of the company.
Okay, all right. Very quickly, sir, before we let you go, I recall that in FY23, you did revenues of close to around 460 crores approximately. And you said in the next 3 years or so, that's somewhere around FY26, there's a possibility you could double your revenues. Is that still on?
Yes, that is what is in my mind, and I will definitely try to do that.
So 900 crores
will start. Let me tell you, I have 2 operations. One at my current site, where we already invested more than 100 crores. The validation and the standardization is going on. The another one is in Amarnath, the second site, where we have invested 100 crores. That also validations have started. I am confident both these plants will start working by October end.
So 900 crores of revenue target by FY26, given your capacity expansion. It's a pleasure talking to you. Yes, that's an aspiration as of now. For the time being, we'll hold you to the 22% for this year. Thanks a lot, Dr. Wag, for joining in. We get the China Plus One strategy, the way you're looking at the business evolving as well. We'll hold you to these numbers, though. For the time being, we'll slip into a short break. On the other side, another management is waiting for us, Jyoti CNC Automation. Stay with us.
Followed by her, and SEBI chief stated that instead of replying to show cause notice, Hindenburg has decided to attempt a character assassination of SEBI chairperson.
There is clearly discomfort to even an optimist like me in certain pockets, right? So if you are investing in mutual fund, you do your homework, invest in good mutual funds with a track record, no issues at all. But if you are investing in individual companies, you should definitely be watchful of what you are paying, what you are assuming, and then what is it that the company will deliver, then you make money. We spoke about the liquor sector, which looks like a structural long-term story. So I think there is enough, and someone like me, I am always open to an idea, but I am also not hesitating in this kind of market to sell companies.
Well, you've mentioned trigger links, and that's quite an important part of migraines, a trigger which results in a migraine. Can you just tell us what is the most common trigger that one comes across when when one gets a probable migraine?
The triggers are generally divided across 3 different groups. One is the physiological within the body triggers. 2 is from the environment and lifestyle. And there are some triggers which are beyond control. The commonest trigger that we see in our part of the world is related to the weather conditions, the type of temperatures we have, the heat, humidity in most of the cities for almost 6 to 8 months of the year. And then again, you have lifestyle related triggers, which are the habit of not having breakfast on a regular basis amongst most Indians, and school children having to leave so early for school, they really rush with just a glass of milk. They don't have a proper breakfast. Skipping meals, the fasting habits across different religions in the Indian subcontinent is responsible for throwing up a lot more migraines. And stress, where stress leads to lack of sleep, poor quality of sleep, and now in modern day times, you find increased screen exposure. Computers have become an essential part of education.
Welcome back. Even as the Nifty is flittering between that 24,300 mark, a couple of stocks from the broader markets are doing extremely well. One of them is Honasa. Remember, yesterday it was down on account of the near-term inventory uncertainty that the street is looking at. But from a long-term standpoint, it is the best player when it comes to the beauty and e-commerce verticals itself. And that's not my words. Those are Goldman Sachs's thoughts on Honasa. In fact, they've said that the Indian beauty business may transform going forward, largely led by two major underlying trends. The one is that the shift goes towards e-commerce. The second one is that, there have been scientific, chemical and active ingredient-based beauty products which are doing well in the market. And Honasa benefits from that. They initiated coverage on the stock with a target price of 570. They have two broad levers for the company going forward. The first one is that, their other brands, which are the non-Mamaearth brands like of Dermaco, etc., will scale as high as Mamaearth at some point in time. And by FY27, they expect that, the offline reach will also double to 4 lakh outlets, and that will increase their overall presence and growth too. What are they expecting from now to FY30? You would see revenues growing to about 2.5 times what they were in FY24, and margins doubling from 7% all the way up to 14% as well. So those are the factors on which they're bullish on Honasa. Honasa is up about 2% today, Nigel.
All right, Mangalam, thanks for that. Well, let's focus on Jyoti CNC Automation then. We have with us Mr. Jadeja, the chairman and managing director of the company. Hi, Mr. Jadeja. Good morning and thanks a lot. Good day, actually, and thanks a lot for joining in. Well, the numbers are looking good. You've got a good revenue growth of around 74%, margins at around 26%. Clearly, things are moving well for you. For the year, what kind of a number can you guide us for? Can you keep up this sort of a momentum? And also tell us, how is ordering activity shaping up post Q1?
Yeah. So basically, thank you very much. The numbers are good in the first quarter. You are right there. And momentums are built up nicely over there. And we are looking, the momentums are we maintain the entire year similarly like that. And in terms of an order intake also, is let's say whatever the numbers of machines we have dispatched, similar orders has been come to our baskets, and almost we are at same order level booked are there for 3,400 crores to be like that.
So order book at around 3,400 crores as of now?
As of now.
Got it. And growth estimates in comparison to FY24, you're saying you'll grow by more than 70%? Extrapolating what you've done in the...
I'm not saying like that, but let's say overall we will have a good numbers to be there.
Yeah, so what is good numbers? What is good, sir? That's some part of the street could expect you to do more than 80%, while some would be satisfied with 50%. What will you be satisfied for, though?
So I'll be satisfied anything more than 40-50% there, basically.
40-50%. So, on your orders itself, you said your order book is close to around 3,400 crores and you've received as many orders as the number of machines that you've deployed. I just wanted to know what is the current number of machines that you have, because I remember you had this target to go to 6,000 machines by September 2024. What is the current number of machines and where does that go?
So basically, right now, the capacity up to the last year, our capacity was 4,400. And based on all our bottleneck been removed, and up to September, we'll reach out to be around 6,000 machines. So with this 6,000 machines, our entire year, we are able to execute close to 5,400 machines this year, basically.
All right, so 90% utilization of 6.
Yeah, the capacity will be in place in.
Typically, what is the throughput that you get?
Third and fourth quarter to be there.
All right. Typically, what is the throughput that you get per machine? You are expecting 40% plus sort of growth coming in this year. Per machine, what is the throughput that you generate so that we can then extrapolate, as you increase the number of machines that would come into your revenue?
Yeah. So the last year, let's say by FY23, we were at average, our throughput was 27 lakhs per machines. That in 24 we are expected, let's say 24 we have touched to a close to 35, and this year we are planning to reach to we are expecting in between 45 to 50 lakhs per machine specifically.
Got it. All right. Given that you're having capacity that's coming on stream and your operating leverage will play out as well, is there an upside to margins from this 26% mark?
Little bit. There will be some improvement. We'll see in end of the year. Still from here.
So maybe around 100 basis points. Should we work with 27% or will you be happier with more?
Definitely we'll aim to be more.
How much?
Maybe around 2 to 3% should increase furthermore, but we'll be with the 1%. It's absolutely fine.
So we'll work with around 28% on an average, right?
Average will be, I say that in nearby 25 to 27 in between.
25 to 27%. We'll take that then. You're giving us this band, but it appears you're sounding conservative. So for the time being, we take that. Also, the net working capital days, you had talked about reducing it. What will it reduce by? Reduce to by the end of this year?
Last year, we have reduced to from 336 days to 200 like that. And this year, we have reached to 170 days there. So further Reddy's reduction, we are able to see that.
So 170 from 200 would be about a 30-day reduction.
230 days.
And that came...
It's come down from 235 days to, we are expecting to 170 days this year.
All right, that would be good. So that should aid your balance sheet as well. What is the current debt that you have? I remember you having a plan to become debt-free as well.
So almost today, our net debt is zero today.
Okay, and gross debt?
Gross debt, we have a close to, let's say, is a 0.25, let's say 0.1% of our equity there.
All right. And what about order inflows? You told us that this quarter so far, you have an order book of 3,400 crores. With the incremental deploying of machines...
The total order book is today is 3,400 crores.
Yes. How much do you expect in terms of inflows for the remainder of this year?
So the based on our execution will be happen. Just the way the machine will dispatch, similarly order will come there, because now already we have reached to 1.5 year to 2 years of delivery period. Customer will not like to the orders in advance to be like that today. As in our this execution will increase, order we are also expecting to increase furthermore. So let's say this quarter we have close to 310 crores orders has been received.
Okay, so 310 crore worth orders was received in the first quarter or the second quarter?
In the first quarter.
And second quarter so far, how many have you received after the elections?
So that we are, let's say we are expecting to touch this quarter is to be more than 400 crores to be here.
So that makes it 700 for the first half. Second half could be how much?
It's further money more there.
Second half is typically stronger than the first half, right?
It's a single very more.
If you have to put it in a percentage to it, it would be 40-60?
It's a 40-60. It's a 40-60.
40-60. Great. So approximately, Mangalam, by the end of the year should be around
3,000 crores in terms of, sorry, about 1,800 crores. 700 in the first half, and then you add another 900 crores.
So 1,600 crores for the year, sir. I think mathematically that seems to be the number.
It's a little bit more than that.
Little more, so 1,700. Okay, all right. And there's a trigger that the street was waiting for an Apple order. Any update on that front?
So basically, we are not to talk to that. Basically, it's a very.
But sir, as you know, the street wants to know, so we have to ask you about that.
We are not able to tell you that basically.
But you're not able to tell us whether you're talking to Apple or whether the deal is happening or not happening.
So basically, we are greatly accepted in EMS sector. Okay.
Correct.
And
by when, sir?
We received the orders from them basically.
Okay, Mr. Jadeja, sorry for coming in again. But by when can we hear about this outcome? Because the street wants to know that Apple order, when does it come in? Quarter 2, quarter 3, or the second half of the fiscal we should keep it at for now?
So again, I am telling you that that's a very, in terms of, there's a very confidential parameters like that and a customer's name that, okay. So,
all right, so typically for large electronics,
we are not able
let's not name Apple, but typically for large electronics manufacturers who've recently, increased their allocation towards India, what is the size of the order that you get from similar players? Not naming Apple, I just want to...
Let's say we are expecting another round of orders. We already have orders and we are looking to be another round of orders in the next 1 quarter to come from them.
Okay, Mr. Jadeja, we need to press you on some of these points, but thanks a lot for sharing what you could with us. Whenever you come out of that confidentiality phase and this Apple order or any big order comes, we request you to join here on CNBC TV18 so that our audience as well as your shareholders can get more color. For the time being, wish you all the best for the remainder of the year. Well, time to slip into a short break. You come back, we'll continue to focus on markets. Sachidanand Udekar is waiting for us with some trading strategies.
Tops and the mobile phone. Mobiles are small screens. They induce a lot of stress and strain, which can be a trigger for migraine. And apart from this, certain changes in the body, for example, the fluctuating levels of estrogen, which happen during the menstrual cycle of a woman, leads to, is a trigger for more migraines in women that we encounter. So these are some of the triggers. And then you have foods which are different from the rest of the world. It is well publicized, well published all over that chocolates, cheese, and red wine are the commonest cause of trigger. But when you come to see it in practice, these are not the common items which are consumed by most Indians. Yes, of course, they are correct triggers. Aging cheese, chocolates, and red wine. But we have different food items which have the fermented food items like idli, dosa, dhokla. These are items which can also give rise to migraine attacks. And then rarely you come across different triggers. Triggers are different across individuals who suffer from migraine. So they are not the same for everyone. And one has to be alert that triggers are not seen always and not easy to identify. In about 70 to 80% of patients with migraine, you can identify the triggers, but you have to remember that there are 15 to 20% of patients in whom triggers may not be easy to identify.
All eyes on Hindus in Bangladesh. What is happening to the minorities there? How severe is the situation? Can the new government heal old and new wounds? On the whole story, let's try to understand this development better. Since Bangladesh's former Prime Minister Sheikh Hasina abruptly resigned and fled the country due to massive protests, according to reports, there have been multiple.
Watching us here on Halftime Report. Now, as we speak at midday, once again, we've seen a wee bit of sell-off for the Nifty, closing in towards the lower end of today's trading session. So far, down about 1/3%. And it's the Nifty Bank which is pressurizing it, down 333 points, 2/3%. What is the common factor between the Nifty Bank, as well as the Nifty Financial Index? It is HDFC Bank. Had it not been for HDFC Bank, today the Nifty would have been in positive territory by about 20 odd points. And even if you look at the Nifty Bank, the Nifty Bank is down about 333 points. The maximum contribution on the downside has come in from HDFC Bank itself. It's dragging it by about 480 points. So had it not been for HDFC Bank, both the Nifty as well as the Nifty Bank would have been in positive terrain. What is the impact that it has on something like the Nifty Financial Services? Well, the Nifty Financial Services expiry plays out today, and it is closer to that 22,800 mark. 22,800 put has the maximum open interest, and the 22,850 straddle, which is a call and a put together, has a premium of close to 75 rupees. So maybe the street believes that 22,775 could be an important support to track on the Nifty Financial Service, and on the way up, 22,900 of course would be an important resistance to watch out for. For the Nifty itself, the 24,300 mark remains a bit of a fulcrum. 24,300 call writers pretty active for a premium of 85 rupees. 24,300 above, closer to 24,350, 24,400, we may face some supply, as we have been seeing over the last few trading sessions, but there is a lot of demand coming in at around 24,200. That's what the action at 24,300 call suggests, put suggests. Two stocks that I'm watching out for. Aarti Industries down 15% now. Huge surge in open interest, may enter F&O ban, and also we are seeing incremental open interest being added on Piramal Enterprises. So there is an outsized chance that Piramal Enterprises also enters the F&O ban.
All right, Mangalam, thanks a lot for that, and come and join me back into the studio to go ahead with the show. But for the time being, we have Sachidanand Udekar of Trade Bulls who joins us. Hi Sachi, good day, and after a while I'm speaking to you at noon. Tell us, what's the strategy? Buying the dip has worked out. Do you think today as well is a prudent strategy? Mangalam just told us that the markets are down 60, 70 points. Would you buy the dip?
Good afternoon, Nigel, and good afternoon, Mangalam. Clearly, I think the market is range bound, especially if you look at yesterday's price formations. Both the Nifty and the Nifty Bank displayed a spinning top kind of formation, which is again indicating indecisiveness. But if you look at the data, the Nifty Bank still looks much more weaker because it has been trending below its 20 and 50 both exponential moving averages. So I think the resistance for Bank Nifty is very clear unless we don't see it surpassing that 50,800 mark on a closing basis. The chances of revival are bleak, and probably we may see the Nifty Bank sliding lower towards that 50,000 mark again. So we are expecting that Nifty Bank may continue to underperform. There is fresh weakness which is evident in a couple of its constituents, and that's why we believe that if one has to short this market, then I think Nifty Bank still presents a very good reward to risk ratio. Keeping a stop loss somewhere close to around 50,560, one can still deploy short positions here. We may see it eventually swinging towards 49,800. But when we look at the Nifty, so when we look at the Nifty, I think the Nifty is still holding on to that particular support, and there's a good chance that we may see a good outperformance here, and probably a swing towards 24,200 would be an ideal opportunity to create some long positions. So I think looking at the equation, it is better to keep a long-short ratio when it comes to stocks. On the short side, I think SBI has been on the weaker trajectory. We have already seen a kind of a bearish flag formation on its daily scale. That particular formation is now mature. It is looking at a breakdown point at around 810. So once we see this particular level getting breached, the stock can easily slide towards 785. That is the positional target. So we are recommending building fresh short positions when it comes to SBI. The stop loss for the trade should be placed at around 820, a positional target of 785. On the long side, Apollo Hospital, I think it is about to come out with its earnings. But if you look at the overall trend structure, it is a classic bullish flag formation on its weekly scale. Even today, we have good strong signals of long built-up formations, and the support at around 6,600 has been working well. So I think keeping a stop loss somewhere close to around 65.80, some long positions can be deployed here. We may see an eventual swing towards 68.60. The pattern target for the flag is placed at around 7,000. So I think there is a good outperformance in this particular stock, which may continue.
All right, take that point. Thank you, Sachi, for joining in and giving us your view on the indices and the stocks. Take a short break. On the other side, we have another management lined up for you. The management of NCC joins in to discuss their first quarter earnings.
Attacks on minorities, especially Hindus. Reports indicate attacks on Hindu households, temples and businesses. According to two Hindu organizations, minority communities faced at least 205 incidents of attacks in 52 districts across Bangladesh since the fall of the Sheikh Hasina-led government on August 5. The new interim government, led by Nobel Peace Laureate Muhammad Yunus, has assured that it's addressing the violence directed at Hindus and other religious minorities. The government said, and I quote, "The attacks on religious minorities in some places have been noted with grave concern. The cabinet will immediately sit with representative bodies and concerned groups to find ways to resolve such heinous attacks." The interim leader, Muhammad Yunus, has urged youth to protect all Hindu, Christian and Buddhist families from harm. Now, Hindus represent about 8% of Bangladesh's 170 million people and have historically supported Sheikh Hasina's predominantly secular Awami League party. On Sunday, Hindus and other minorities held a massive protest rally against the alleged attacks, urging the government to protect them and their families. Rallies were held in several cities like Dhaka and Chittagong, with lakhs of people taking to the streets. Now, what are the protesters demanding? Many reports suggest that protesters want immediate action to protect the community, the formation of a Ministry of Minorities, the establishment of a Minority Protection Commission, strict laws to prevent attacks on minorities, and the allocation of 10% of parliamentary seats for minorities. Protests were also held in the US and the UK, with over 300 Indian Americans and Bangladeshi origin Hindus gathering in Houston and a large crowd gathering outside the House of Parliament in London. While India is keeping a close vigil on the developments in the neighborhood, many Bangladeshi Hindus are trying to flee to India to escape the violence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com.
There's a saying, Shubhaste Panthanu Santu. Oh traveler, when you are traveling, everything should be pro.
Welcome back. Well, the markets have moved to the low point of the day, so that's something that you should keep your eye on. We have an article, a news report coming in from Bloomberg, where Torrent Pharma may raise up to $3 billion to acquire the controlling stake in JB Chemical. So maybe both those two stocks should be in focus. JB Chemicals, I think, is the one that should come up for you on the screen. Let's see if we're seeing any kind of reaction, because there is a suitor. For Torrent Pharma, well, they'll be raising some capital. So JB Chemical, well, I think the street wants to first see the deal, and then, in fact, they'll take a call out there. As it is, the stock has gone up multiple times in the last 18 to 24 months. But as promised, NCC, that's a stock on our radar. The company's revenue and profitability grew on a year-on-year basis, but margins contracted a little bit. The order inflow is something that we'd like to focus on. To discuss the numbers and the outlook for FY25, we're joined by Mr. Sharma, the head of strategy at NCC. Hi, Mr. Sharma. Good day, and thanks a lot for joining in. Let's just revise the guidance for this year. Earlier, you were talking about an order inflow guidance of around 20 to around 22,000 crores. Do you hold on to that with revenue growth of 15% and margins closer to 10%? On these three numbers, do you want to tinker with the guidance given earlier?
Not at this stage. Very good afternoon. Not at this stage. These numbers have been worked out, after a lot of thoughtful analysis, and a lot of thought has gone into these numbers.
Right.
So as we speak, we do not intend to revise any of these numbers. We stick with the same guidance that we have shared with the street.
And from the first quarter performance, it seems like you're pretty much on target as well. The first quarter revenues have been around 5,500 crores. You have 3 quarters to get to that 22,000 crore mark on the top line as well. And even as the margins were just shy of that 9%, I'm sure that, with increased execution post the election related lull, you can go back to that 9.5 to 10% sort of margin itself. What we want to understand is the order inflow trend, because the first quarter, understandably, again, because of the elections, etc., your order inflow was just around 400 crores. In the second quarter so far, how many orders have you got? And what's your order inflow target for this year?
Yeah. 3 questions. let me first try to answer the first question that you put to me. The infrastructure business continues to be a government, business that is continue to be dominated by the government and government agencies. So whenever elections are announced, there is generally a freeze on award of orders. So that is the reason the number that you get to see, that is, 400 odd crore, appears to be a little less number. That I fully agree with you. But when we had the last conversation, I think I shared this point of view with you that, the awards are expected to be a bit lull in the first quarter. That said, we continue to the second question, about the awards that we have received in the second quarter. As we speak, we have still not received any award, but we have already shared in the call that we have had a couple of days back that we are L1 in few projects, and we are quite hopeful of, converting those LOAs into LO order awards, very soon. The third question was about your about order inflow guidance. The guidance that we have shared with the street is 20,000 to 22,000 crore, and we continue to stick with the same target as we speak.
Okay. All right. So 22,000, got that. Mr. Sharma, you mentioned that you all are L1 in a couple of projects, and that's what's giving you this optimism that you can convert this into the 22,000 order inflow guidance that you've given. Quantify the L1 positions as of now.
It would be close to 8,500 crore.
And what is normally your conversion ratio?
It depends, at the end of the day, this is a call that, our client has to take. And it's a reasonably high degree. And even if I just try to extrapolate that, other than that also, we continue to see very healthy pipeline of projects which are expected to come up for bidding in the next couple of quarters. Even if I were to accept the proposition that they do not get converted into final orders, we have a very strong pipeline of projects which are coming up for bidding. And we are quite hopeful of, finally hitting the number that we have shared with the street.
So L1 is around $1 billion, 8,000 crores approximately. And
That's right.
You said that the pipeline is also strong. You want to quantify that you all are going to be looking at bidding?
The pipeline that we get, we see currently would be close to 2 lakh crore. But, as I have shared with you,
right.
It is it's the decision-making cycle of the client, There are clients that, take a little more time to really, start the process of bidding. But we are hopeful. And I reiterate that we do not see any reason as we speak to revisit these order inflow guidance numbers.
Obviously, with a 2 lakh crore bidding pipeline, even if you get 10% conversion ratio, you are getting that 20,000 crore mark in this year itself when it comes to order inflow. One of the things that the street is excited about is the opportunity in Andhra. There are talks of a multi-billion dollar capital city being built out there. You are based out of there. Some believe that you're well placed to get some orders from there. So when you say that 2 lakh crore, do you include this also in it? Or there is a separate number that you have ascribed to this? And also, do you have any pending claims from the earlier orders that you have from Andhra?
We have some, little bit pending claims, and that we hope to get, those claims. It would be close to 150 crore, and we are quite hopeful of, getting that payment back in about next couple of months' time. The first part of your the first part of your question was about, the possible awards from this state of AP.
Yes.
We have initiated the discussion with the clients, and we understand that, they are also trying to, evaluate the finer nuances of restarting the project, how to award the contracts, when to award the contracts, how to fund the projects. We believe that these discussions are actively going on at the client's end. And we are as eager as you, to really, to start bidding for these projects.
All right, Mr. Sharma, you're sounding reasonably confident about the way ahead. But before we let you go, we wanted to ask you about the smart metering opportunity. You already have 2 projects, I understand, of around 8,000 crores in Bihar as well as Maharashtra. What is the further update on that, and how large is this opportunity for you?
We have 3 projects really for the smart meter. The total order value would be about 8,000 crore. 2 projects are from the state of Maharashtra. The order value of these 2 projects from the state of Maharashtra would be close to 5,700 crore. The third project that we have bagged is from the state of Bihar. The value of that project is close to 2,300 crore. So all these projects are, making reasonably good progress. And, in the Bihar project, we have already started the trials of the meters. So these projects are making very good progress.
No, what we wanted to know is that, are there any other states which are likely to give you those orders as well? Now that you've proven your capabilities in both Maharashtra and Bihar, along in the 3 projects that you have there?
It would take some time. It would take some time because of the elections, this has not been a priority for the different state governments, agencies of the state government. But we believe the whole process would restart in about a month's time or so.
So then where is this optimism of 2 lakh crore pipeline coming from? Because smart meters, you said that this will take time. Amravati obviously will take some time as well. So this 2 lakh crore pipeline that you have, what kind of orders are these?
Primarily, it would be, we have 4 large businesses, the buildings, transportation, electrical T&D, water project. Then we have relatively small divisions, irrigation, mining, and railways.
Right.
The projects, all the projects that, but that said, let me take this opportunity. These are the pipeline of projects, prospective pipeline of projects. What it essentially means is these projects have been, announced by the different government arms. And, they are trying to finalize what is the right bidding pattern, the funding pattern. Yeah. So those details are something that is being worked out by our clients. And it will take some time, for us to really see for these projects to see the light of the day.
Got it. All right, Mr. Sharma, thanks a lot for joining in. Revenue growth of 15%, margins of 9.5 to 10%, order inflow of around 20 to 22,000 crores with a massive order pipeline. Appreciate you joining in. Stocks still holding more or less flattish, but the markets have moved to the low point of the day. Take a snappy break, come back. We'll continue to focus on markets and stock-specific action.
With beautiful roads from the Department of Transport, under Mr. Nitin Gadkari, we are all enjoying the great network of India. But there is a small problem in that he himself said that the 40% of them, the pollution, it comes from the road transportation. So this is a time for us. We have to think about pollution and how to reduce it. There are many ways to reduce, but I want to take one way that is known as the electrical vehicle, and we call it as EV in general. When you have electrical vehicle, things will be better, pollution will be reduced, green gas emission will be less, carbon dioxide will be less, it is fine. But to have that, we require following things. That is my suggestion. If we follow that, it will be really great. Number one, there is a new word by the name range anxiety. It has come into the picture. That means if you have electrical vehicle, you are always under anxiety when the battery charge will be over. So you have to always look at when I get a charging station. And when you get a charging station, following things, so you have to think there will be a big queue. Second one, in winter it doesn't charge very well because the battery cannot take it. Number three, how much time I get to charge my battery. To do all these things, we should have good electricity production. Normally, state produces electricity either by hydel or by thermal, maybe some people by nuclear. The kind of electricity we produce, it may be enough for our own state. In that case, where will I bring the extra electricity? I may have 10 charging points, but if I don't have electricity, they are null and void. So this is the main concern, the production and distribution of electricity for the charging points, for the level 2, to reduce the range anxiety. Second thing, like heart to the body, for electrical vehicle, the heart is a battery. There should be a good BMS, that is battery management system, and there should be a cell which also should be a very good quality. Then only the batteries can work very well and efficiently. Recently in Rajasthan, we have found out there is a new, the lithium is available. So it will be a great idea if in India we can manufacture our own batteries, and that may.
At the low point of trade today, and as we speak, we have a bunch of stocks which are lower. But let's talk about Hudco and IRFC. Their stocks in focus on the back of their first quarter earnings. Vamakshi joins in with the details of these two. Vamakshi.
Well, absolutely. It's a good set coming in for HUDCO. When we look at the disbursements, they came in at 12,625 crores. This is a huge uptick of almost 19 times on a year-on-year basis, and this growth is largely being led by their urban infra disbursements. Loan book resultantly saw an uptick of almost 30%, and with that kind of growth, they've actually managed to surpass what the street was largely expecting. NIMs, however, came in at 3%. This is lower as compared to their guided range of 3.1 to 3.3%. It has also seen a contraction both on a YOY as well as quarter-on-quarter basis. NII saw an uptick of almost 12%. PPOP, that is pre-provisioning operating profit, saw a gain of almost 16%, and net profit for the company came in nearly 25% higher. Moreover, we also saw the asset quality improve. GNPA stood at 2.42%. This is an improvement of almost 29 basis points sequentially, and NNPA too improved by almost 3 basis points sequentially. So overall, it looks like a good set for HUDCO, and as a result, the stock is reacting to a positive set of numbers. IRFC, on the other hand, reported a decent set. NII came in nearly 2% higher. PPOP came in nearly 2% higher as well, and the company reported a provision write-back of nearly 3.6 crores as compared to provision of 50 lakh crore on a sequential basis, and the net profit also was nearly 2% higher. So overall, decent set for IRFC as well.
Okay, all right. Thanks a lot for that. But let's focus on another stock. We have Aarti Industries that's taken smack today. Sonal joins us to help us out with the quick analysis. Sonal?
Well, you know, Aarti Industries is one company which spoke about sequential recovery much ahead of other chemical names. And that is something that made the street quite positive on this particular company. But now when we talk about the FY25 guidance, they're not very sure if they'll be able to achieve that 1450 to 1700 crore rupees of EBITDA guidance, because they say they are seeing volatility in margins. There's also pressure coming in from China in terms of pricing, and that is something that has taken the street by surprise. They do indicate that volume growth will continue to be at that 20 to 30% mark. The discretionary segment, which is a big part for their business, continues to do well. There is sequential recovery in pigments and dyes. However, agrochemicals recovery will come by only in the second half. They also talk about how Red Sea crisis has impacted global freight rates, and that is something which could impact volumes in some of the segments that they operate in. Debt stands at 3,300 crore rupees. They expect it to continue to be at those levels of 35 to 3,600 crore rupees. As I said, it has taken street by surprise. Morgan Stanley says they are evolving their product mix, getting into energy applications. That is leading to more volatility than what the company has seen earlier. They have a target price of 615 rupees a share. MK has a buy with a target price of 800. Yes, it is the fourth consecutive quarter of sequential recovery. However, they've gone ahead and cut EPS estimates on the back of this uncertainty on EBITDA guidance. Nuvama is raising target price, but that is because they are rolling over their estimates to Q1 FY27. They retain a buy rating. Kotak says company has suspended FY25 guidance for EBITDA. They retain their sell. Even management has indicated that long-term growth will be 20 to 25%, but Kotak says even that depends on a lot of things like global demand, pricing pressures, and the China factor. So that is something that they'll be closely watching out for.
All right, Sonal, thanks a lot for that. So that's about Aarti Industries. Meanwhile, take a short break, come back, get you more on the markets and a lot of other stocks on the other side.
Self-dependent, not dependent like oil, then we can produce a better design batteries which will help us for the EV vehicle in a long way.
The Hindenburg report just does not put the highest chair at SEBI in suspicions, but it also questions the institution and its conduct. It also questions Adani and its role, Blackstone, which is one of the largest player in the REIT space, along with brokerage firm 361, formerly known as IIFL Securities. Let's start with the allegations against SEBI itself. Hindenburg, in its report, has said that SEBI chairperson Madhavi Puri Buch and her husband Dhaval Buch had invested in offshore funds which were allegedly used by Adani to siphon off money. It was this investment which came in the way of SEBI's investigation against Adani and also the offshore funds in question. It is because of this why Hindenburg has also stated that SEBI can't be trusted as an objective arbitrator in the Adani matter. SEBI was also quick to respond on these particular allegations. The securities regulator has said that allegations made by Hindenburg have been duly investigated. Also, the chairperson had recused herself from these investigations for any potential conflict of interest. SEBI has also cautioned investors on the conduct of Hindenburg, stating that its disclaimer that it may have short positions in the entities mentioned in the report. Speaking about Hindenburg's allegation against the Adani Group, it says Adani used global offshore funds to siphon off money and reinvest them in the Indian market. SEBI chairperson's alleged involvement in the same funds came in the way of its investigation against Adani. Adani has called these reports malicious, mischievous and manipulative and being done with the intention of profiteering. An important clarification which Adani also gave was that it has no relation with any individuals mentioned in the Hindenburg report. Hindenburg has also questioned the offshore funds which were opened through 361 or IIFL. It says that these funds helped Adani siphon off money and reinvest them in Indian markets and also Adani Group stocks. The report has said that Madhavi Buch and husband invested in these funds opened by 361. 361 has said...
Welcome back. The Nifty is down close to under 100 points, but the Nifty Bank is the one that's doing a relative underperformance today. In fact, that's down close to around 500 points as we speak, courtesy big boy HDFC Bank. Let's pull up a sectoral contribution for you on the screen. The ones that are underperforming today is the Nifty Financial Services Index. That's the one that plays out the weekly expiry today. So keep an eye out on that. The bulls will be hoping that at some point of time we see a bit of a recovery. For the time being, that's not in sight. Metals as well are pulling back. That's down close to 0.7%. Data coming out of China isn't great. But the place to hide today for the bulls is healthcare as well as pharma. Both those two indices up 0.2 to around 0.3%. Throw in there the tech space as well. That one as well is higher. But that's it from Mangalam and myself and the entire team of Halftime Report. You stay with us though. Business Lunch comes up next.
Made zero investments in Adani. Madhavi Buch and Dhaval Buch's holding in the fund were less than 1.5% of the total inflow into the funds, also saying that the funds are fully compliant with all applicable regulations. Another party against which Hindenburg has made serious allegations is Blackstone and Dhaval Buch's role there as an advisor. The report says that Dhaval Buch's employment and Blackstone benefited from SEBI's regulations on REIT investments. Dhaval Buch, in his response, has said that his appointment at Blackstone predates Madhavi Buch's appointment as SEBI chairperson. Also, he says that at no point of time was there any association of him and the real estate side of Blackstone. Hindenburg sent a late-night counter asking if SEBI chairperson would commit to a full, transparent and public investigation into these issues. AMFI, which is also known as Associations of Mutual Funds, has said that they on the recent criticism against SEBI chairperson, stand by her and it's an attempt to undermine India's market progress, and added that India's financial system is fostering growth and innovation with high integrity.
Global funds category, international funds which are investing in, whether it's US equities or maybe you even have some greater China funds and whatnot. Now here as well, this category was first taxed at our slab rate, but now it's going to be taxed at 12.5% if the holding period is 2 years or longer. So Mohit, this sounds great. But, correct me if I'm wrong, a lot of funds were not taking any fresh money because of certain limits being hit already.
Yeah.
So is it even possible to invest right now?
It is. Quite a number of funds are accepting fresh investments. Few are accepting only as SIPs and few are open for both lump sum purchases and SIPs. It depends on the contours of the fund. Funds which are purely ETF based, those are the ones where the limit has got busted and those are the ones which have stopped. But funds which are actively managing their allocations, perhaps directly investing into stocks or international stocks directly, those are the ones which are typically open. There is a whole list of funds, but I think category as a whole, Surbhi, has got a huge impetus. And needless to say, for an Indian investor, it's absolutely must to have a global diversification. given the profile of our currency, which has been depreciating against the US dollar for almost last 20 years. If you see the track record, the depreciation has been on an annualized rate around 3 to 3.5%. If you want to counter that, if you want to have a real hedge against the country risk or the sovereign risk, or you just want to create a corpus offshore for your children's education or for anything, let's say, I think this is a great avenue available to retail investors, that you go out and invest in international funds. Again, this category got completely out of flavor.
Stocks trade in a range with advances and declines almost balancing each other out as earnings season draws to a close and investors wait for fresh cues like from the US CPI print later this week. Midcaps are outperforming. After a stellar post-listing performance by Ola Electric, first try owner BrainBees Solutions list with gains of over 30%, while Unicommerce eSolutions lifts at a hefty premium of 110%. MSCI's August review sees India's weight in the global standard index rise with 7 inclusions and 1 deletion. But what draws more attention is a weight up for HDFC Bank in 2 tranches and the embargo on the Adani stocks being lifted. Alstom India's managing director tells Money Control that the 30,000 crore rupee tender for 100 Vande Bharat trains has been scrapped as the tender panel capped the price per train at 140 crore, less than Alstom's L1 bid. Hello and welcome to Business Lunch here on CNBC TV18. I am Hormuz Fatakia. Let's first take a look at how the markets are faring this afternoon. And it's not good going for the markets. The indices have slipped to the lowest point of the day, particularly the Nifty now below that mark of 24,250. Remember, we recovered from the lows of the day yesterday, but still could not manage to hold on to levels of 24,350. And it is that level again where we saw some resistance early this morning. And since then, we've come off those highs. Now 24,238 on the index as we speak, and the bigger culprit for the Nifty fall today is the Nifty Bank, and that is also facing a lot of selling pressure in today's session. That too has slipped to the lowest point of the day, 1% down now on the Nifty Bank, 500 points lower now, trying to hold on to those levels of 50,000 on the downside. And the bigger culprit for the Nifty Bank's downside as well as the Nifty is HDFC Bank, and that is contributing to almost 80% of the Nifty fall in today's session. A slight recovery from the lows of the day, but still 2.7% lower is HDFC Bank, the biggest contributor to the Nifty downfall. It has received a weight up from the MSCI as was anticipated, but what was not anticipated was that the weightage will now be increased in 2 tranches compared to what the street was expecting in one go. So HDFC Bank, there you can see the contributors there. The Nifty is down 120.75 points coming from HDFC Bank. ICICI Bank and the others also contributing to the downside. Also, let's look at some of the stocks that are about to report results today. Hindalco is one of them, Apollo Hospitals is the other, and Hero MotoCorp. These are the 3 Nifty names that will conclude the earnings season. Hindalco, not much of a reaction in today's session. Apollo Hospitals trading close to the highest point of the day, 1.5% higher, and Hero MotoCorp also trading lower by 1%. All 3 stocks reporting results today. Let's begin Business Lunch though by focusing on 2 stocks that listed on the exchanges today. Online retail software services provider Unicommerce eSolutions saw a stellar debut, listing with over 100% premium to its issue price. Promoter and non-executive director Kunal Bahal told CNBC TV18 that going forward, they expect a significant part of their incremental revenue to go into the bottom line. Listening to what he had to say.
We are only about 4 months into this year. We are seeing a slight upswing in the volumes from last year. However, we are not yet seeing the significant surge in growth we had seen 2-3 years ago. We do anticipate that a significant part of the incremental revenue growth we will see this year, as was the case last year, will grow into the bottom line and ensure that we are continuing to grow our margins. So yes, last year our PAT actually doubled from FY23 to FY24, and our anticipation would be that we would continue to grow the profit even this year.
On to the other listing of the day, BrainBees Solutions, or First Cry as it is better known as, also had a stellar debut on the stock exchanges, listing at a premium of over 40% to its issue price. Now speaking at the listing ceremony, Mahindra Group's chairman Anand Mahindra said that investment in BrainBees was an experiment to figure out how do large business groups incubate and build new businesses. Here's more.
mandate for Mahindra Partners really was that they should be investing in, incubating companies, particularly in the new age fields. And then they invested and nurtured Mum and Me, which was a business in clothing and other goods for newly born children, for infants and beyond. Identical space that Supam was fighting in. After a while, they felt that consolidation was the way to value creation, so we acquired Baby Oye. And we were still fighting Supam. And then one day Zubin came to me and he said, you know, Anand, I've studied this man, and he's brilliant. He's an innovator, he's passionate, he focuses relentlessly on efficiency, he has a global vision, which I was delighted to hear Supam is being manifest today in the UAE and Saudi. And he said, this is the time for us to really create value by consolidating with them. I think we'll be better off supporting him rather than fighting him. And that, ladies and gentlemen, is why we merged with FirstCry and at that time became the largest shareholder.
A strong debut there for FirstCry as well. In fact, earlier today, FirstCry's MD and CEO Supam Maheshwari told CNBC TV18 that the company will outpace the industry growth of 20 to 25%.
If you look at our past record, we have grown at a CAGR of 20% plus in our India multi-channel, and we should continue to demonstrate going forward, given the industry itself is growing at that. Our international business has been able to improve our profile in terms of the negative EBITDA, because just the journey that we have started 2 years back in Saudi. With all of these businesses that we are demonstrating, and our small business on preschool also delivers close to around 18% adjusted EBITDA, close to which was negative in FY23. So with all of these four segments delivering meaningful expansion on bottom line, and we should be able to demonstrate at a consolidated level as well going forward.
Moving on to the other big news that came in this morning, the MSCI has announced changes as part of its August review, with changes set to be made on the 30th of August. Vivek is here to tell us more. Vivek, tell us what stocks are in and what are out.
Well, good afternoon. That's right. So, long-awaited MSCI index rejig, and the announcements are here for the month of August 2024 review. India will see net inflows of a little over $2.5 billion. And remember, this particular index rejig will ensure that India is now the second largest weightage as far as the EM index is concerned, almost 19.8% weightage in the MSCI EM index, next only to China. Now, when you talk about the MSCI Global Standard Index, the index that we track closely, given the fact that it has the highest impact, 7 additions and 1 deletions, largely along expected lines, which also, explains the kind of tempered stock reactions that you're seeing, given the fact that most of it has been priced in by the market. So, which are the inflows or which are the inclusion candidates? Number one, Zydus Life, almost $218 million of inflows is what Zydus will see. Other names include Prestige Estates, Dixon Tech, OFSS, Oil India, Vodafone Idea, RVNL. There is one deletion from the MSCI Global Standard Index. Bandhan Bank will be deleted, and expect to see outflows of close to a little over $100 million. All of these changes will take place on the trading session of August 30th. Now, the other important stock in focus was HDFC Bank. After the company had uploaded its shareholding pattern, there was enough foreign headroom for MSCI to go ahead and double the weightage of HDFC Bank within the index. There were market expectations that this would be done in a single tranche. However, MSCI has decided to go ahead and increase the weightage of HDFC Bank in 2 separate tranches. In this particular tranche, a little over $1.4 billion is what HDFC Bank will see on August 30th, and the remainder tranche, or the second tranche, will most likely happen in November 2024 review, subject to the fact that there is again enough foreign headroom available. Importantly, lastly, MSCI has also lifted the embargo on the treatment of Adani stocks, indicating that Adani stocks will now be treated at par with all of the other MSCI stocks that are part of the MSCI various indices.
Vivek, thanks a lot for that update. Not significant reactions seen in most of these names, as the street was already pricing in these potential inclusions as well as the deletion for Bandhan Bank. Moving on then, LIC has gained market share from other insurers so far in this financial year. Yash is here with more data. Yash, tell us more.
Well, Hormaz, we've collated certain numbers as far as the market share data for life insurance industry is concerned, and some interesting observations out of these numbers. Positive for LIC, but there is also a negative element when it comes to SBI Life Insurance. I'll tell you exactly why. First, let's speak about the market share in the total business. Total business includes both your individual business and group business. Here, LIC in 4 months of FY25 versus 4 months of FY24 has gained market share by about 272 basis points. All listed private life insurance companies in the same period have lost market share. HDFC Life has lost market share by about 34 basis points, ICICI Pru Life by about 10 basis points, Max Life by about 9 basis points. SBI Life, as I said, there is a bit of negative in the data for that company. It has lost market share in total business by about 193 basis points. Private life insurance companies in total, as I said, have lost market share by about 272 basis points. Now let's speak about the individual business. In individual business, LIC has lost market share by about 172 basis points. All private life insurance companies, but mind you, excluding SBI Life, have gained market share. HDFC Life with a gain of 83 basis points, ICICI Prudential Life with 63 basis points gain, Max Life with 40 basis points gain, but SBI Life in the individual business as well as lost market share by about 17 basis points. Now let's speak about the group business. A huge jump for LIC as far as market share in group business is concerned, which has grown by 500 basis points. All private life insurance companies, again, including SBI Life, have lost market share anywhere between 50 to about 282 basis points. The positive for LIC, as I said, gaining market share in the total business, gaining a big market share in the group business, but still losing market share in the individual business. Negative for SBI Life, as I had started talking about, losing market share in total business by about 193 basis points, losing market share in the individual business by about 17 basis points, losing market share in the group business by about 282 basis points.
Interesting data there, Yash. Thanks a lot for that. Some numbers flashing on your screen. Ipca Laboratories there, profit up 18%. The EBITDA has also seen a growth of around 28% from the same period of last year. Revenues are up 32%. Margins have been flattish on a year-on-year basis, a downtick of around 60 basis points. You can call that flattish. The stock seeing a bit of recovery, but seeing a lot of some volatility after the numbers are announced, currently at the flat line. Time for a short break here on Business Lunch. When we return, we get you more news and updates on the other side. Stay tuned. We'll be right back.
When the taxation was changed, and now it's come back into reckoning with full power and full force, and I think all investors should definitely look at diversifying abroad.
Your favorite funds here?
Look, many. Honestly, I like the Edelweiss US Technology Fund. I like the DSP Global Innovation Fund. These are all active ones, but on the passive side, I like the NASDAQ fund of funds, which currently the open one is only Motilal. I think they're accepting SIPs out there. So if someone wants to buy NASDAQ directly, I think that's a good avenue to go for.
Welcome back. Now, India's direct tax collections have surged almost 24%, driven by strong personal tax and securities transaction tax performance. Now, according to data published by the government as of the 11th of August, the gross direct tax collection increased by 24% compared to the same period last year, reaching 8.13 lakh crore rupees. Now, the securities transaction tax grew over 111%, while net collections increased by 22.5% year on year. Now, the 54th GST Council meet is set to take place on the 9th of September. Sources have told CNBC TV18 that issues regarding the recent notice to Infosys and foreign airlines and issues related to foreign shipping lines will be discussed in this meeting. The Council is also likely to take stock of the rate rationalization on exercise and provide updates to states with respect to the demand for reducing GST on health and medical insurance. Now, moving on to developments from short seller Hindenburg's allegations against the SEBI chairperson. A report by the Indian Express suggests that SEBI chief Madhabi Puri Buch and her husband had holdings in the Mauritius-based IPE Plus Fund 1 at the time the fund was being probed by the market regulator. Yash is joining in with more details. Yash, tell us more on this.
Hormaz, as you rightly pointed out, this is a report which has been published by Indian Express. And just going back to the original research paper from Hindenburg, it said that there was this one particular fund, IPE Plus Fund 1, which was opened through India Infoline. And the main allegation around this fund was that Vinod Adani allegedly invested funds from Adani in this particular fund and tried to reroute them in the country into the equity markets into Adani Group stocks. Now, what the report from Hindenburg says is that, from the report from Indian Express says, is that SEBI chairperson and her husband also had investments into the same fund, that is IPE Plus Fund 1. And as far as SEBI's investigation into the various offshore funds where Adani and affiliated parties invested in, this fund as well was under SEBI's investigation. Another important point which the report from Indian Express points out is that this particular fund which is in question, that is IP Fund Plus 1, was also under SEBI's investigation as a part of its larger investigation against the Adani Group, and the period under which this particular fund was being investigated by SEBI coincided or overlapped with the period that SEBI chairperson Madhabi Puri Buch and her husband had their investments into the same fund. Do remember, Hindenburg in its research report had pointed out that before taking over at the Securities and Exchange Board of India, Madhabi Puri Buch had transferred the authority to this particular fund in the name of her husband. 2 weeks later, after taking over, she had asked for redemption of this particular fund. So, of course, the larger question here which remains is that did the chairperson recuse herself out of the investigations against Adani, since there could have been a potential conflict of interest?
Interesting developments there, Yash. Thanks a lot for bringing us that. Time for a short break here on Business Lunch. Up next, we get you all the updates on the Kolkata rape and murder case. Stay tuned. Back on the other side.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
there has been a demand now in the public space for a while that the entire Hindenburg saga needs to be investigated properly by a joint parliamentary committee. And so therefore it would be in the fitness of things.
You're watching Business Lunch here on CNBC TV18. Moving on to the big national story now. The gruesome rape and murder of a 31-year-old trainee doctor at Kolkata's R.G. Kar Medical College and Hospital has triggered nationwide protests. In Delhi, the doctors are demanding an impartial investigation and adequate security for the medical staff. CNN News 18 Shriram Elizabeth spoke to a few resident doctors protesting in Delhi and asked them about their demands. Listen into a slice of that conversation.
देखो नाइट ड्यूटीज में हमें एक जगह से दूसरी जगह जाना पड़ता है बीच रात को 3 बजे रात को 4 बजे हम चाहते हैं कि देयर आर मोर सीसीटीवी कैमरास मोर बाउंसर्स व्हेन वी कॉल फॉर हेल्प दैट देयर इज अ प्रॉपर प्रोटोकॉल दैट व्हेन वी कॉल फॉर हेल्प इफ देयर इज वायलेंस रेप मर्डर एनीथिंग वी वांट अस टू बी प्रोटेक्टेड वी वांट कि उसके अरेंजमेंट्स हो जाए मोर सीसीटीवी कैमरास मोर बाउंसर्स मोर सिक्योरिटी फोर्सेस एंड वी वांट द पीपल टू टेक टू स्ट्रीट्स दिस इज नॉट अ पर्सनल इशू सिर्फ डॉक्टर्स तक सीमित नहीं होना चाहिए वी वांट मोर पीपल टू टेक टू the streets. The doctor was a female doctor. This can happen to anyone in their workplaces, anywhere. This is not a society. This is not a problem that is strict to the healthcare society.
So that is what the doctors here have been saying, that they don't feel safe in their own workplace, and that is why a Central Protection Act need to be implemented on ground. Apart from that, they are also in fact demanding that the entire case need to be handed over to the CBI. Remember, Mamata Banerjee yesterday has announced that by Sunday, if the state police is not able to crack the case, then the case will be handed over to the Central Bureau of Investigation. But the doctors sitting here are saying, why the delay? Why not hand over the case to the CBI as soon as possible? With these demands, this is the second day these doctors are sitting on strike. This is the scene that is being witnessed in all the 10 government hospitals in the national capital.
Moving on then, now Elon Musk interviewed Republican presidential candidate Donald Trump on social media platform X last night. The 2-hour-long conversation, which was delayed by over an hour due to technical glitches, featured the former president describing the attempt on his life, his political connections, and give his opinions on immigration and crime. CNBC's Becky Quick tells us more.
A wide-ranging, largely off-the-cuff interview with Elon Musk, Republican presidential nominee Donald Trump vowed to crack down significantly on illegal immigration while hitting out at the Biden administration over the state of the economy. The pair also touched on energy policy and last month's assassination attempt on the GOP candidate. Musk, the billionaire owner of X, also seemed to pitch himself for a role in a prospective Trump White House to help oversee government spending. On the economy, Trump said American voters were pent up with anger at the Democrats, blaming them for having let inflation spiral.
The thing that they really is making them angry is what Kamala and Biden have allowed to happen to the economy. It's a disaster with inflation.
Meanwhile, Musk attacked the Biden administration, blaming it for the U.S. fiscal deficit hitting record levels and offering Trump some advice.
We need to reduce our government spending. And we need to re-examine. I think we need like a government efficiency commission.
The Trump-Musk interview started nearly an hour late after X was plagued by glitches and technical errors. Musk said the site had been targeted by a cyber attack. CNBC has been unable to confirm that claim. Once the interview was underway, it said the attack demonstrated how people were opposed to simply hearing Trump's opinions.
Elon Musk there in conversation with Donald Trump. But with that, it's a wrap on this edition of Business Lunch from me and the team that put this show together. Thank you so much for watching. Midcap Radar takes the action forward.
Parliamentary committee is constituted to go into all these issues at length because they do require a quietus, and a quietus will only come once a joint parliamentary committee has looked at them.
हम मांग कर रहे हैं कि इन्वेस्टिगेशन होना चाहिए, फ्री एंड फेयर इन्वेस्टिगेशन होना चाहिए, और ख़ास करके जो ये पूरा मोडस ऑपरेंडाई है कि सेबी शांत रहा, सेबी ने ठीक से इन्वेस्टिगेशन नहीं की, अडानी समूह को लेकर कैसे उनका इनडायरेक्ट वहाँ पे इंटरेस्ट थे, तो ये जो इंटरेस्ट लिंक्ड हैं, जो क्विड को प्रो कोट है, उसकी जांच होनी चाहिए, उसका इन्वेस्टिगेशन होना चाहिए। और हम ये और पुरजोर तरीके से मांग करेंगे कि सिर्फ सुप्रीम कोर्ट ही नहीं, पार्लियामेंट में भी इसकी जांच होनी चाहिए।
कंपनियों और विदेशी संस्थानों के साथ आपका कौन सा ये रिश्ता पुराना है कि भारत के आर्थिक जगत के हर संस्थान के ऊपर आपका लगता निशाना है? और मैं स्पष्ट करना चाहता हूं, आज तक कांग्रेस और इन्होंने कभी किसी विदेशी कंपनी के खिलाफ कोई बयान और आंदोलन नहीं किया। हम जब विपक्ष में थे तो स्वदेशी आंदोलन हम करते थे, और जब हम सत्ता में आए तो मोदी जी की सरकार ने मेक इन इंडिया किया। अर्थात हम भारत की अपनी आर्थिक आत्मनिर्भरता को मजबूत करने के लिए प्रतिबद्ध हैं, और ये भारत के अंदर आर्थिक अराजकता लगाने के षड्यंत्र में लगे हुए हैं।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
So how can a patient distinguish between a migraine or any other type of headache? And there are many types of headaches, such as tension headaches or cluster headaches, or brought on by other conditions as well.
Yes, the common headaches with which migraine can get confused are what is known as tension headaches, the sinusitis-related headaches, and much rarer are what you mentioned, cluster headache and new daily persistent headache.
Good afternoon and welcome to Midcap Radar. I'm Vivek Iyer, and with me today is Hormaz Fatakia. Good afternoon, Hormaz. It's a red-looking screen. We've given up most of the gains. Nifty Bank amongst the top sectoral laggards, given the fact that HDFC Bank has squeezed quite a bit of a sell-off, especially after the bit of a disappointment it saw as far as the MSCI weight increase is concerned. Overall, markets are seeing quite a bit of a sell-off, and it's been a muted start as far as this particular session is concerned. What's on your radar, Herman?
HDFC Bank is the culprit, isn't it? But we'll start off with the headlines that we have on the radar today. Dalal Street is under pressure currently, with key indices trading near the lowest point of the day, led by financials. Mid-caps are in the red, but relatively outperform.
Aarti Industries slides in trade after the management says they will revisit their EBITDA guidance due to volatility in margin and pressure from China. Brokerage firms MK and Nuvama are bullish on the stock. Kotak retains Nestle, while Morgan Stanley remains equal weight on the stock.
Inox Wind zooms yet again after the company has bagged a 51 megawatt equipment supply order from Everrenew. The stock is up over 6%.
It's a strong listing for Brainbees Solution and Unicommerce at Dalal Street. First Christ's parent company lists at 651 rupees versus the issue price of 465 rupees a share. On the other hand, Unicommerce sits at 235 rupees versus the issue price of just 108 rupees a share. Well, it's a red screen, especially in the last 1 hour. We've seen the sell-off accelerate. A lot of important results is something that the street is awaiting at this point of time. Hero MotoCorp is one stock, from the Nifty that will declare its results shortly. The other stock on the radar, of course, is Apollo Hospitals. That stock too, and that company too, will declare its results. And watch out for Hindalco as well. Hindalco too generally reports its results during market hours itself. So a couple of stocks, especially from the Nifty, that will be reporting its results and be important to track them. Hormones, what are you looking at?
Interestingly, the index is continuing to face pressure around that 24,250 mark. And barring pharma and IT, most of the other sectoral indices too are continuing to trade in the red. Nifty Bank, of course, being the culprit, the bigger one because of HDFC Bank. But the metals index is also seeing a bit of a sell-off in today's session. But in our segment Midcap Movers, Vamakshi is here to take us through some of the other names that are buzzing around in the broader market space. Vamakshi, good afternoon.
Well, good afternoon, Hormas. Yes, it's red across the screen, but the mid-cap index is performing relatively better. Let's look at the top gainers in today's trading session. The Triveni Turbine is seeing an uptick of almost 14.6%. Electra Greentech reacting to a good set of numbers. The stock is up nearly 8%. Keynes Tech, Inox Wind, an order win coming in for the company, and as a result, Inox Wind is surging by almost 8%, and Fortis Healthcare too is seeing gains of around 4%. Top losers in today's trading session, of course, includes Aarti Industries. Weak commentary coming in from the management, and resultantly the stock has declined by almost 15% in the trading session today. DOMS, despite a good set of numbers, has tanked in the trading session today, down nearly 6%. We also have Cochin Shipyard, Chambal Fort and Deepak Nitrite down and out in trade, somewhere around 4 to 5%. But there are a couple of stocks that are gaining, and gaining on the back of good momentum as far as volumes are concerned. Ratan India Enterprises is up nearly 6%. Blue Star 2, consumer durable name, up nearly 4.5%. But Sun TV, there are strong volumes coming out there, and it's declining for the second straight session. Remember, the stock declined after reporting a weak set of numbers in the trading session yesterday, and it continues to decline today. AI Engineering too, down nearly 5%. Apart from that, it is the consumer durable index which is actually gaining momentum in such a weak market. Blue Star 4.5%. V-Card Industries also up nearly 3.5%, and Dixon Tech up nearly 3%. So overall, the consumer durables gaining momentum.
Well, actually, thanks a lot for that. Keep an eye out on Sun TV in particular. Remember, the stock is in the F&O band today, so we'll keep an eye out on that as well. But moving on to an exclusive story, sources are telling CNBC TV18 that Bajaj Auto is likely to increase the capacity for its CNG motorcycles. Parikshit is joining in with more details. Parikshit, tell us more.
Well, yes, this is a company that Bajaj Auto has been betting on in a big way. They have received 60,000 inquiries for the Freedom 125 CNG motorcycle since the launch on the 16th of July. That is since less than 1 month. Now, at the moment, we hear that the company has a plan to increase capacity for the CNG motorcycle to 20,000 per month by the September-October period. And by the end of August, they would like to hit a capacity of 10,000 per month because they are receiving good response. For the moment, they're sitting on an order book of 13,000 motorcycles. 1,600 have already been delivered since the launch, and 5,000 CNG motorcycles will be delivered this month. So all in all, the company believes that this is a motorcycle, a segment that they are going to gain in. The company is already selling these motorcycles across Delhi, Karnataka, Kerala, Maharashtra and Gujarat, and 86 towns in these cities. There is also a plan to expand the sales footprint of the Freedom 125 CNG motorcycle to pan-India within the next few weeks.
Thank you so much for that, Parikshit. A very interesting story, and capacity expansion as far as the CNG motorcycle is concerned. It'll be interesting to see, the kind of rub-off effect this particular development also has on CNG stocks like MGL as well as IGL. But let's now slip into a short break. Up next, we'll be joined by the management of Uflex to discuss the Q1 numbers and outlook going forward.
Now, migraine is easy to recognize if you know the features, because as you have already mentioned, these are recurrent headaches which are associated with sometimes nausea, vomiting, inability to tolerate light, sound, sometimes smells, and they are highly disabling. The patient may not be able to function for almost 24 hours or even more. And there is a positive family history of not the same severity, but some recurrent headaches. Now, as against this, when you look at the other headaches, tension headache, they are more or less what we talk about them as featureless headaches. They are not associated with nausea, vomiting, disability, and they don't have trigger links so clear-cut as in migraine. And then when you come to cluster headaches, they are more always on the same side, accompanied by watering of the eyes, running nose, and they don't have trigger links too. So it is not difficult. And the commonest mistake which patients make on their own is to think that all recurrent headaches are due to a refractive error in the eye, and they go for an eye check to the ophthalmologist. They may have a small number, but they have to remember that if there are trigger-linked headaches, that eye problem is not the cause of their headache, and they have to seek correct medical opinion.
Okay.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that...
Welcome back to Midcap Radar. Let's now immediately move to the first corporate on the show. We have Uflex Management. The company saw a sharp expansion of over 250 basis points in their margin on a year-on-year basis, while net losses narrowed. Management says that they will end FY25 with volume growth in the range of 6 to 7%. Rajesh Bhatia, the CFO and Group President of Finance and Accounts, joins us now. Good afternoon, Mr. Bhatia. Thank you so much for joining us now. First up, let's start off with the volume growth guidance itself. 6 to 7% is what you have indicated to the street. Give us a sense of where is it that you're seeing demand coming from, and also give us a sense of how is it that BOPP as well as BOPET spreads have actually performed in the quarter gone by.
So I'll first tackle the BOPP and BOPET spread. So as we've seen from 1st of April till end of July, we've seen about a 30% increase in the BOPET prices and about 18.5% increase in the BOPP prices. Of course, this hasn't happened in one go. It has happened gradually. But when I compare the position from 1st of April to end of July, that's what the position is. There have been a raw material increases also in the range of 5 to 8% for the two categories. But generally, I've seen that the margins have improved and the volumes have also improved, as you would have seen from the financials. Overall guidance, last time what I had given for the top line for the year as a whole was about 15%. Happy to say that first quarter we are up by 12.3% on a year-on-year basis. So that 15% looks quite feasible. And we have seen, the bestest ever quarter for our aseptic packaging business, which has seen about 6.8% Q-on-Q growth. And even on a YOY basis, because, you compare here a season to season, we've seen a plus 3% growth. And end of the year, when we'll up and running the larger capacity of 12 billion packs. So the next year looks to be extremely promising for this. On the overall guidance for the packaging, on the sales volume, I think the sales volume from aseptic packaging from our new division, which is PET chips, happy to state that even PET chips has achieved in the first quarter itself, Panipat plant has achieved a 65% capacity utilization, of which about 30% is bottle grade chips, which opens up new vistas for the UFlex. It's a new product category that we have created. So we're not only making the chips for the packaging films, but we are also making for the PET bottles as such.
Mr. Bhatia, good afternoon. Thank you so much for joining in. Now, I wanted to ask you about how have margins for your packaging films business moved this quarter, and if you can couple that up with how much with the volume growth that you mentioned for the 6 to 7% for FY25. Can you break that up in terms of the aseptic packaging as well as for the packaging films business?
I think packaging films, the volumes in the aseptic packaging category are about 3% higher on a year-on-year basis. For the packaging films, the numbers in India are up by about 5% on a YOY basis. So that's healthy. So a mix of these two plus the new businesses streams like, the CPP films, which got commissioned in Russia, plus, the likely commissioning of the Mexico, the films plant. I think we will have overall about 6 to 7% volume growth in, so about 4% coming from the packaging films and the rest coming from the aseptic packaging.
Okay, Mr. Bhatia, see, we're looking at the guidance once again. So number one, you've reiterated the 15% top line growth guidance. Now this is going to come on the back of a 6 to 7% volume growth, indicating that there is going to be price improvement. You already have indicated that Q1 did see some price improvement. Going forward also, number one, you've said that you will stick to the top line. What is the EBITDA, core EBITDA growth guidance that you're giving? What kind of margins can we expect for FY25? And what is the corresponding PAT or corresponding bottom line growth that we can see over FY24?
I think what we can expect for the year with a 15% top line growth, EBITDA anywhere in the range of 2,000 crores plus. It could be, if the prices keep on supportive, remain supportive, it could be between 2,000 to 2,200 anywhere. Also depends on the timing of the new project commissioning and all that. So if we get in the Q4 the gain of the aseptic as well as the plant in Egypt, I think we could be up for a pleasant up surprise. Which I think would be is what we feel that could be possible. So between 2,000 to 2,200 crore will be the EBITDA for this year.
Right. Very quickly, Mr. Bhatia, one final question due to paucity of time. Your current net debt is around 56-67 crores at the end of the quarter. Do you see that as your peak debt? What do you see? Is that your peak debt? And do you see that number tapering down? What do you expect to end the year with?
I think we can look at the peak debt of about 6,000 odd crores. Not much difference from here, given that, some of the projects are yet to commission in the current year. So take the peak debt as 6,000 crores for FY25 end.
All right, Mr. Bhatia, we'll leave it at that. Thanks so much for joining in and sharing with us your thoughts on the road ahead for the company. That was the management of UFlex. stock not doing very well in today's session, down around 7.5%. Time for a short break here on Midcap Radar. When we return, we'll be joined by the management of High-Tech Pipes to discuss their quarter gone by and the outlook ahead. Stay tuned. Back on the other side.
FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
Finance Minister Nirmala Sitharaman is just a few hours away from marking a new record. The CNBC TV18 coverage of the Union Budget starts right now.
Back with us here on Midcap Radar. On to our next corporate conversation then. High-Tech Pipes reported a good quarter first numbers. The EBITDA was a beat on estimates. The margins also saw an expansion, while they also reported their highest ever quarterly sales volumes. To discuss further on their quarterly performance, Anish Bansal, who's the CEO of the company, is joining us on the show. Anish, good afternoon. Thank you so much for joining in. Congratulations on a very strong quarter. I'd like to start off by asking you about your volume targets for FY25. You had ended FY24 at around 391 kilotons. What's the number that you have set for this year, and also how much of that would be exports?
Good afternoon, Hormuz. Thanks for this call. So we did a volume of 122,000 in Q1, and we are hopeful of achieving 500,000 ton for this financial year, coupled with a good domestic demand and a lot of capex that is poised to come in H1, and also because of the new established facility in Gujarat that we have recently commissioned. That plant, we are seeing good order flows in that plant, and we have entered new segments which earlier were not there. So we are quite bullish on the demand side, and the production side, we are geared up to meet this demand for the whole financial year.
How much of the 500,000 ton would be exports, Anish? You had mentioned in your previous interactions with us that it would be around 10 to 15%. Do you stick to that number, or it can be higher as well?
So right now, we are seeing like good demand from the domestic side. So our current focus is to meet the domestic demand, and exports. Yes, we'll be maintaining our 10% target for this financial year.
Anish, Vivek this side from the research team as well. Your EBITDA per ton currently is at 3,500 rupees per ton. When we compare it to your peers, who are larger in size, they have EBITDA per ton that actually starts from 4,000 rupees a ton onwards. And the story is the same even when it comes to the value-added products as well. So what plans do you have in order to go ahead and expand the EBITDA per ton that you currently enjoy on your products?
So Vivek, yeah, in our current portfolio, the share of VAPs is around 36%, and the newly added facilities, they are more towards the value-added side. So I think going forward, our target is to increase this 36% VAPs to almost 50%, which will eventually take our blended EBITDA per ton from 3,500 rupees to 4,000 and upwards, maybe.
When we compare it to your peers, even in the VAP segment, we generally see that they enjoy EBITDA per tons in the range of 6 to 12,000. And also, could you give a timeline as to when exactly do you see this particular mix going more in favor of VAP compared to how it is currently put out as?
So, Vivek, the newly added, facilities in Gujarat and in our UP plant, so they are mostly focused towards value-added products. And we are hoping, by next 2 to 3 years, we'll have the total mix of value-added products will be upwards of 50%. In that case, our EBITDA per ton on a blended level, it should be between 4,000 to 5,000 rupees per ton. That will, lead to higher profitability margins.
Anish, you spoke of the recently commissioned units for your company. How much has that taken the total capacity to? Point one. And point two is there a plan to add more capacity as the year goes by? And more importantly, is there a plan to add more capacity through the inorganic growth plans?
Yeah, so almost currently we stand at 7.5 lakh tons, and we have 2 more new facilities that are coming up in this current financial year. So by the end of this financial year, the total combined capacity will be almost 1 million tons. And going forward, we are seeing the industry size becoming 2x or 2.5x in coming 6 to 7 years. So we'll be on the capacity expansion spree once this capacity addition is done for this current financial year.
But are you looking at any inorganic growth plans as of now, Anish?
So currently, nothing on the table right now, but we are actively looking towards, we are looking for some good opportunities in the industry. But right now, there's nothing much on the table. But our greenfield expansion, I think that is more that we are focusing towards on.
Any targets you're looking at internally? What would be the possible capacity, and what would be that you're willing to spend to acquire any capacity via the inorganic route?
So our vision is to take the installed capacity to about 2 million tons in coming 3 to 4 years, and we are open to any any acquisition, any brownfield facility that may come up. So we are open towards it, and the exact amount and all, it will all depend on the size and the capacity that particular project that may have.
So
Anish, just another question. As far as the inputs are concerned, what kind of steel do you use? Do you use secondary steel, mainly the scrap steel, or are you actually looking at primary steel? Because when you're looking or tracking the prices of HRC steel, it's actually come down quite drastically. Now, in this falling raw material price scenario, how will you protect your margins?
So Vivek, we work in the primary steel segment, and we buy steel from all the primary mills, which are the the topmost mills of the country. And you are right. Steel prices have softened a bit, but from the long-term perspective, I think lower prices that lead to higher volumes that we have seen historically. So once the steel prices are stable and they are on the they have softened. So I see a good demand coming from the shift from the unorganized space to the organized space. So I think that will entail very good for the company going forward.
Anish, due to paucity of time, I'm combining 2 questions into one. First up is at 1 million tons an annum, which you have mentioned as your future capacity. What will your balance sheet look like in terms of debt? And also, when it comes to your return ratios, your ROE and ROCE, they're at 8.9 and 10% respectively. How much do you see them improving by the end of the year?
So almost we are nearly at our peak debt levels, and the most of the expansions that were in place, they are coming on stream. So going forward, I think the total debt will come down surely.
Okay.
Is there a number that you have in mind, Anish?
So currently, as on FY24, our total, debt profile was around 350 crores. I think it will come down, and hopefully in 2 to 3 years, the company should be net debt free.
And lastly, on the return ratios as well, do you see that number improving by the end of the year from 10% and more?
Yes, definitely. We'll see a significant improvement this year. Significant improvement.
Okay, we're really running out of time. We have a lot of questions, but not enough time today. We'll get you on the show once again to get it, even more details from you. But that was the management, speaking to us and telling us about how Q1 was and how do they expect FY25 to pan out. But that's all the time we have on this edition of Midcap Radar Mutual Fund Corner when we return.
Hello and welcome to CNBC TV18 Motilal Oswal Budget Headquarters.
Namaskar. Imagine you're watching a cricket match, international cricket match between India and Australia. And every single person who's watching the match and those playing the match know that the umpire is compromising. What would happen to the match? What would happen to the fairness of the match? What would happen to the outcomes? How would you feel as somebody who's participating in the match? This is exactly what is happening in the Indian stock market. Over the last few years, larger and larger numbers of people have been investing in India's stock market. They invest their hard-earned, honestly earned savings in the stock market. And it is my duty as leader of the opposition to bring to your notice that there is a significant risk in the Indian stock market because the institution that governs the stock market is gone. Now I'm going to explain to you exactly how and why it is gone. A very serious allegation against Adani was illegal share ownership and price manipulation using offshore funds. It has now emerged that SEBI chairwoman Madhavi Puch and her husband had an interest in one of those funds. This is an explosive allegation because it alleges that the umpire herself is compromised. The savings of millions of Indians, hard-earned, honestly earned savings, are at risk. It is therefore imperative that this matter is investigated. Retail investors, honest investors, pensioners have three questions. The first, why has Chairperson Madhavi Puch not resigned? Second, God forbid something were to go wrong and investors were to lose their money. Who is responsible? Is the Prime Minister of India responsible? Is Madhavi Puch responsible? Or is Mr. Adani responsible? And finally, the Supreme Court has been looking at this case. New allegations have emerged, very serious, explosive allegations have emerged. Is the Supreme Court going to look at this matter suo motu again? Slowly becoming crystal clear.
Hello and welcome. You're tuned into MF Corner. I'm Sonal Bhutra in the Mumbai studio. Today on the show, we'll discuss or rather explain to our viewers what are the basic mistakes that one should avoid while investing in mutual funds. Mistakes like prioritizing just the historic returns over the quality and future prospects while choosing a fund. Questions like looking at a particular date to start your SIPs and a lot more. To take this forward, we have with us Rahul Jain, President and Head at Nuvama Wealth. Rahul, good afternoon. Thank you so much for joining us. It's been a while since we spoke to each other, so good to have you on the show. And, you know, we are talking at a time when we are seeing a lot of volatility in markets. There are global headwinds as well. So at this time, it's very important to understand what not to do as well. So let's start with the basics. What are some of the most basic mistakes an investor makes while investing in mutual funds?
So hi, Sonal, and thank you for inviting me to your show. So I must start by saying that if you look at a mutual fund as a vehicle or instrument or a category, I think it has allowed a lot of Indians to invest into equity markets and finally be part of the Indian growth story. And while I think the whole the momentum around mutual fund is going up, I think there are certain mistakes which when we meet clients, we see it very regularly often, and then we advise not to do the same. I think the first and foremost is that the core philosophy of building wealth or growing your wealth over a long period of time is using asset allocation, where asset allocation means that diversification between three large categories: equity, fixed income or debt, or gold. I think that is the best way of diversifying your portfolio. It's automatically way of reducing risk on your portfolio. And there's a common saying also that in market which go up, you generally become blind to risk. In the market when falling, you become blind to opportunities. And I think by using asset allocation, you avoid all that, and you can do actually the vice versa of the same. I think that is one thing which every mutual fund investor should follow. So this is one I would say I would think that as an investor or a mutual fund investor you should look at. Second is that we see a lot of mutual fund investors who have large number of schemes. So I've also met a client who has 50 mutual fund schemes invested into. I would say that over diversification or having too much of schemes or mutual fund in your portfolio can be very ineffective because your ability to monitor them becomes very difficult, very challenging, and that is where your portfolio becomes inefficient. Third is, I would say it's not a mistake, but I would say that we always advise that while you invest in mutual funds, you should always have a goal and objective. If you don't have, you still can start, but having an objective will always allow you to plan your cash flows, your what amount of money you should invest if you have a goal objective, and then you can work around that accordingly. And fourth is that it's not a mistake, but what we keep telling is that if you don't understand on your own, I think it always be better to take advice from someone who can help you out in selecting mutual funds, selecting schemes, and also while you select those, I think the other important part is to monitor and regularly review. So these are four things which I say that can be common mistakes or something which people should look out for.
No, absolutely. And these are the most basic things, but it's important to keep them in mind for sure. And you know, the next question is the usual understanding of mutual funds. It is that they track returns of an underlying, be it equity, be it debt, gold, or a mix. You said asset allocation is important. But do you think that much understanding is enough and you don't need to go beyond that?
So I would say that, yes, tracking to the underlying is important because while you're investing in something, having a benchmark where you can compare it to is important and critical. It's always good to have a benchmark where you can compare it to. But it's not that in complete sense. I would say that the fund manager, his skills, the practices or the process what the wealth management, the fund management team uses is also very critical and very important while you look out for the mutual fund performance. I would say that the consistency and the quality of the returns is very critical and important, and just tracking to the underlying might not be the only thing.
Okay. So that is about the underlying. But sometimes what happens is when somebody is looking at mutual funds, the first thing that they look at is past returns. What has the fund done in the past? But is that enough to decide whether you should invest in a mutual fund or not?
So, again, a very similar thing where when you're investing in a mutual fund, you have to look at future, because whenever you invest, you have to look at future. And you have to look at the fund manager thesis, his strategy, his thinking, his thought process on the same. But yes, I would say looking at past performance is also very important, because there has to be some benchmark, some thought process thinking on looking and how to evaluate something. And in that sense, past performance is an important parameter to look at. So while you look at, I would say you should look at on funds which are consistent and which have quality. So one of the things is that there are a lot of people who go invest in looking at 12-month return. I would say that just not look at 12-month return, look at a 3-year, 5-year horizon as well. Another thing is that you should also look at a mutual fund which has done outperformance over the benchmark or have been the top quarter in a large part of their quarter. So that is where consistency also comes into picture. So while you look at past performance, you should not get biased by just looking at the short-term performance. Having a longer-term performance also into context will be important and critical.
Okay. When we talk about returns, one thing that people don't talk about is risk, because risk profiles could be different for different people. In that case, which risk profile should be kept in mind for different categories, be it the equity category, be it the debt category, gold for that matter? How can one go about doing that investments?
So I think, again, the risk categories are also important, and risk is, I would say, your ability to take risk and your willingness to take risk. To just make it clear, I would say ability is more on the basis of your family background, your current salary, your net worth, etc., which creates that ability for you to take risk. Willingness is something which comes from how you react to risky movements. For example, if market is going down or if your investments are going down, how would you react? So generally, you will find a lot of people who are not very risk averse. They would say that we want to take risk. There are people who don't want to take risk, and their behaviors are very different. So having a risk understanding is important, because that will allow you to have a understanding between asset allocation. So for example, an aggressive investor might take a more percentage of portfolio into equities, while on the other hand, a conservative will have more fixed income or debt into the portfolio. So that is one thing which you have to look out for. I think when you look at equity allocation also, your risk differs, correct? A small cap versus a large cap has a very different risk levels effectively. So while you look at your asset allocation level, I think then the mapping in the equity allocation also you have to understand your risk. And if you're conservative, then you might go into more large cap. But if you want to invest for a very long term and you have age by your side and you're a high risk taker, then you can go with more mid cap, small cap. So I would say that risk is an important parameter while you're looking on thinking of investing in mutual funds. Which category to pick, how should your asset allocation all is somewhere related or correlate to your risk profile.
And the kind of returns that we've seen in last 3-4 years, it's very important to understand the risks associated with different asset classes as well, for sure. Rahul, we have to take a quick break, so we'll do that. On the other side, we'll continue our conversation with you to understand all about the mistakes that you need to avoid while investing in mutual funds. Stay tuned.
Is against a joint parliamentary committee looking into this.
Welcome back. You're still tuned into MF Corner. We still have with us Rahul Jain, President and Head at Nuvama Wealth, and we're discussing everything about what you shouldn't do while you're looking at investing in mutual funds. Rahul, you know, a lot of investors, they always have this question whether a particular date is good for SIPs. Is this true? Is there this magic date when if you invest, things will work out for you?
There is no evidence, empirical evidence for telling that there is particular date where you invest, the chance of you getting better rates is available. I would say that SIP rates are there for convenience to the investors or clients so that they can manage their cash flow. And I think that is what it's all about. There is no magical date, Sonal, where you can finally help people to make more money on mutual funds by predicting date.
If only one could do that, but history just shows us that keep doing your SIP no matter what, be it a down day, be it an up day or anything for that matter. So in that case, Rahul, what is more important, the fund or the AMC? You can have multi-cap funds across AMCs. You can have a fund with, you know, similar holdings also across AMCs, because a lot of times investors look at the AMC rather than the constituents of a fund, maybe the size of the fund. What should their ideal investment strategy be in this case?
So I would again, both are important, where the fund and the AMC both are would be important parameters to check out for. I would say that whenever a investor is looking out for investing in any mutual fund, he should look at both qualitative and quantitative aspects. So whenever you look at qualitative aspects, it will be more towards the fund or the asset management company who's managing it. So there'll be pedigree of the organization, the asset management company, the credibility of the fund manager, his vintage, his performance, past performance, which will come into play. So all these qualitative facts or parameters will allow you to understand more about the fund management team or the company. The quantitative part is more towards the actual that fund, where there is the past performance, which also we spoke earlier. That is an important parameter. The other parameter is the expense ratio for that particular fund. What is the particular strategy for that fund which is getting used? And there are other risk ratios or ratios which can help you tell how that fund is versus the other ones, which can allow you to finally select out a lot of schemes. So I would say that it will always be a combination of the asset AMC and the constituent of fund coming together. It has to be a combination of both. It cannot be independent. And I would say that an investor should not only look at the mutual fund AMC, or he should not only look at the constituent fund. He should look at both coming together.
It is a combination at the end of the day. You know, let's take it a little forward, because when we are talking about mutual funds, suppose you've chosen one. In that case, which would be better for an investor, dividend plan or growth plan? Because there have been a lot of changes the way things are taxed as well now. So what would you suggest here?
So dividend plan and growth plan depends on the objective of the investor. These both plans are only relevant for the equity part mostly. If your aim is to build wealth over a longer period of time while investing into equity mutual funds, I think then the growth plan works well, because there's a compounding which is happening where your money is getting compounding. Also, the extra what you're earning is also getting compounded. And for generating wealth over a long period of time and creating a substantial amount, I think compounding at the play is very, very important, very, very critical to keep in mind. So if someone is looking for wealth creation over a long period of time, I think growth works well. There are a lot of investors who want cash flow also. So for them, a dividend option might be more relevant in that sense. But while you choose this, I think you should also keep in mind that tax implication. So all dividend payouts are taxed at your slab rates, or you can say MMR, while your growth, whenever you do the redemptions, there are taxed in either short-term capital, which is 20%, or long-term, which is 12.5. So rather than taking dividend, you can take redemption also effectively, and you might have a tax saving there as a strategy. So that is something which an individual can look out for. But obviously, since the objective of investors can be different, and then according to their suitability of the objective, they can assign or they can think about investing in a growth or a dividend plan.
Okay, because the general idea was do not invest in dividend funds, you'll have to pay higher taxes. But of course, it also depends on your cash flows. If you need that regular income, maybe you would go ahead and invest in a dividend fund when it comes to equity mutual funds. Say, Rahul, once you do the SIPs, how often is it important to monitor it, reassess the investments you've made?
So SIP is done from long-term perspective, and SIP can allow you to build sustainable wealth or a sizable wealth over a period of time investing in small chunks, I would say, where the compounding happens over a longer period of time. So one thing is that you should continue your SIPs for long-term and think long-term there. Also use the bad markets, falling markets to average out your SIP. I think that's a best way. Now, coming to your point, Sonal, of monitoring or reviewing, I think it depends on investor to investor. But reviewing in a 3-month period or quarterly or half-yearly is a good one. While you review or monitor your portfolio, I think the core is that the weaker or the fundamentally weak mutual funds that were not doing well, etc., should be weeded out, because what we have seen that people keep adding new schemes but are not weeding out the fundamentally weak schemes out of the portfolio. Those fundamentally weak schemes actually create a lot of drag on the portfolio. I would say they reduce the return on your portfolios, and in the end, they also reduce your compounding, etc., which can have impact on your long-term money, what you could have created if you would have done this exercise well.
Okay. You know, what is happening now also is, Rahul, that a lot of people are using borrowed money to invest in mutual funds in order to beat their interest rates, because the returns in markets have been really high. Is it advisable at all? What's the general sense that you're getting when it comes to trends right now, when it comes to the younger generation investing?
So we don't advise leveraging for investment in equity mutual funds, because end of the day, when I was earlier speaking about asset allocation, it is a combination of equity, debt, and gold. Now, once you do a leverage for investing in mutual funds, I think your equity allocation goes up significantly higher, because now you're leveraged as well. And I would say that markets are supposed to be played for long term rather than having a very short term thought process thinking here. And no one can predict market very well to the T that whether it will go down or go up. So it can be risky in that sense, and generally invest the amount what you save, out of that only you invest on equity market. That is what we keep advising our clients as well. And generally advise clients not to leverage for investing in mutual funds.
Makes sense, and that is a caution that we like to talk to the viewers every time we talk about investing in the show as well. Rahul, always a pleasure speaking with you. Thank you so much for joining us today and giving us your take on what are the mistakes or what are some of the don'ts that investors should keep in mind when they're investing in mutual funds.
Same here, Suna, and thanks for inviting me to your show.
Okay. All right, Rahul, look forward to speaking to you very soon again. But, you know, interestingly, in the first answer, Rahul spoke about how one should not be looking at sectoral or thematic funds if they're not, if they don't have the expertise there. So just thought we'll pull up the data that we saw came last week, how sectoral funds have been doing in the last couple of months. There has been a massive inflow, 22,352 crore rupees in the month of June. It has ebbed a bit. July, it is around 18,386 crore rupees. But remember, sectoral funds are still 14% of the equity AUM. So that's still a big number. And it's of course led by the new the NFOs that are coming in, be it the energy fund, be it the automotive fund. A lot of AMCs seeing a lot of interest in these thematic funds. But there's some caution that is coming in from wealth advisors. With that, we'll do one thing. We'll take your leave on this edition of Mutual Fund Corner. You stay tuned for Closing Bell to take you through the last hour of trade.
Hindenburg Research's recent report puts allegations on SEBI chief Madhavi Puri Butch by highlighting her conflict of interest with Adani Group and therefore raising some serious questions on her credibility. While SEBI chairperson has refuted claims by pointing to disclosure and recusal norms she has diligently followed. Now, Hindenburg alleges Madhavi and her husband Dhaval had investments in two funds which they claim have been used by Adani Group for siphoning off funds. Now, they highlight the involvement of 361 in managing these funds, and report suggests that the first investment in 2015 while Madhavi joined SEBI in 2017. Now, by establishing these linkages, Hindenburg claims that SEBI has been reluctant to probe Adani because of chairperson's involvement. Now, SEBI chief, in her strong rebuttal, has denied these claims and explained that investments in fund was in 2015 as private citizens and states emphatically that at no point did the fund invest in Adani Group's companies. Now, in another point of conflict of interest, the report claims that Butch had interest in offshore Singapore consulting firm Agora Partners and continued with her ownership of Agora Partners despite being SEBI's whole-time member. Now, Madhavi said that all disclosures and recusal norms of SEBI were followed, refuting the charges of the conflict. Not just Singapore entity, but even the Indian entity Agora Advisory India, and Hindenburg claims that Butch has 99% stake in the Indian consulting firm, which, remember, is generating nearly 2 crores from advisory services in FY22, is what the report claims. Now, SEBI chief clarified by saying that the two consulting companies became immediately dormant on her appointment with SEBI, and that her...
The Nikkei is up over 2% as we speak, and so is the Hang Seng.
19.8% second next only to China from 19.4% in the May review.
Two swing lows, 24,080 and 23,893. 10 points down, 24,333.
It just seems like nothing can break the market at all. Long-term story we are very clear is highly intact for e-commerce volume growth in India. Our international business has been able to improve our profile.
Mildly lower start this Tuesday morning. The Nifty and the Sensex down close to about 0.2%.
It's a red-looking screen. We've given up most of the gains.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC TV18 Motilal Oswal Studios in Mumbai.
Well, that was the day so far, and as you can see, the cuts in the market are getting deeper and deeper. We're at the day's low. The Nifty's breached 24,200. 175 points gone. The Sensex is down close to about 600 points. You're watching Closing Bell, and we're live from the CNBC TV18 Motilal Oswal studio. I'm Reema Tendulkar, with me, Surbhi and Nigel. Hi, guys.
Hi, good afternoon, folks. So I guess, we are kind of a little alone here in the red today, right? Because otherwise global markets have been holding up fairly well. There's green across European screens. Asia closed up positive. Japan had another very, very good day. So perhaps people will go back to asking some rumblings. Is there something residual in this whole Hindenburg issue or not? Remember, there is a PIL that's been filed in the Supreme Court. So I think the market's taking note of these things. And the question being asked is the worst of the impact over? Was it all done yesterday? Or whether this will keep flowing through the system? And I think we know that anyway at elevated levels, perhaps people are also looking for reasons to book profits where they can. And we're seeing some of that today.
Well, that's right. And I think the biggest weight on the index, both on the Nifty as well as the Nifty Bank, when that's down close to 3%, if you pull up a contribution chart, you'll see bulk of today's fall is because of that. For the Nifty Bank, well, that one's breaking down now. It's close to around 650 points down. The Nifty Financial Services Index, that as well is down close to around 1%, and that one plays out weekly expiry, so we'll keep an eye out on that front. There we have it. More than 50% of today's losses are solely because of HDFC Bank. Well, what are the support levels and how do you position yourself in the final hour of trade? Mitesh Thakkar joins us to help us out with that. Hi Mitesh, good afternoon. What do you make of today's trading session, and do you think we're going to be going ahead and testing the recent lows of around 23,900 odd?
Good afternoon, Nigel. So I think, I've been mentioning that this will be a sell-on rallies market, and it's kind of played out like that for the time being. But there is some pivot support at 24,100 and then 24,000. I think you might see some more choppiness. But eventually, I think it looks like a stronger possibility that we'll head lower and maybe, retest those 23,900 lows and maybe make a fresh low below that. So in that sense, the market view isn't very positive. The only good thing which can happen is that, some volatility and the market kind of becomes range bound until the indicators cool off. For the time being, it looks like a negative market, and on higher side, you will see a lot of supply emerge. So therefore, we'll maintain some negative stance, and I have sell calls on the stocks right now. Bajaj Finance is a sell with a stop at 65.40 for targets of around 6,400. And while Balrampur Chini is doing good, I would still, want to go with another stock, which is Berger Paints. So Berger Paints is a buy with a stop at about 527 for targets of 551.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's focus on the number that just came out. That was Hindalco. And if you look at the intraday chart, well, the stock has recovered a goodish bit from the low point of the day because the India part of the business have reported, and it's a rather good set of numbers. Running you through the basic standalone numbers first, the revenues are up by close to 11%. You have the EBITDA number that's up by close to around 76%. The crucial number in here is the power and fuel cost. That's declined by 13%, telling you that they are getting the benefit of lower, coal cost. And also e-auction prices have come in lower. So that's the crucial read-through when you look at the standalone numbers. And power and fuel cost as a percentage of sales, it's come down to around 10% from around 12% odd. But the more important part of these numbers are the segmental breakup. And on both the parameters, it's a beat out there. So I'm looking at the aluminium business. Well, they have delivered numbers of around 3,600 crores. I was looking at most brokerage estimates. They were in that vicinity of around 3,300 crores. So on elevated expectations, well, they've even gone ahead and beat that. And on a per ton basis, the aluminium EBITDA per ton is around $1,270 per ton. That's up 80% on a year-on-year basis, and even on a sequential basis, it compares with the number of south of $1,000 per ton. So aluminium has done very, very well. The only problem is that in Q2, aluminium prices are sharply lower. So this EBITDA that they have delivered, well, in all probability, it will decline quite a bit from these levels. The copper business, that's the smaller part of their business. Out there as well, we were working with the number of around 615 crores. I remember just a few, maybe around 6 to 8 quarters ago, this number used to be around 350 crores odd. But they've been focusing on value-added products out here. And that number has now moved to around 800 crores. We'll have to see whether or not there was any kind of one-off in these numbers. But the smaller part of their business as well has delivered. The net debt number has gone up marginally. We already had Novelis's numbers with us. And out there, we did see that the working capital got expanded a little bit. Put everything together, the India part of the business has delivered, which explains why the stock has recovered from the low point of the day. You have a beat, 10% beat on the aluminum business and on the copper business as well, clocking 800 crores per quarter. That's a very, very strong set of numbers coming from Hindalco. As I said, the problem is that base metal prices have corrected post quarter one. Hemang Jani joins us to help us out with a quick analysis. Well, Hemang, I ran through the basic numbers and a quick analysis on that. But fundamentally, how do you think the stock is placed? And at around 620 rupees, what would you do?
Good afternoon. For the quarter, it's an all-time high quarter. Even the aluminum EBITDA looks quite decent, and there is a slight beat over there. Along with that, in line with slightly better outlook for Novelis and a possibility of a rate cut in US, I think that makes a good case for some sort of upside for Hindalco. And the stock has corrected almost about 10 to 12% from the top. So I think post the numbers, there is a case for some sort of a rebound. However, the large will depend on how the commodity prices behave, what sort of data point do we get from US. But at least from a short technical point of view, this looks like a positive set of numbers.
Okay, so that's Hindalco, no problems there. And numbers along expected lines, as Nigel has explained. The market, by the way, continues to reel under pressure. Look at the Nifty again, almost a 200-point dip coming through. The mid-cap index is a shade better, but it's really the bank Nifty that's been hurtling lower. So that there you see every bounce is getting sold into. So that's the nature of the market. It changed to basically selling the bounces somewhere around 12 o'clock onwards. Let's actually address HDFC Bank. The stock's been down about 3%, and we've been talking about this, the negative impact playing out, because this weight increase in the MSCI indices is not happening in one go. It's going to happen in two different tranches now. First one is August. The second one is going to be November. And we caught up with the analysts. The expectations on the street range between 1.8 to about $2 billion perhaps will come in the first tranche itself. But what we're seeing is obviously disappointment that all the money, which is up to $3 billion, is not coming in one shot. Hemang, what would you say? I mean, HDFC Bank has been a drag for a long time. I remember even when the that FBI headroom increase news came in, it was coupled with, I think, the business update, which was a little lackluster. So even then, the stock didn't take off as one would have expected it to. What's your sense, and how are you approaching this?
If you look at last 1 year, there will be at least 3 to 4 occasions where either because of MSCI related flows or some technical adjustment, there will be certain hype that gets created before the announcement of the news. And on the day of the news, the stock typically sells off. So I think it will be very difficult to gauge how it's going to behave because of this, because there is a lot of hype and expectations ahead of the event per se. Having said that, I think the numbers that they delivered were pretty decent. And now that a large part of their HDFC related loan liability is cleared, I think from next quarter onwards you will see a decent improvement in the margins, and I think overall loan growth will be reasonably good at about 12-14%. So I think from a medium to long term perspective, this looks like a good bet, but short term, because of the high weight in the index and the way things are, maybe it may underperform.
Inox Wind, a stock which has given a 300% plus return in the last 1 year. Results have been strong. Anyway, the company has repaid all its external debt. There was a promoter infusion. The numbers are looking good. Margins have beaten expectations. Their order book is up 3x. And this entire renewable theme continues to gain momentum and deliver this time when it comes for Inox Wind. Do you like the stock at current levels? Okay, we'll try and connect with Hemang for Inox Wind, but let's talk about Aarti Industries, because that is the biggest drag today. The stock is down close to about 15% after the management suspended the EBITDA guidance due to volatility on account of pressure from China. Sonal is joining in with the details and what brokerages have made of that commentary. Sonal.
Thank you for that. Well, Aarti Industries was one of the first chemical companies to see a sequential recovery after months of losses and pressures that we have been seeing. So Street was of the view that maybe that recovery could continue and the company will be able to meet its targets. But now after their Q1 numbers, they're not very sure whether they'll be able to meet their EBITDA guidance of 1450 to 1700 crore rupees because of a number of reasons. One, they are seeing volatility in margins. Second, there are pricing pressures coming in from China. And that is something which has disappointed the Street. Volume growth, they expect it to continue at 20 to 30% in FY25, but the overall outlook remains a little vague. In terms of their discretionary segment, the dyes and pigments, that is seeing sequential recovery. Agrochemical demand would only come back in second half of FY25, and the Red Sea issues, they continue to impact exports, so they say that some segments could be impacted because of that in FY25. Their debt stands at 3,300 crore rupees. With some of the capex, they could see it rising to around 3,500 to 3,600 crore rupees. As I said, it has come in as a surprise for brokerages as well. For instance, Morgan Stanley has an equal weight rating. They say that companies expanding into newer portfolio, the energy applications, that is something which is leading to more volatility now versus what we've seen in the past. MK says that they have a buy rating, and yes, it is the fourth consecutive quarter of sequential improvement in EBITDA, but they are still a little disappointed with the guidance, and that's why they've cut the EPS estimates by 11 and 5% for the next 2 financial years. Nuvama, they've gone ahead, they've raised the target price, but that is largely because of rollover to Q1 of FY27. They maintain a buy rating. And in terms of Kotak, they say that the company has suspended their EBITDA guidance for FY25. Overall, they have an idea of 25 to 30% CAGR growth in next few years, but that also depends on what volatility we see, what is the pricing pressure, what happens in China. So that's why they are also not very sure of whether this growth will continue going forward.
Okay, all right, Sonal, thanks very much for that. Tough day for Aarti Industries for sure, 15% lower on the back of all of those concerns that Sonal just highlighted. Let's see what other stocks stand out today. I mean, even on the mid-cap screen, you do have sharp reactions coming in. Look at something like DOMS, which is down about 6.5% after coming out with numbers. Uflex numbers didn't go down too well with the market, 9% down on Uflex as well. And even beyond earnings, I mean, today you're getting sharp knocks on a lot of stocks. For instance, Chambal Fertilizers, which is lower quite a bit. Then you have something like a car trade losing about 6 to 7% as well. So even in the mid-cap space, there is a fair amount of pressure that is coming through. However, let's talk about one side of the market where we're seeing green, and that's actually sugar. Let's see if we can actually pull up the sound bites, because we were in conversation with the management of Balrampur Chini earlier in the morning. Now, what's the buzz around sugar? Let's get the stocks up first. So whether it's Balrampur or Dhampur or Renuka, you can see most of those stocks are quoting on the green side on a day which is not very favorable for the market. Now, a couple of factors here. One, there's buzz in the market that we will see at some point in time in the near future a hike in ethanol pricing, because the government is very gung-ho on the blending program. It wants to take up blending from 15% to 20% as early as next year. And the second, there's been some buzz that blending will be extended to diesel as well. Right now, we only speak in terms of petrol blending, but diesel also will have an element of blending. So I think that put together is causing a little bit of a stir. Here out Balrampur Chini on their own performance, their expectations from the new sugar year, how pricing is faring, and also, of course, the hope that exports will be allowed by the government in the new sugar year.
Government would like to see the progress of the monsoon and the yield of the crops, maybe sometime post the commencement of the crushing season, and then they would take a call on the export front. As far as the future pricing are concerned, domestic availability of sugar is sufficient and it is balanced. So we don't see a very runaway in the domestic prices from here. Government is looking at a blending of around 20% in 25-26. Sugar industry can easily supply 50 to 55% of the total requirement, which will be required for 20% blending. And as per the Niti Aayog document, for 20% blending, the requirement is around 1,000 crores liter. For the pricing, yes, we are still awaiting the revision of ethanol prices for the last year. But this year, as the government is looking for a meaningful diversion of sugar to happen into ethanol, I think the proper pricing will be set.
Okay, that's the word coming in from Balrampur Chini. Hemang, you want to come in on sugar stocks?
Yeah, so we've seen a good amount of rebound in some of the sugar names, be it Balrampur, even something like Praj. We have seen a good rebound, primarily because of the possibility that the ethanol relaxation could come in a bit earlier than what was earlier talked about. Also, today we had this update that there might be possibility of government considering exports, and that also led to some sort of a rebound. And more importantly, I think most of these companies, if you see for the past, let's say 1 year or so, the earning stability because of the commodity prices and all has become slightly more better, because you have ethanol and cogen both working out to the optimum capacity. So I think both Balrampur and Praj is something that we like at this point of time.
Okay. All right, let's do one thing. Let's take a break at this juncture. We'll come back with a lot more on the markets. And as we take the break, here is a quick programming reminder as well. Tomorrow at 6 p.m. on our special offering CNBC TV18 Town Hall, we will get chatting with global investor, author and columnist Ruchir Sharma on his new book, What Went Wrong with Capitalism. Don't miss out on this one.
Them were explicitly part of her disclosures to SEBI. Now, apart from linkages to Adani Group, the report also claims that Madhavi had conflict of interest with global private equity firm Blackstone, and Hindenburg's report says that Madhavi Buch used her position to benefit Blackstone in REITs in India, and that her husband Dhaval Buch is acting as an advisor to Blackstone despite no experience in funds or capital markets. Here again, SEBI chief clearly refutes claims by disclosing that Blackstone Group was immediately added to Madhavi's recusal list maintained with SEBI when Dhaval was appointed in this position. Now, in two statements yesterday, Madhavi Puri Buch has emphasized repeatedly that all disclosures and recusal norms of SEBI were diligently followed by her, and SEBI chief stated that instead of replying to show cause notice, Hindenburg has decided to attempt a character assassination of SEBI chairperson.
There is clearly discomfort to even an optimist like me in certain pockets, right? So if you are investing in mutual fund, you do your homework, invest in good mutual funds with a track record, no issues at all. But if you are investing in individual companies, you should definitely be watchful of what you are paying, what you are assuming, and then what is it that the company will deliver. Then you make money. We spoke about the liquor sector, which looks like a structural long-term story. So I think there is enough, and someone like me, I am always open to an idea, but I am also not hesitating in this kind of market to sell companies.
Well, you've mentioned trigger links, and that's quite an important part of migraines, a trigger which results in a migraine. Can you just tell us what is the most common trigger that one comes across when it is when one gets a probable migraine?
The triggers are generally divided across three different groups. One is the physiological within the body triggers. Two is from the environment.
Welcome back. Some of the large financials are cracking now. So Bajaj Finance is down 2%. Kotak Mahindra Bank has slipped. Axis Bank has come under incremental pressure. And outside of that, in the broader markets, many of these mid-caps are reacting to numbers. So FACT, where the company has reported a loss of nearly 50 crores, is down close to about 5-odd%. Easy Trip is holding up in the green after reporting a profit jump of 25%. So that's a stock up close to about 2%. DOM's numbers were fine, But, the stock has slipped off quite a bit. Pull up that intraday chart of DOMS. It started off flat, but now it's down nearly 5 to 6%. And keep your eye on Indus Stars, because tomorrow the share buyback opens. It opens on 14th. It closes on 21st of August. The buyback size is 2,640 crore at a price of 465, and the current market price is 405. The buyback size is 2.1%. So the question for retail investors is, will you participate, tender in this buyback? Because the stock is up 100% on a year-to-date basis. But let's address the big listings of the day, and what a day one it's been for Brainbees Solution, which runs India's largest multi-channel mother and baby product retail platform, FirstCry. Very strong listing, 50% gains on that. Mangalam is now joining in with more details. Mangalam.
It's indeed a stock of the day. One of the bigger listings that we've seen in recent times, pipped only by Unicommerce, which actually doubled today on listing, but it was a near 40-50% premium to its issue price. More importantly, there were ingredients in place for a big listing. That's because demand was strong, mostly led by QIBs, 12 times oversubscription. Plus, it's a business which is fairly well known. It runs India's largest multi-channel, multi-brand retailing platform for mothers, babies, and kids products under the brand FirstCry. And also, they've begun to sell products from third-party Indian brands, global brands, home brands, both online as well as offline. They have over 1,063 stores in 533 cities, and some of their brands are fairly well known, the likes of Baby Hug, Baby Oi, Cute Walk, and Pine Kids as well. And in 2022 and 2019, they also moved their business, expanded their business in UAE and Saudi Arabia, and they also have a bunch of preschools. In the previous year, that is FY24, the GMV grew by around 26%. Their revenue grew by about 15%. They operate on margins of close to 4%, but that's on a consolidated basis. The India business actually does margins of nearly 9% as well. This morning we spoke with the management, and they said the runway for growth is fairly long, because only 16% of the market is currently organized, and the organized part itself is growing upwards of 20%, in which the company intends to grow a little faster. And the India multi-channel margins, which are at 8.8%, have a fair amount of runway to improve going forward as well. At current reckoning, the stock trades at a little over 4 times price to sales and around 100 times price to EBITDA. But importantly, if they can double their margins and increase their sales by 20-25% going forward, then maybe the street would look at 1 or 2 year forward earnings and consider this stock in terms of valuation as against the trailing valuations.
Okay, let's also talk about Unicommerce, which is pipped FirstCry in terms of gains, because the stock straight away opened with a gain of more than 100%. Very strong debut. The stock price on listing was 235 versus an issue price of 108. So straight away, 117% off the bat. Now, this is a company which provides back-end software to power e-commerce transaction. For instance, order management, warehouse management, trade management, etc. That's the kind of SaaS products Unicommerce provides to e-commerce companies like a Boat, a Mama Earth, and even legacy companies like Fab India. Now, the company had seen a robust subscription of 168 times, but remember, it was a much smaller IPO. In terms of financials, its FY24 revenues were 103 crore, margins were 13.9%, and profits doubled last year to 13 crore. Now, the growth of the company is linked to that of e-commerce. So if e-commerce does well, Unicommerce does well, because they get paid on per volume of transactions. So for every transaction, Unicommerce gets paid. The last 3 years, the company's growth rate was 35%. The management said that going ahead, they're targeting, they believe the industry, e-commerce industry, should grow at 25%. And their goal is, or at least they have historically outperformed the industry. The company also enjoys operating leverage, which basically means because it's a software company, they do not have any fixed costs. So as the company grows in size, most of the revenues flows through into the company's bottom line, and margins have scope to expand. On a steady state basis, most SaaS companies operate at 25 to 30%. Unicommerce is not there because it's a smaller company, it's not achieved the scale, and it's still not at steady state. The company is also debt-free, it's got cash in the books, which is why this company did a pure offer for sale. The money that was raised did not go into the company. No fresh issue, but very strong gains, 94% right now as we speak. Hemang is still with us. Hemang, would you buy Unicommerce or FirstCry today?
So amazing listing for both the names. I think the appetite is back in the market, and I do like both the spaces, whether it is Unicommerce, which is a SaaS-based platform with a interesting plug-and-play solutions. The only issue remains that, for a company which has a 12-13 crore kind of a net profit is getting a market cap of about 2,500 crore. So, the market is probably pricing in, much more than what it should given the, visibility that you see. And same is the case with First Cry. Again, it's a loss-making company. It's a great positioning, the kind of format that they have, and a unique play or a retail platform. The only thing is that 35,000 market cap is way too high for these kind of companies. So maybe from a short-term perspective, because of the appetite, because of the float, you might see some action, but a larger call can be taken once we have a slightly better handle on the numbers and visibility going ahead.
All right, Hemang, thank you very much. Good to have you on the show. We will leave it on that note for this morning, for this afternoon. Well, with that, let's welcome in Amit Gupta, Senior Vice President and Fund Manager at ICICI Securities PMS. Amit, good to have you on. The market's having to deal with a lot, right? The news flow has been heavy from the election time till, then we had the budget, the tax changes, and now, of course, all the murmurs around Hindenburg. What do you make of things? I mean, at these levels, earnings season is also just winding down. Do you think this market has more juice to keep running? Or are we in for maybe a period of time correction, if not price correction?
So I think the later part seems to be more correct actually now. I think time correction is something which market actually, will be happy with it. The market participants will be happy actually with it, because running away market is something, where a lot of participants remain at the lower level. I think now they may get an opportunity because the broader market, I think now is consolidating. You may get good opportunities. There may be some disappointments in the results because the prices moved up actually much in anticipation. Margins, I think going forward, if you look at the crude oil prices, they have not jumped up actually so much. It is still around $80, $81 per barrel. So despite the uncertainty in the global geopolitical scenario market. So I think this is good from the margin perspective going ahead. And from the earnings perspective, I think from the index, you will not see much of a disappointment. Still the 12-16% of CAGR earnings growth will continue. And that is where I think the declines in the market, should be bought into. I think that's very clear. And post-budget, we had seen a decline towards 21,000. If you see financial year 25 EPS, of average EPS around 1140, the price to earning at 21,000 comes around 18 times, and the 5-year average used to be 18.5. That means we came closer to the 5-year average. And then we saw the FII money also coming in. It's very interesting. The 2021 onwards, we are seeing this pattern that FIIs generally who have not invested at elevated levels, they just invest when the market declines. So they are not leaving India. They are just waiting for attractive levels. And that's why at 21,000 again, in the month of June, you had positive figures from FIIs. So my sense is from the index perspective, it is more consolidation possible. You have to choose now your stocks where you see a good growth. Yes, some tactical shift towards some consumer names, ruler-specific names, possibly technology, possibly some textile stocks is possible, which have not participated much in the last 2 years.
So would you recommend this tactical shift towards consumption, rural, technology, textile names? Which one would you give preference to?
Yeah, I think why not? I mean, when we have made good money, in the core philosophy of manufacturing, infrastructure, energy transition, and also CapEx, why should not we, move 10-15% of weight into these sectors? And that is what we are doing actually. We have bought into some technology and some pharma names also, and we are very positive on it. For example, you take the case of Aurobindo Pharma. It has been in our portfolio for actually some time, and we have added positions actually there. It is a stock which is available at a much cheaper valuation in terms of its peers. And the growth visibility going forward is very high because we have seen that the penicillin G, which India used to import from China, almost 15,000 ton penicillin G is required. And this company is going to commission actually this one now. And then going forward, you will have biosimilar as an opportunity, right? And you have the cancer drug as an opportunity. So there are many things lined up actually for them. In fact, if you see the drug shortage in US, I think in December only we heard around 300 drug shortage. Now it has gone to 325. This number can increase to 340, 350 also in the coming months. And that can lead to some recovery in some of these pharma names, because out of this shortage, 65% is in injectables, which is coming from these type of companies. So I think this can be a good growth. So different themes work at a different time. And I think this is what in the coming 5-6 months, when we will be more globally driven, because you have US president election, then you have interest rate decision to be taken. I think you will see these kind of sectors also possibly performing.
Okay, all right. I'm going to just hold that thought. Just want to address a couple of stocks. And, the Sarda Energy stock actually has moved to the high point of the day. We're waiting for a comment on the SKS power asset. That's the one that they were looking at. It was stuck in NCLT. For the time being, the street is reading some kind of positive development on that front. So we'll wait for confirmation on that. But the SKS asset was likely to bring in substantial amount of power into their business. So that's why that one's perked up. And another one, the last few minutes, our order win was Vascon. So that one as well did move up close to around 3.5% from the low point of the day. Amit, in the past, we have discussed the metals pack, and select stocks, I think Hindalco and Tata Steel, at some point of time, they were part of your portfolio. What's the view currently on metals?
So, see, in metals, broadly the view was that the downside seems to be limited, because the metal prices actually were not going higher this time. They were subdued. The steel prices used to be 55,000 rupees per ton. Then this year it was 52,000 rupees per ton. So this was a different time than the previous scenario, because it is more volume driven, more domestically oriented also. But then the hiccups always remain. For example, in China, we saw the GDP growth did not come up despite the interest rate cut situation. And that is where I think there was some dumping of metal actually in India. But I think more was protected because of the duty structure. But overall, I think the global growth is also something which will drive this sector going forward. We have to see this after the interest rate cut, possibly some reversal can happen. And also, I think the current prices looks very attractive to us. Yes, it's a matter of time when some kind of recovery along with the global can happen. I think the companies which are working on efficiency, for example, Jindal Steel and Power, in this space, if you see, they are getting some captive mines going forward. The raw material cost will get better. The EBITDA can increase. And obviously, the EBITDA per ton is one of the best actually in the industry right now for this company. So it's in a recovery phase from that perspective, and I think it can pick up. So yes, you are right. We had to trim down some of the positions, but at a certain stage, we will add on the positions also whenever we see the global growth also is coming up going forward.
This move into pharma is just a tactical play for you short term, because the numbers have been fairly strong in Q1 and even in the prior quarters. Or is pharma a long-term play for you? And have you upped your exposure?
Yeah, sure. So I think technology may be a tactical move more rather than pharma, because there is a clear demand there is a clear shortage actually in the US market for the drugs. And the certain companies actually, they are just moving into the right segment. So that's why I think the pharma story has already been played out in the market, but there is still room for this story to play out further. Yes, from the tactical shift point of view, I think technology, you can say, is more aligned going forward with the interest rate cut decision, because if it happens, then obviously I think there may be some reversal in the technology space also, where results have not been too weak this time. What market was expecting, there is some volume growth also which has come up, but yes, not the same level of growth, and artificial intelligence still remains as one of the key dragger actually, because they are just coming out of this. They have to understand the business cases for which the softwares are made. So far, you were just catering to BFSI and you were aware of how the debit, credit and how the process flow happens. So you were ready with your software buildup, but now you have to work on your business requirement first, and then you have to work on your software. So it's a challenge. and the companies are coming out with. We saw that TCS came out with one Wisdom Next as the generative AI tool, actually integration of 3-4 generative AI things. I think those kind of things you will hear, and the success rate of that will drive the companies also, along with the interest rate cut, which is more a tactical move.
Okay, so that's as far as pharma is concerned. The market's still looking at the same level, basically 190 odd points on the Nifty. Not much has changed. So sort of talking about trends, Amit, I mean, going forward, we've got a lot of new IPOs, right? New paper hitting the market and very different kind of businesses. There's, of course, Ola, that's done very well. Today's 2 listings have done very well as well. Just give us a sense and a flavor. I mean, what kind of companies have found your interest in, what's captivating your attention? And something as specific as Ola, I mean, are you surprised with the moves, or do you think it's really a good play and there's still something left on the table for investors?
See, I think the valuations definitely is something where you need to be a little careful. But overall, the trend towards the electric vehicles is actually gaining, is increasing continuously now, particularly in the two-wheeler vehicles where Ola Electric has presence. And we have seen its market share almost going to 35%. But the profit making has to come up, right? That's, again, very important feature, which we used to see in the other new age technology stocks before that did not happen actually for a long period. So I think that is something where they have to work. In fact, the subsidy from the government also, which used to be there, it was reduced to some extent last year, and then we saw the decline in the sales also. So those kind of things you have to work upon. But yes, the trend is very clear. I think in the coming years, you will see 70-80% of two-wheelers being converted into electric vehicles, and that is where it's a good growth. I think the next trend, going forward in the listing space also is going to be from those companies which are already there, for example, in thermal space or hydropower, and their renewable energy entity is going to be listed. For example, NTPC. So NTPC, if you see going forward, the NTPC renewable is going to be listed. So NTPC already has 76 gigawatt of total capacity, and they have a target of 130 gigawatt by 2032, out of which 60 gigawatt of renewable they are talking about. The current capacity of 3.5 gigawatt in the renewable space, will be 16 gigawatt by financial year 27 ending. So they are working on both the fronts. And I think that is where this company will see a lot of inflows going forward. It has already been one of the rock solid stock in the market. But yes, I think this is a trend that we are looking at. Some of these renewable setups in these companies, even NHPC going forward, those are going to be listed.
Okay, Amit, thanks a lot for joining in and giving us your views on the markets, as well as a lot of sectors and themes that we did discuss. Talking about renewables and renewable energy on the whole, pull up Suzlon. The stock had dipped into the red, but now it's done a U-turn. It's back up into the green. So it's been all over the place today. It opened up much higher. Then it slipped, I think, close to around 3-4%. And now, in fact, it's making a comeback as well. Well, time to slip into a short break. On the other side, as always, we'll get you some technical calls. We'll also try to get you an insight into dealing room action. Stay with us.
And there are some triggers which are beyond control. The commonest trigger that we see in our part of the world is related to the weather conditions the type of temperatures we have, the heat, humidity in most of the cities for almost 6 to 8 months of the year. And then again, you have lifestyle-related triggers, which are the habit of not having breakfast on a regular basis amongst most Indians, and school children having to leave so early for school, they really rush with just a glass of milk. They don't have a proper breakfast. Skipping meals, the fasting habits across different religions in the Indian subcontinent is responsible for throwing up a lot more migraines. And stress, where stress leads to lack of sleep, poor quality of sleep, and now in modern day times, you find increased screen exposure. Computers have become an essential part of education, laptops, and the mobile phone. Mobiles are small screens. They induce a lot of stress and strain, which can be a trigger for migraine. And apart from this, certain changes in the body, for example, the fluctuating levels of estrogen, which happen during the menstrual cycle of a woman, leads to, is a trigger for more migraines in women that we encounter. So these are some of the triggers. And then you have foods which are different from the rest of the world. It is well publicized, well published all over that chocolates, cheese, and red wine are the commonest cause of trigger. But when you come to see it in practice, these are not the common items which are consumed by most Indians. Yes, of course, they are correct triggers: aging cheese, chocolates, and red wine. But we have different food items which have the fermented food items like idli, dosa.
Welcome back. Well, let's get straight to our favorite segment, D Street Chatter. Nimesh joins us to fill us in with what's going on in the daily rooms. Well, Nimesh, a bit of a down day, but primarily because of the big boy, HDFC Bank.
Largely, yes, Nigel. It's the large caps which is dragging the markets down. But the bigger problem is, I said this yesterday as well, that there is selling pressure from larger FIs. So for the second day running, I understand there is a very large sell basket at leading FI desk. It was the case yesterday as well across Nifty names, and that seems to be the case today as well. From a sector point of view, the big sector of the day is clearly chemicals on the downside. Big drawdowns in the chemical names today on the back of that Aarti, putting out a bit of a muted guidance, and that led to a bit of selling pressure or maybe profit booking in most of the chemical stocks today. But that's generally the case for a lot of the PSU names as well, that there is a bit of profit booking now across the PSU basket as well. I guess from a technical point of view, while at 21, the current levels of 24,150 is a crucial support, but on the way down, the next big support level will be 23,500. So that's the level from a technical point of view. But I guess the last 2 days of underperformance in the market is dragged by the fact that there is selling pressure from larger FIs in the Nifty names.
And what have you picked up on individual stocks, Nimesh?
Well, so the first name is Shriram Finance. The stock has recovered from the day's low. There is a block in the morning trade, in the pre-open. Nearly 1.5% equity got changed hands. I understand the promoter entity was a seller and a leading long-only fund was a buyer. So again, disclosures could be quite interesting in Shriram Finance. The second stock is Strides Pharma. In a weak market, that is relatively outperforming, up 4% last I checked. Good volumes as well. Largely, this outperformance is on back of delivery-based buying at a leading FI desk. So looks like some FI interest is back in this particular name. The third, a couple of metal stocks, both Hindalco and Tata Steel, both are under pressure, but largely because there are price limit sell orders at a leading FI desk. So it's again part of the big basket, which includes these metal names as well. And the last is AB Capital. The stock has relatively underperformed since the quarter one earnings. It was pretty much on muted lines, but now the street is anticipating a large block deal as well. So a bit of depth has been talked about, and the street is anticipating a large block in AB Capital soon.
Thank you very much for that. Vodafone Idea is under pressure for the second day in a row. They reported numbers yesterday. The losses come down on a quarter-on-quarter basis. The loss is the lowest in the last 5 quarters because remember the company has repaid some of its debt after that FPO. They raised that money, but operationally the company still is struggling a bit. Revenues declined for the 3rd consecutive quarter, underperforming peers, and even on an aggregate basis, subscriber losses continue. So Vodafone Idea down for the second day in a row, today down 3%. Mitesh is back with us for a few BTST calls. Mitesh.
So SBI card is something, which I'm negative upon. I think that's one which is turning weak, and PFC. So both are STVT calls actually. PFC I would recommend selling with a stop at 488 for targets of 472. And SBI cards, if I was to give you the levels, stop at about 697.5 and a target of around 680.
Thank you very much for that. Let's get to the big earnings which we're anticipating in the evening today. Starting off with Hero MotoCorp. Sudarshan now joins in with the expectation. Sudarshan.
So Hero MotoCorp will be reporting its Q1 earnings today, and our polls suggest the results are expected to be very strong, with headline numbers are seen at multi-year highs. But before I talk about the numbers, let's talk about some of the internals. It's the cheapest stock amongst all the two-wheeler names. 1 year forward P is 22 times and is slightly higher than 5-year average of 18 times. And in 2024, so far the stock has been up almost 28%, and it's 10% away from the record high that it hit in June. Now talking about the numbers, net profit is seen rising 28% to more than rupees 1200 crore. Revenue is seen increasing 21%. EBITDA may rise 31%, and margin is seen rising 100 bips to almost 15% against 14% in the same quarter last year. So what all will aid the numbers? First, healthy volumes. Q1 volumes are up 14% YOY to more than 15 lakh units, led by rural recovery and new product launches. Second, rich product mix and rise in average selling price. Company has seen rise in average selling price in the range of 6 to 7%, and product mix has recently seen an improvement that is likely to aid the margin. But there are some of the few concerns. First, company has been losing market share in its stronghold segment, that is 100 to 110 cc. Second, despite several launches, market share for the company has been low in the premium segment. And last is Honda dethroned Hero from number 1 position in total dispatches in Q1. But it seems any impact related to these concerns will be offset by the positives that company has seen in the recent past, and that's the reason we are expecting a strong set of earnings from Hero MotoCorp.
Thanks a lot for that, Sudarshan. Well, let's also get a preview on Apollo Hospital. Sonal joins us to run us through what we're expecting. Sonal?
Thank you for that. Expecting good set of numbers from Apollo Hospitals, led by the hospital segment itself. It's expected to see a revenue growth of 15% on a YY basis, EBITDA growth of 33%, margins to expand to levels of 13.3%, which would be an increase of 200 basis points, and profits to come in at 274 crore rupees as well. As I said, this will be led by the hospitals business, so there is an expectation that 7 to 8% rise will be seen in average revenue per occupied bed. Expecting improvement in margins due to hospital segment, and for the hospital segment, the street is expecting a top line growth of around 12 to 14% with a margin growth of around 10 to 12 basis points on a YOY basis. Apollo Healthco, that is one where sales estimate is estimated to grow around 15% plus, and this will be driven by pharmacy distribution sales and traction in 24/7. That is where costs are expected to be flattish on a quarter-on-quarter basis and lower on a YOY basis. So that is something which will drive margins as well. Apollo Healthco EBITDA is estimated to be marginally positive. It is estimated between 20 to 25 crore rupees. So expecting a good growth in Apollo Hospitals this time, and that's why the stock is on our radar today.
Thank you very much for that. IRCTC's Q1 numbers up for you on your screen. The company's revenues have gone up by nearly 12%. On a year-on-year basis. Profit jump is close to about 32%. But I think there was some news about, when people are booking on the, website, it's not going through. So numbers look fine, but I think IRCTC could be under pressure on account of different reasons. The profit this time at 307 crore is higher than the Q4 profit of 285 crores. So jump quarter on quarter and on a year-on-year basis. But let's move on, because the MSCI has announced changes as a part of its August review, with changes set to be made effective 30th of August. Vivek is here to tell us more. Vivek.
Well, that's right. So much anticipated, much awaited, and in many cases also priced in, given the fact that a lot of quant analysts already had the expectation penciled in, and a lot of the stocks had already seen quite a bit of an up move in the run-up to the actual outcome as far as the index review was concerned. What actually happens as part of this particular review? India's weightage in the MSCI EM index goes up to almost 19.8%, second only to China. India will get inflows of close to $2.5 billion, a little over $2.5 billion, and all of these flows will happen on the trading session of August 30th. Now, the main index, the one that we track closely, is the MSCI Global Standard Index. 7 additions and 1 deletion over here, and the flows that we are mentioning are, the IFL alt estimates. Zydus Life seeing flows of close to $218 million, Prestige Estates, Dixon Tech, OFSS, Oil India, Vodafone Idea, and RVNL are the stocks that make the cut this time around. One stock, that will be deleted from the index is Bandhan Bank, expected to see outflows of almost $110 million. The most important stock, one that the street was watching very closely, was HDFC Bank. HDFC Bank, remember, after it had uploaded the shareholding pattern, there was enough foreign headroom for MSCI to go ahead and increase the weightage. The street was anticipating that this weight increase that would have led to likely inflows of close to $450 million the MSCI has now decided to implement this weight increase in 2 separate tranches rather than one that the street was anticipating. That explains the stock down move today, but even after that, HDFC Bank will receive inflows of close to $1.4 billion on August 30th as part of the first weight increase. The second weight increase will most likely happen in the November review in case there is enough headroom over there. And lastly, the MSCI has lifted the embargo as far as the Adani Group stocks are concerned, indicating that Adani Group stocks will now be treated at par with all of the other MSCI stocks.
Thank you very much for that. We'll slip into a very short break. We'll come back with more on the market. Stay tuned.
These are items which can also give rise to migraine attacks, and then rarely you come across different triggers. Triggers are different across individuals who suffer from migraine, so they are not the same for everyone, and one has to be alert that triggers are not seen always and not easy to identify. In about 70 to 80% of patients with migraine, you can identify the triggers, but you have to remember that there are 15 to 20% of patients in whom triggers may not be easy to identify.
All eyes on Hindus in Bangladesh. What is happening to the minorities there? How severe is the situation? Can the new government heal old and new wounds? On the whole story, let's try to understand this development better. Since Bangladesh's former Prime Minister Sheikh Hasina abruptly resigned and fled the country due to massive protests, according to reports, there have been multiple instances of attacks on minorities, especially Hindus. Reports indicate attacks on Hindu households, temples and businesses. According to 2 Hindu organizations, minority communities faced at least 205 incidents of attacks in 52 districts across Bangladesh since the fall of the Sheikh Hasina-led government on August 5. The new interim government, led by Nobel Peace Laureate Muhammad Yunus, has assured that it's addressing the violence directed at Hindus and other religious minorities. The government said, and I quote, "The attacks on religious minorities in some places have been noted with grave concern. The cabinet will immediately sit with representative bodies and concerned groups to find ways to resolve such heinous attacks." The interim leader, Muhammad Yunus, has urged youth to protect all Hindu, Christian and Buddhist families from harm. Now, Hindus represent about 8% of Bangladesh's 170 million people and have historically supported Sheikh Hasina's predominantly secular Awami League party. On Sunday, Hindus and other minorities held a massive protest rally against the alleged attacks, urging the government to protect them and their families. Rallies were held in several cities like Dhaka and Chittagong, with lakhs of people taking to the streets. Now, what are the protesters demanding? Many reports suggest that protesters want immediate action to protect the community, the formation of a Ministry of Minorities, the establishment of a Minority Protection Commission, strict law.
Welcome back. Slipped another 20 points. Now Nifty's down 200 plus points, 24,130. Remember, from 2:30 onwards, the markets were hovering around 24,150. But now in the last leg, last few minutes, the selling pressure has extended itself. The Nifty Bank cut stands at 750 points. And names like RateGain, Metro come under pressure for the second day in a row. Let's get you some market opinion before we catch up with Sudeep Bandyopadhyay. Earlier today, we chatted with Rahul Arora of Nirmal Bang Equity, who shared his view on the Nifty bull run, the BFSI sector, and the ongoing consolidation in cement.
At an aggregate level, I'd still say if you were to look at the Nifty earnings projections for the next 2 years in terms of growth, because I think most of the margin expansion is done, Prashant. The focus is now going to be on the top line. So you're probably going to be looking at about a 13-15% kind of earnings growth for the Nifty between 24 reported and 26 actual. I think that should be your expectation for the market return as well. I think people should not lose sight of the fact that the Nifty was 7,500 not too long back, and it's more than tripled in a matter of 4 years. So I think at some level it's going to rationalize. But I think overall BFSI is still presenting value. I think housing finance companies could be interesting. LIC Housing Finance was a miss this quarter in terms of results, but we like that space. We recently initiated on Housing Urban Development Company, HUDCO. We like that name. So I think BFSI valuations are not demanding at all. IndusInd Bank again coming to you at 1.5 times, Axis at 2. It's a clear overweight sector for us. Consolidation is going to be the name of the game. I think if you look at ACC Ambuja combined, which is eventually the reality, it's going to happen at some stage. I think that looks like an interesting bet from the large cap space. I think if you look at the mid cap space, we like Aramco. I think there is still at least another 20% game that's probably left there. And JK Lakshmi from the small cap.
All right, that was a view from Nirmal Bang that we got earlier. Sudeep Bandyopadhyay is joining in from IndiTrade Capital. Sudeep, good to have you on. You know, I remember our conversation on Sunday when we were discussing the fallout of this Hindenburg latest report. And I know that, I mean, a lot of people from the market, including the legal fraternity, they've said that it shouldn't be too much of an issue. But I don't know, I mean, looking at the selling today, do you think there is some sort of a residual impact that is still playing out? What would you attribute today's fall to?
No, Survi, I don't think this has got anything to do with Hindenburg report. I think, this is a little bit of nervousness at elevated levels, and that's what is happening. I think, market had to find some reason to correct. We have been going up relentlessly, and at some point of time, little bit of course correction, little bit of profit booking, consolidation, whatever name we wish to call it, was par for the course, and that's pretty much what is happening. I don't think we should be too perturbed with this. A bit of consolidation at elevated levels is warranted, and that's it happening. We've been saying this time correction is required. The valuations in many sectors and many corporates had reached levels which were not really sustainable based on the earnings. So a bit of catching up should happen, and probably we are seeing the beginning of that. I'm not saying markets will continue to correct. There is enough and more liquidity, which is ensuring that the market remains at elevated levels. Look at the IPOs which are coming. They are getting subscribed. Post-listing, they are also performing very well. Though the valuation-wise, some of them are looking stretched even now after listing, immediately after listing rather. So we have to be a little careful. We have to be a little stock specific, but the bias is positive, and we will continue to inch upwards with a lot of volatility.
Sudeep, many of the PSUs, despite decent numbers, have come in for selling pressure post the results. So even HUDCO today or IRFC, RVNL was a disappointing set of numbers last week. But even where the numbers were not so bad, they were actually pretty good. You've seen the stock selling. What's the view now towards some of these high-flying PSU stocks? Would you book profits?
Well, Anima, if you're talking about high-flying PSUs in the defense or railways, I think they were, valued to the perfection or even more than perfect, and some amount of correction was warranted. Some of them came with not so good set of numbers, and they corrected very, very sharply. And I think that's the right thing to have happened. Order inflow and valuation cannot be equated. And that's what was happening. With every fresh order inflow, the valuation was moving up. I think there is a huge difference between getting an order and executing it in a profitable and time-bound manner. The market will mature, and we are learning that very fast. As far as overall PSU space is concerned, we like the power space. I think there is a lot of positive things happening in that space. And the valuation there, in spite of it going up, still looking attractive. And NTPC, even at current level, does look attractive. Some of the power financials, some of the ancillary companies, transformer companies, they all look good, provided you have a 1 year plus time horizon.
All right. Hi, Sudeep. Good afternoon. Sudeep, you mentioned briefly about IPOs. What's your view on Ola Electric? A lot of doubts were there. I recall in the first minute the stock opened as flat as can be, but that was the only time. After that, it just accelerated. Next two sessions, 20% up. Today it was up 15%. It's come off the top. What's the view on the stock?
Well, Nigel, one thing has happened definitely. Unlike the couple of years back when a lot of IPOs came, new generation IPOs came, everybody is talking about either profitability or path to profitability. Even Ola is talking about path to profitability. They're talking about the huge battery factory they're putting up and how that will change the game, improve the margin and things like that. So I think the noise being made is absolutely right and market likes it. But having said that, I think it's still not proven, and we'll have to wait and watch how things pan out from here. I wouldn't be surprised if at some point of time we do see a lot of correction coming in Ola Electric. Not saying the company is bad, not saying the business is bad, but it's something which has to run its course. It's a long way to go before we can call it a successful company.
Okay, all right, Sudeep, we'll leave it on that note for today. Shorter conversation, but we will see you after the market close. Let's start recapping what's been a choppy day of trade, but one where the bias was very, very clearly negative. There's no taking away from that. And you have financials to blame for it. There's been weakness on the PSU side of the market, and metal stocks haven't had too much of a great showing today. And we're ending practically at the lowest point of the day, so that's never a very reassuring sign. Anyway, let's talk about the Nifty then and where the pressure came in from. BPCL is one stock that's down about 3.5%. Then the financials, as I've been saying, HDFC Bank, we've discussed it in great detail, but Shriram Finance, Bajaj Finance, quite a few of these other names, HDFC Life. So financials across the board, not just banking, not just this one stock. There was weakness all around. State Bank of India as well on the way down. Some of the auto stocks have seen profit taking. Case in point would be a Hero Moto, which has been down. Then I spoke about metals being weak, so Tata Steel was another name on the way down, and Hindalco, despite the numbers looking in line, as Nigel pointed out, stocks ending lower, about 1.5% on the low side. Very clear move to defensives in today's action. Titan, Apollo Hospitals, Dr. Reddy's, Tata Consumer, Britannia, Nestle, you get the drift. Basically, a rush to safety is what we saw today.
And Titan has been an underperformer. Year to date, Titan is down 8%. So today, some buying has gone over there. And Apollo Hospitals, remember, reports numbers. The street is expecting a pretty good quarter, 15% top line growth, some margin expansion. So Apollo Hospitals was one of the big movers. Outside of the index, the Midcap index was down 0.8%, negative advance decline ratio, one stock gaining for 3 in the red. Top losers include Aarti Industries. In fact, it took down some of the other chemical names like Naveen Fluorine also. So Aarti Industries was down close to about 15% Other than that, you had cuts coming through in a MapMy India, a rate gain, a Metro Brands. These were stocks which were under pressure. Indus Towers was down nearly 3%. On the way up, Senco deserves mention, Inox Wind. But not to forget, right, the two big listings of the day, FirstCry and Unicommerce.
Well, blockbuster listings, and I think it's 3 out of 3 in the last 5 sessions or so. The IPOs have listed in style. A few more names that did well from the broader markets. Sarda Energy, well, the street is hoping that SKS Power asset that was currently at the NCLT, they get the go-ahead out there because there were numerous bidders. So we wait by for confirmation on that, but the stock ended at the high point of the day with a gain of around 7.5%. Stovecraft as well, up 7.7%, one of the underperformers that have done well, post positive commentary, and Inox Wind as well, another one that's been rock solid. For the time being though, we'll wrap up on this edition of Closing Bell. You stay with us. Markets Forward comes up next.
Minorities and the allocation of 10% of parliamentary seats for minorities. Protests were also held in the US and the UK with over 300 Indian Americans and Bangladeshi origin Hindus gathering in Houston and a large crowd gathering outside the House of Parliament in London. While India is keeping a close vigil on the developments in the neighborhood, many Bangladeshi Hindus are trying to flee to India to escape the violence.
does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com.
There's a saying, Shubhaste Panthanu Santu. Oh traveler, when you are traveling, everything should go well. With beautiful roads from the Department of Transport, under Mr. Nitin Gadkari, we are all enjoying the great network of India. But there is a small problem in that. He himself said that the 40% of them, the pollution, the road, it comes from the road transportation. So this is a time for us. We have to think about pollution and how to reduce it. There are many ways to reduce, but I want to take one way that is known as the electrical vehicle, and we call it as EV in general. When you have electrical vehicle, things will be better, pollution will be reduced, green gas emission will be less, carbon dioxide will be less. It is fine. But to have that, we require following things. That is my suggestion. If we follow that, it will be really great. Number one, there is a new word by the name range anxiety. It has come into the picture. That means if you have electrical vehicle, you are always under anxiety when the battery charge will be over. So you have to always look at when I get a charging station. And when you get a charging station, following things, so you have to think there will be a big queue. Second one, in winter it doesn't charge very well because the battery cannot take it. Number three, how much time I get to charge my battery. To do all these things, we should have good electricity production. Normally, state produces electricity either by hydel or by thermal, maybe some people by nuclear. The kind of electricity we produce, it may be enough for our own state. In that case, where will I bring the extra electricity?
The market ends at the day's low with declining stocks far outnumbering the advances. Financials lead by heavyweights, HDFC Bank and ICICI Bank contributing the most to the Nifty's fall. Midcaps fall in line with frontline indices. Consumer stocks buck the trend.
MSCI's August review sees India's weight to the global standard index rise with 7 inclusions and 1 deletion. But what draws more attention is a weight up for HDFC Bank in 2 tranches and the embargo on Adani stocks being lifted.
Aarti Industries management says they will revisit their EBITDA guidance due to volatility in margin and pressure from China. The stock plummets 15%, while Hindalco reports a good performance with the aluminum and the copper EBITDA beating street estimates, while Hindustan Copper zooms on an impressive quarterly performance.
Hello and welcome to this edition of Markets Forward, your go-to show where we get you all the key data points and gear you up for the next trading session. I'm Raj D'Souza and joining me as always, Surbhi Upadhyay. Well, Surbhi, it was that sort of a day when I said this a couple of days ago, you got the color right. It was red on the screen today.
Well, I don't think anybody saw it coming because we were quite all right till about the middle of the session. But I think 12 o'clock onwards, things started changing. And then, well, lowest point of the day is where we closed.
Well, that's right. In the next 20 minutes or so, we'll get you all the big news, all the top developments, corporate voices as well, and all the top voices. For the time being, though, let's run you through today's market action. India, after a while, we underperformed because the Indian markets ended virtually at the low point of the day. You had a tinge of green on most Asian markets. Japanese index was shut yesterday. That reopened today. And that, played catch up. So that was up more than 3%. While the European markets as well, when we closed up, well, they as well were higher in trade. So India underperformed. That's because our biggest constituent, HDFC Bank, was dragging in today's trading session. More than 50% of Nifty's losses was on account of HDFC Bank. The NSCI rejig, well, it fell short of expectations on HDFC Bank. So initially, you expected the $3.5 billion to come in one tranche. Now it will be broken up into two tranches. And because of that, the street saw it as a bit of a disappointment. And that explains why HDFC Bank was under pressure. Crude as well as suddenly started popping up. Last week it was up 4%, overnight it was up close to 3%. Because of geopolitical issues, they are making traders a little bit nervous, and that's what's weighing on equity markets globally as well. What did well today was the pharma index. You had stocks like Strides, Auto Pharma, both of them were up and about in today's trading session. In a market that was wobbly, that was up between 3 to around 4.5%. And the breadth of the market as well. If you pull up the crisscross lines, at one point of time, we had more number of stocks that were advancing than declining. But as you see, by the time we wound up, 3 stocks were declining for 1 stock that was advancing. So a bit of a weak session, Surbhi, but we'll have to attribute it to the big boy. Your top performing stock or the top weighted stock on the index did perform. And that's what weighed on our indices.
No, absolutely. It started with that disappointment from HDFC Bank, but then gradually, the rest of the market kind of started caving in as well. So if you look at broadly in terms of the sectoral rollout, then it's the financial space that was weak, but not just this stock. That's the point that I'm making. A lot of the non-banks as well, stocks like Bajaj Finance, etc., Shriram Finance. So basically, the financials index itself was under pressure. The PSU side of the market was under pressure for the second day running, and that showed up in both PSU banks as well as the overall wider CPSE index. So again, selling on government-owned shares. That was the second sort of hallmark of today's trading action. And a rush towards safety. That's what really played out, because if you see the outliers, then there will be either from the pharma universe or from the FMCG space. So the consumer space, the FMCG index, that is what actually did relatively much better. Pharma kind of flattened out by the end, but the FMCG index was trying to hold on to positive for the better part of the session. Towards the end, the index has ended flat, but as you will see in just a bit from now, some of the stocks that are constituents of that index, they managed a little bit of green. Speaking of stocks, we'll get to that in just a bit. Here's the lineup on the show today. We'll start off with the top movers and shakers with Vivek. Some of the individual names on our radar this afternoon are Aarti Industries, Hindustan Copper and Hindalco. We will tell you all the reasons why these stocks were buzzing, why they were in focus, and then of course we get to all the key events to watch out tomorrow. But first up, let's take a look at the individual level stock action. We have Vivek with the latest. Vivek, over to you.
Well, thank you so much for that. It was a day when you actually had to struggle to find some green on the screen. Even in the broader end of the markets, the advanced decline ratio was very weak. Select stocks, like you mentioned, names from the healthcare space, names from the pharma space, and some consumer durables names actually saw some green. First stock on the radar, Fortis Healthcare up almost 3.5%, cooled off a little bit towards the end of the session. But as far as the mid-100 or the mid-cap index was concerned, it was the top gainer. Blue Star, another stock, very strong set of results, good commentary as well. And these particular stocks continue to outperform even in a weak market. Aurobindo Pharma, okay set of results, very strong commentary coming in from the management as far as the conference call is concerned. Again, it's among the top F&O gainers as well today. And Inox Wind, yesterday the stock hit the upper circuit. Today you actually saw some follow-on buying. This was on the back of an order cheer that the company actually got in. On the other hand, a whole host of negative stocks. The first stock that you mentioned, of course, was HDFC Bank. There will be an inflow on the back of MSCI-related flows, but the street was disappointed that it's now being divided into 2 tranches instead of one single tranche. On the back of that, stocks saw quite a bit of unwinding, over 3% down in today's session. Aarti Industries, the management actually withdrew the EBITDA guidance. The street didn't take to it kindly at all. Over 15% lower in this particular name. The entire metal pack today, all of them was under pressure. Tata Steel, SAIL, Vedanta, Hinzing, Nalco, all these stocks are ending in the red. A significant cut seen over there. Samvardhana Motherson, the company reported its results towards the later half of the trading session. Slightly muted set of numbers, muted commentary as well. Stock ended low by over 2.5%. And Zydus Life, now very interesting case over here. The company actually reported a good set of numbers. The stock also is an entrant into the MSCI index. But despite that, in the last 2 trading sessions, brokerages believe that valuations are quite high. Stock down almost 10% in the last 2 trading sessions.
Okay, all right, Vivek, thank you very much for that. Well, let's get to our guests then. We have Sudeep Bandyopadhyay joining in from IndiTrade Capital and Ruchit Jain of 5paisa.com on the technicals. Ruchit, let me start with you. What did you make of the decline and, what are the important levels to keep in mind looking at this 200-point drop today on the Nifty?
Hi, very good afternoon, Survi. Very good afternoon, Nigel. Well, last 1 week, we have witnessed some pullback move from the lower levels. But on last week's Monday, we witnessed that gap down opening where the index formed a support around 23,900. But in this pullback move, the markets have not seen a positive crossovers in the RSI. Secondly, the 50% retracement was placed in the range of 23,450. 24,450 to 24,500, and market was even not able to surpass that zone. So technically, the setup looks bearish since today. We have seen a resumption of the down move, and this down move has been led by a broader market correction, which we have seen in the later half today. Next support for the market would come around that swing low of 24,000, 23,900. And if the index is not able to manage to show any kind of pullback move from that support, then we could see even levels around 23,630, which are the 38.2% retracement of the entire rally that we have seen from elections day result flow. So setup looks bearish until we see the market surpassing the 23,450 mark again. I think we would continue to see some selling pressure. Even in derivative segment, if you look at the positioning, then neither FIS nor client section are forming much long positions. FIS long short ratio have reduced to around 51-52% now, and even client section have long short ratio to just 53%. So I think there is lack of buying interest, which is clearly seen. So until we see resistances getting surpassed, I think markets would continue to trade with a negative bias in the near term.
All right, near-term negative bias. Noted that point. Thanks a lot, Richard, for that. We're going to keep coming back to you. For the time being, let's turn our attention to stocks of the day. And first up is Aarti Industries. The stock got clonked today, was down close to around 15% in trade. This after the company decided to revisit their EBITDA guidance due to the ongoing market volatility. Sonal joins us to run us through all those details and what brokerages have to say. Sonal?
Thank you for that. Well, Aarti Industries was one of the first chemical companies to see a sequential recovery after months of losses and pressures that we have been seeing. So Street was of the view that maybe that recovery could continue and the company will be able to meet its targets. But now after their Q1 numbers, they're not very sure whether they'll be able to meet their EBITDA guidance of 1450 to 1700 crore rupees because of a number of reasons. One, they are seeing volatility in margins. Second, there are pricing pressures coming in from China. And that is something which has disappointed the Street. Volume growth, they expect it to continue at 20 to 30% in FY25, but the overall outlook remains a little vague. In terms of their discretionary segment, the dyes and pigments, that is seeing sequential recovery. Agrochemical demand would only come back in second half of FY25, and the Red Sea issues, they continue to impact exports, so they say that some segments could be impacted because of that in FY25. Their debt stands at 3,300 crore rupees. With some of the capex, they could see it rising to around 3,500 to 3,600 crore rupees. As I said, it has come in as a surprise for brokerages as well. For instance, Morgan Stanley has an equal weight rating. They say that companies expanding into newer portfolio, the energy applications, that is something which is leading to more volatility now versus what we've seen in the past. MK says that they have a buy rating, and yes, it is the fourth consecutive quarter of sequential improvement in EBITDA, but they are still a little disappointed with the guidance, and that's why they've cut the EPS estimates by 11 and 5% for the next 2 financial years. Nuvama, they've gone ahead, they've raised the target price, but that is largely because of rollover to Q1 of FY27. They maintain a buy rating. And in terms of Kotak, they say that the company has suspended their EBITDA guidance for FY25. Overall, they have an idea of 25 to 30% CAGR growth in next few years, but that also depends on what volatility we see, what is the pricing pressure, what happens in China. So that's why they are also not very sure of whether this growth will continue going forward.
All right, Sonal, thanks very much for that. Let's discuss this with Sudeep Bandopadhyay. Sudeep, like Sonal pointed out, I think the sharp reaction also stemmed from the fact that the market was hoping that the worst is perhaps over for a lot of these large chemical companies, but the commentary was absolutely contrary to that. What do you make of the Aarti Industries sort of impact that we saw? Your own thoughts on the sector and on this stock in particular?
So, in fact, you're absolutely right. Even many of us were hoping and penciling in the fact that the specialty chemicals industry, I think the worst is over. Even Aarti Industries, I think quarter on quarter, they have been improving their performance for the last 2 quarters. I mean, it's still not anything great, but this quarter was good. The results were good. I think, all around improvement we had seen. But of course, the commentary very clearly points out to the fact that the management is not confident of sustaining this growth momentum. There are still a lot of uncertainties. That's what they're trying to point out. I think, knowing Aarti Industries management, they're conservative and they're trying to kind of bring that conservatism into their future forecast. And of course, that did spook the market in a big way, and the stock did fall quite a bit. But having said that, at some level, we still believe that this sector is coming out of a very bad phase, and things will continue to improve here on. Yeah, there may be a little bit of turbulence in one particular quarter here and there, but by and large, the worst is definitely over for this sector, and things will improve from here on as well. I'm not sure whether the next quarter will be great or not, but the fact is, if you take a 1 year plus kind of a time horizon and that kind of a view, this sector is definitely going to improve from here on as well.
Okay, all right, Sudeep, got that. Well, let's focus then on the metal space, and I'll want your thoughts on two stocks, Hindalco as well as Hindustan Copper. Hindalco is a constituent of the Nifty, so let's run you through the numbers. The numbers look good, actually. Standalone numbers were up by close to 11%. The operating profit was up close to around 75%. And the key reason out there is that the power and fuel cost has come in lower. We know globally that coal prices have dipped. The e-auction prices as well are lower, and maybe some part of their coal coming from captive sources as well. So you put all that together, the power and fuel cost was lower. Profit number jumped up on the back of a better than expected operational performance. But for Hindalco, as we always say, the segmental performance is important because we're looking at the India business. We already have Novelis's numbers with us. So the aluminium business first out there, the business did much better than what we were working with. It clocked nearly around 3,500 crores if you eliminate some kind of, inter-segment revenues over there. But 3,500, 3,600 rupees of an EBITDA is much better than we are working with. If you calculate the EBITDA per ton, it came at around $1,270 per ton. That's almost up 80% on a year-on-year basis and up close to around $300 on a quarter-to-quarter basis. So very good going on the aluminium business. Moving to the copper business, we have seen that they have been in that vicinity of around 500 to 600 crores for the last few quarters of EBITDA. This time around, it is even better. VAP as a percentage of their mix has gone up. That's clearly contributing because 800 crores in a single quarter, no one on the street was working with that. Both those two segments go down as a bit of a beat. On the net debt number, well, it's moved up a little bit. They have capex that's underway. The working capital of Novelis as well got stretched. So that was more or less on anticipated lines. Hindalco goes down as a beat. The stock recovered a little bit from the low point of the day. But because the market sentiment was weak, that's why it ended in the red. Moving to the other one, Hindustan Copper. That's come off from levels of around 400 rupees to around 300 rupees. And these numbers on a year-on-year basis look brilliant. 33% growth on the top line, EBITDA number doubling. The margins as well on a sequential basis were in that vicinity of around 38 to 39%. But on a year-on-year basis, it's up from 25% all the way to around 38%. The key reason is other expenditure as a percentage of the mix, well, it's come down. It's come down to around 38% from around 47%. And it's up only around 8% when you have a top line growth of 33%. So operating leverage played out there. Profit number as well looked quite good. The only problem for commodity-related stocks is quarter one, however good it looked, quarter two is going to be softer because the global environment has changed, demand has weakened, and pricing as well has weakened. So Hindustan Copper, one more point is that the stock trades at around 100 times its trailing earnings. So earnings has to really pick up big time from here to make that stock on the valuation front give you any kind of comfort. Sudeep, what are you making of the metal stocks? Anything you like in them? Some of them reporting good numbers, some not too good. But the bottom line is, the second quarter is going to be much weaker than the first quarter. Your take?
No, absolutely right. I think what's happening globally definitely is a bit of a concern for the the metal companies, and Q2 will definitely be softer. But I think one thing we cannot take away the fact is that, Nigel, I think by and large, if you take a slightly longer term view, I think metals are in for good time for considerable period of time. It's not a question of 1 quarter, 2 quarter, but if you take a 7-8 quarters, I think metals will do well. Yes, we have some question marks on China recovery and China metal demand and things like that. But by and large, metals should start doing well because destocking at global level had happened and fresh stocks are being built up. We have seen growth in US kind of stable. So all put together, I think it should continue to do well. As far as specific stocks are concerned, I of course like Vedanta with its presence across the metal spectrum and the demerger which is happening. The valuation wise, I think it's still attractive if somebody takes a 1 year kind of time horizon. Hindalco, of course, with the kind of numbers they have posted and the raw material cost, particularly the fuel cost coming down, I think Hindalco also does look good. Hind Copper, valuation wise, I think it's a bit of a stretch at current levels.
Okay, fair enough. So that's a take on some of the metal stocks where we've seen earnings over the last 24 hours. Ruchir, just to wrap things up, I mean, any other trading ideas considering the market has gone into a bit of a downward slump, at least today? Any ideas either on the long side or the short side for tomorrow, day after?
So I think on the long side, pharma is one space which could continue to do well. We have seen that recently when the markets have corrected from its all-time highs, pharma is the only sector, and even some FMCG names where price-wise corrections have not been seen. So I think that strength could continue till this uncertainty is there. Sun Pharma within the space looks quite positive. The stock is holding quite strong since last few days. I think that momentum could continue. So if one is looking from a near-term perspective, one can go long on Sun Pharma with stock below 1680 for potential targets around 1840.
Okay. All right, gentlemen, we'll leave it on that note for today. Thank you very much for joining in. Have to take a very quick break, but we'll come back on the other side with all the top corporate voices that we picked up during the course of the day and the events to watch tomorrow.
Charging points, but if I don't have electricity, they are null and void. So this is the main concern, the production and distribution of electricity for the charging points for the level 2 to reduce the range anxiety. Second thing, like heart to the body, for electrical vehicle, the heart is a battery. There should be a good BMS, that is battery management system, and there should be a cell which also should be a very good quality. Then only the batteries can work very well and efficiently. Recently in Rajasthan, we have found out there is a new, the lithium is available. So it will be a great idea if in India we can manufacture our own batteries, and that makes us independent, self-dependent, not dependent like oil. Then we can produce a better design batteries.
Welcome back. As always, let's get you all the top corporate voices that joined us during the course of the day. First up, Senco Gold. The management says that the customs duty cut is a great move by the government, and the impact on the inventory valuation due to this could be around 50 to around 60 crore rupees. He adds that the boost in volumes will offset the impact of inventory loss. Moving on to sugar companies then. Sugar stocks were in focus. They were buzzing in trade on anticipation of an ethanol price hike as the government looks to take ethanol blending in petrol up to 20% by FY26. We spoke to the management of Balrampur Chini, and they say that the sugar industry can supply up to 50 to 55% of the country's blending requirement. The company's CFO also said that inventory levels look fairly comfortable, which is why the industry is hoping for any kind of easing of sugar export curbs in the new sugar year, which will commence from October.
All right, next up, housing and urban infra major HUDCO reported a strong performance in the first quarter. The company expects its loan book to grow at a yearly run rate of 25% over the next 2 years, with the AUM hitting the 1.2 lakh crore rupee mark by the end of the current financial year, that's FY25. HUDCO's CMD Sanjay Kulshrestha says that the cost of funds remains in check, and the company will maintain net interest margins between 3.3 to 3.5% this fiscal. On to the two blockbuster listings of the day. Brainbee Solutions, or First Cry as it's better known, had a stellar debut on the bourses. The company listed at a premium of over 40% to the issue price. Earlier in the day, we caught up with First Cry's MD and CEO, Supam Maheshwari. He told us that the company will outpace industry growth of 20 to 25%.
If you look at our past record, we have grown at a CAGR of 20% plus in our India multi-channel, and we should continue to demonstrate going forward, given the industry itself is growing at that. Our international business has been able to improve our profile in terms of the negative EBITDA, because just the journey that we have started 2 years back.